Good morning, friends, traders, and fellow Web 2.0 enthusiasts. Welcome to TopstepTV, the biggest and most watched futures trading stream you'll find. As Eddie would say, congratulations, you've made it to the right place at the right time. I am JD, filling in for the boys this morning. You might know me as the voice behind the guy on group coaching. Rumor has it that Eddie and Hoag got into a cheeseburger eating contest at the Billy Goat after the Bulls game last night. And they needed a little time to recover. Our thoughts and prayers go out to everyone who had to witness that spectacle, of course. I'm joking. Eddie and Hoag are doing just fine. They'll be with us a little later on this morning. They did indeed go to the Bulls game last night, and I believe we have some pictures to share later on. We're joined this morning by Andrew Diaz. You know him as the Stock Market Wolf. Andrew is a 15-year veteran, 15-year trading veteran. He provides trading courses, boot camps, mentorship to aspiring traders. He also offers daily market commentary to over 19,000 subscribers on his YouTube channel, the Stock Market Wolf Trading. Go check it out. Good morning, Andrew. How are you doing today?
Good, man. How about yourself? Thanks for having me.
Excellent. Great to have you here. We're all excited to have you here. This is a big deal for us. Andrew's going to be providing some market analysis in just a few minutes, but let's take a look at what's going on today. It is Wednesday, January 31st, the last day of the month, and there is a lot going on. It's Fed Day. Today is day 2 of the Fed's scheduled 2-day policy meeting. Pardon me again. And we're expecting a rate decision announcement at 1 o'clock Central Time, followed by the Fed Chair press conference at 1:30 Central Time. No change is expected on rates today, so the focus will be on rhetoric and the future for rate cuts. The markets will be moving this afternoon, so stay on your toes. Don't worry, though. We do have Rips joining later this afternoon. He's coming back on to trade through it with you. In the earnings realm, Alphabet and Microsoft reported earnings after the close yesterday. Both companies reported largely positive results, but hinted at a rise in AI spending this year, which the markets really didn't take too kindly overnight. Right now, we have the S&P futures down about 0.56%, NASDAQ down 1.1%, and the Dow is hanging in there, up 0.09%, just 35 points for Dow futures. As far as the economic calendar goes, already out this morning, MBA mortgage applications took a hit last week, coming in at down minus 7.2% compared to up 3.7% last week. The ADP employment report came in at 107K month over month versus 164,000 previous. And the employment cost index came in at 0.9% quarter over quarter and 4.2% year over year. Coming out later this morning, we have Chicago PMI, 8:45 Central Time, EIA Petroleum Status Report at 9:30 Central Time, and then again, FOMC announcement at 1 o'clock Central Time, followed by the Fed Chair press conference at 1:30. Andrew, what do you got for us? We're going to be talking ES and NQ this morning. I'm going to shift it right over to you.
Sure. Am I able to share my screen?
Yep, and James has your charts fired up, ready to go. Let's get right into it.
All right, cool. All right, so what I like to do every single morning when I'm about to trade, for those that don't know me, is I do what's called a top-down analysis, right? So I always start on the biggest time frame. So let's just go on NQ. I'll go back to the 3-year chart and recognize if there's any resistance or supports that I need to draw in, right? And I'm just focused on price. Then from there, I go down to the 1-year chart and kind of see if there's any levels that may be impactful for today, right? And then kind of go into the month. And on the month, we could see that 17,600 level has played a role multiple times. And then as well on the month, we have this level here at around 17,438. Okay, this is for NQ. So then when I go to my 5-day, 5-minute chart, I can see I'm kind of in this little pocket, right? I have the low that we have right here at around 17,340, and we have our resistance here at 17,440. So we're kind of right in the middle. Obviously, right now, it's looking like we have a lot of room to come down to the support level. But because we have PMI that's going to happen 15 minutes into the market open today, I want to wait and see if I'm going to be now, there's two types of personalities, right? There's a risky personality and there's a conservative personality. If you're a risky trader and you know what you're doing, you may find a little pocket here where you could take some profit, get into a trade, but understand once news hits, it could move the stock in a completely different direction, right? So what was puts all of a sudden becomes calls, and you end up getting stopped out. So if you're more conservative, you may want to wait till that PMI news happens at around 9:45 Eastern time today. But so here's my thought process: if we can go underneath the 17,380, I have a nice about 40-point move down here to the support level. So on NQ, every point is $20. Correct me if I'm wrong, right? So then if I have one contract, then that's X amount of money, right? On the flip side, for calls, because we have all of this resistance within this little zone, I personally like to get the breakout. So I would be looking for a break of 17,440 for the move for the long. So underneath 17,380 for the short and above 17,440 for the long. That's my initial hypothesis of what I'm looking for on the day. And then I just adjust accordingly as the market goes on. So that's for NQ. For ES, kind of very similar thing. We're right here in this little zone. Now, the one thing that is drawing my attention in comparison to the NQ trade I was just looking at is I have this red line. This red line is based off of a 3-year chart or a 1-year chart of data showing me that this level has been a key level before. So I want to be very mindful of that when I get close to resistance. Now, opposite of NQ, we are already at support. So I'm starting to think we have this room here to go back towards the upside. So I'm watching the support here at around 49.21. If we can hold that support and start to break, I use indicators and levels to help me get into my trade. So if we start to break above 49.28, I would look for the long into this resistance level at 49.34. Otherwise, I'm looking for the breakdown here of 49.21, 49.20 to continue on for the short. And that's my breakdown for the morning. What up, Jay?
Excellent. Thank you, Andrew.
Sure.
Well, let's for everybody that doesn't know Andrew, let's run through his bio real quick. Andrew has 15 years of trading experience. He had an interest in trading and investing starting at a young age. You want to tell us a little bit about your trading journey before we keep moving on into the fast markets? How'd you
Yeah.
get into trading? What's your backstory?
Yes. Really quickly, I started this whole journey in 2009. I was a single dad at the age of 19. The day that completely changed my life is the day that I get fired from my job at the mall, working for $7.25 an hour. I have to go and buy diapers. My car doesn't go through. When I get home, my mom's like, "Where's the diapers?" And I was like, "My car didn't go through." She's like, "Well, good thing you got a job." And I was like, "I just got fired." So it was like the lowest point in my entire life. And that weekend, I've always been a book nerd. I went into the bookstore trying to just find any book that will help me. And lo and behold, here is this book by Robert Kiyosaki called Rich Dad, Poor Dad. And here I am, a poor dad trying to be a rich dad. And the first title, the first chapter says, "The rich don't work for money, they have money work for them." And I was just completely blown away by that concept because I never heard it. In the book, I learned three main things: the importance of business, real estate, and investing. So naturally, what I started to do, I got another job. I put myself through school. I was doing side hustles, and my days would consist of getting up at 6 in the morning to go to school by 7, to be done by 3, to then go to work from 5 to 10, to then come home and study from like 11 to like a little bit past midnight, and then I would read these self-help books till 2 in the morning. So I would get like 3 to 4 hours of sleep every day for like 4 years after that. Um, I have to fast forward. I don't want to do my whole story because that'll take too long. But fast forward today, I have 2 master's degrees. I have a Master of Science in Biotechnology with an emphasis in biomedical tissue engineering. I have an MBA in Finance and Management. So I have 2 masters, and then my undergrad was in bio. Uh, I was able to get a job at Amgen in 2014, and I started off as a temp, and that was kind of a funny story how I got that. We used to have these recruiters that would come to the school, and I barely graduated my undergrad with a C minus, but I would always put a face to the name whenever it was somebody that I met. And so I got 2 interviews. I bombed both. I went back to my alma mater to teach chemistry, and I had did interviews and I never heard back. On the first day of school, I get a call from Amgen that I got the job that I applied that I interviewed 3 weeks prior. So on the first day of school, I put my 2 weeks in, and the rest was history. I used that money that I was making at Amgen, and I used my opportunity to put myself through school. And the money that I was making, because I had been living off of $5,000 a year, my starting salary was like 65K the first year. Second year was like 75K. Third year after that was 85. And then when I ultimately went to manager, it was like 125, like in 2018, 2019. But the first 3 years, I had put all of that money into the market, because this entire time, while doing the master's program, while doing my undergrad, while working, I was reading all these self-help books, trading, anything related to trading, investing, etc. So the first 3 years, I had invested my money. By the end of 2016, by the time I turned 26, I made my first $1 million. And then I read this book by Grant Cardone called The 10X Rule. And in that book, I learned, hey, you know what? I could probably 10X this. How can I figure that out? So then I started day trading to see how that worked out. Just like everyone else, I blew an account. So I took a small piece of that million that I had built up. I had invested heavy, and I still have them. I have Tesla, Amazon, Apple, Netflix, Google, Microsoft, Nvidia, and I have Facebook, and I have these since like 2009 for a lot of them. And then obviously in 2014, 2015, 2016, I was able to put a bigger bulk into them, as well as a small cap biotechs, because that was my background. Um, so I blew that day trading account, but before I blew it, there was like this roller coaster feel of, hey, in 10 minutes sometimes, 30 minutes sometimes, I can make $400 to $4,000, and then there would be days I would lose that amount, or sometimes even more. And so I really broke it down afterwards, like a science experiment of like, okay, how can I build consistency, and what are the variables and things that I need to do and put in place so that I can have a consistent strategy. And then when I first started trading, it was trading shares, and I would do what is called a 2-to-1 ratio. So I would look for biotechs or any type of small cap stock between $1 to $5, and mainly try to find that dollar stock. And I would look to get in at $1, sell at $1.10, which would be 10%, and I would set my stop at 95 cents. And then I just let math do the work for me, and I use my strategies to get in. And that really started to take off. And then it wasn't until I started to learn how to trim and how to let runners run, where then it really started to play out. And then I started to do options. I recently did options in 2022. And then that took off on its own. And now we have started to add futures to what we teach our students. So that's a little
Well,
quick rundown of.
that's quite a story. That's very impressive. I'm also looking at your bio, and it says outside of trading, you help train police officers. Is that correct? You help SWAT
Yeah,
officers and firearms training.
yeah,
How
yeah.
did that happen?
So that happened in 2019. We bought our home, which was like a big deal for us. We had condos, and we had another couple of rentals that we ended up having, but it was really big for us to actually buy our first home. Me, my wife, and now we have 3 kids now. Um, my oldest is her stepson, and when we got the house, I'm like a paranoid person. I always think worst case. So we got the alarm system. Then I was thinking, oh shit, like what if somebody breaks in? What's gonna happen then? So then we got a canine dog. So I have a big freaking German Shepherd canine dog, and I was like, oh shit, well what if someone shoots the dog? So then I got guns, and then I thought again, oh shit, like what if somebody also has a gun? Like what's gonna separate me between that person? So I started training, and I met this guy on Instagram called Knockout Lights. His name's Mike Levy. He's my best friend, man. And initially, he didn't want to train me, and because he trained officers, so he connected me with his best friend, and we started training, and I got hooked. And my first year of doing it, I had spent about like 600 hours of formal training, going to different people from across the states to learn firearms training on pistol, rifle, sniper rifle, and this it's actually called the long rifle, and got addicted. And then little by little, I worked my way into Mike's team. First, starting off like a RSO, which is a range safety officer, and then got into helping to instruct every once in a while. And then I actually got my formal, what's called a post LE certification. So I have a post LE certification for pistol, red dot, and for rifle. And then soon is going to be for the long rifle. So when what we do is Mike and his friend Dave, they put on post LE instructor courses. So you train the range staff for different departments, and they'll get 20 to 30 officers that come out per session, and it's normally two times per month for a whole week. And one week will be pistol, the other week would be rifle. And so I'm part of the range staff, and I go and I help assist, provide instruction and training. And then some of them, they like how I teach, so then I'll do like one-on-ones. So yeah, it became this whole thing. One of the things obviously about me is like when I like put my mind to something that I really really like and enjoy, um, I just go all in. It's either all in or none.
Yeah, I could tell 100% there. A chemistry professor, professional
Yeah.
trader, firearm safety instructor. That's
Yeah.
quite a range right there for sure. Let's talk about your analysis a little bit. I see you
Yep.
when you're when you're picking out trades, you're looking at indicators levels. How do you choose your levels? What are you looking at when you're looking for zones or target
Yeah.
areas?
So what I like to look at is kind of going back to like ESLs. I look for multiple touches, right? So I keep my trading very simple, and it's always funny. For those that are on here that don't know me, I'm gonna sound like a total degenerate because I keep things so freaking simple. But simple to me has I've had this same strategy throughout all the different things that I've done, whether it's small caps, options, futures, it's the same thing. So what I like to do is again go top down. So I'll start on a year, and then what I like to see is okay, where do we have a zone where we at least have three touches where it's been a point of a pivot. It's either been a resistance level or it's been a support level or both, right? And once I get a good feel for that, then I'll draw a line, and then I'll go from the year, then I'll go to the month chart, which for me is the 20-day 1 hour chart. So then I'll go to the 20-day 1 hour chart. I'll look at that and I'll see, okay, on the month, is there anything close to this price where I need to maybe point out? And we can see kind of here, right, where this 49.20 is coming in, is we had some resistance on that on Friday of last week, and then if we look on Thursday of last week, we had some respect to that 49.20 level. So I just drew a line. It doesn't need to be perfect, just to give me a little bit of a reference, right? And then same thing here on the peaks. We have resistance here, we drop, we touch here, we drop, and then when we finally broke, it's held support, and then currently right now it's resistance again. So I want these levels drawn in to help provide a guide. And then once I do that, then I go to the 5-day 5-minute chart, and I see, okay, I'm in this little pocket. Obviously anything in here is really choppy, and I don't like trading level to level. So I'm not going to go and buy and go long here because it may continue down. And then vice versa, I'm not going to buy at the top because it may come right back down. So I like to then incorporate indicators to help me make my decision making, where I kind of use them as check marks, where it's like, okay, I'm at support. That's check mark number one, maybe to go long. But I'm underneath my 9 exponential moving average. Okay, so it's not time for me to go long yet. And then because these are in close proximity to each other, the 9, the 20, and my 50 EMA, because they're in close proximity, I will be more likely to wait till it breaks that 50 EMA at the bare minimum to maybe start to consider going on a long. And then on a short, I'm not looking to take a short right now because I'm close to a support level. And then I ask myself the question, okay, if I get in here at 49.24, which is in 8 minutes, and let's just say it stays hovering around here, do I have enough room to my next area of resistance, in this case, my support level, because I'll be going for the short? Is that enough? Is that risk worth the squeeze, right? And that's a question that's different for everybody. For me, I like making big percent returns. And at bare minimum, I'm looking for like a 15% return. Obviously, for NQ, or this is ES, every dollar is going to be $50, right? So then let's just do 49.23 because now we're at 49.23. $2, that's $100 for one contract. If I bought 10 contracts, right, maybe that'll be worth it. But do I really want to take that risk on this particular trade? Probably not. Whereas NQ the other day, when I traded NQ, which I'm still holding, when I traded NQ, yesterday, I had a level on my watch list for a breakdown underneath 17,450. So once we got that breakdown, the entire day it stayed underneath that 9 EMA. This ended up being like almost 100 points. And so on one contract, it was like $2,000. I had 10 of them. So I sold that around in this little zone here. Today, it looks like it's going to be the same thing. I like the NQ play today more than the ES play. But again, I'll kind of wait and see what happens at the market open. But that's kind of how I use my strategy. I use indicators with levels. I try to keep it really simple. I hang on to my trades so long as they stay above or below those particular indicators. So if I'm going long, as long as it stays above that 9 and 20 EMA, I hang on to the trade. I'll trim on the way up. If it's a put trade, as long as it stays underneath that 9 and 20 EMA, I'll hang on to the trade. And it's helped me so far. I put up crazy numbers. To some people it seems like super unrealistic, but every single trade I've taken always has the proof at the very end. So
Awesome. Thank you so much for that breakdown. Stick around, everybody. Jay Cohen just stepped in. I didn't hear the doorbell go off. Sorry, everyone. Good morning, Jay. How are you? Jay works closely with Andrew, part of a one-on-one mentorship program, if I'm not mistaken.
Yep.
Andrew and Jay are both going to stick around for fast markets. So we got that breakdown of Andrew's trading style. We're going to put it into practice in just a few minutes. And remember, everyone, our tip of the week this week, keep your emotions in check. James, throw that up for me, will you? Emotional control is crucial for successful trading. Keep those emotions in check. Coming up later today, right after this, Fast Markets with Dolby, MP, StockMarketWolf, and Jay. Deanna is going to join us also. That's going to be an exciting morning of trading. After that, Hoag is back for the shoulder tap with Mick. Power Players with Andre, Eddie, and our friend True is going to be in. Top Quiz with Jack and Bonnie. Group coaching with Hoag and myself behind the screen with what Jack P refers to as my musical Chicago accent. I hope you're all looking forward to that. Back to the Futures, Rips is joining us to trade through the FOMC report coming out at 1 o'clock Central Time, followed by the Fed Chair press conference at 1:30 Central Time. Markets are going to be moving. Rips is going to trade us through it. After that, Power Hour with Andre, Dolby Time, and Isaac Suffren, who is also one of Andrew's buddies, right? You and Isaac have a little history from what I hear. Awesome. Yep. Yeah. He's going to be here with us today also. Stick around. Awesome. We got a lot of we got a lot of action-packed day here at TopstepTV. Stick around. Let's hit it with Fast Markets. We're going to take a short break. We'll be right back.
everybody, and welcome to Fast Markets. We got StockMarketWolf, we got Andrew, J, D, and MP, and probably gonna be placing some trades today. How are we all feeling?
Pretty damn
Yeah,
good.
great.
I'm really excited. We're calling. I'm wearing the hoodie crew, but it's actually the Wolf Pack today. So we're gonna call it a Wolf Pack takeover. Why not? Right on.
like that.
What's up, Andrew? Andrew
What's
the
going on,
Wolf
man?
is here, and his very good trading buddy and best friend is Jake Cohen is here. The always great and fan favorite Deanna is here. What's up, Deanna? And we
What's up,
have
MP?
the market. Yeah, we have the market coming up. So here we go.
Yep. Seconds.
Hey, Wolf. I was listening to you earlier, and hell
Yeah.
of a story, hell of a backstory. We might have to stay high level with it later if anybody missed
Yeah,
the morning, but hell of a hardworking backstory. So
We're off.
Thanks, man.
here's our open. So what are we looking at right now, Deanna? You have a position on or no, and then Jay and Wolf. What do you guys think? So Deanna, why don't you go first?
Okay, so I do have a short crude oil trade on, which is more of a swing type of trade. I'm basing it on something that actually started last night when Dobie and Robert were on with Marcus talking with the segment. So yeah, I'm just looking for a continuation of down move. We have 4 days of overlapping value areas, which is basically the distribution curve from previous sessions. So whenever that happens, it means that they are waiting for something. We know there's FOMC, that we have NFP later on in the week on Friday, but I am banking on that on the supply rejection that we have on the daily chart. So there's a potential for this formation to turn into a drop-based drop. So that's what I'm looking at. I'm at a 1 hour supply, and I'm waiting for the market to potentially break out of the value area because we are inside value from yesterday. If that doesn't happen, my trade will be invalidated and I will close it. If it does happen, I'm looking for some follow through. And so it should be quite exciting. It is the inventories today on crude oil as well. So that's bound to be exciting or not.
Yep.
And with that,
Or
that's
not.
pretty much or not. Or a teacup. So we'll see. We'll see what happens. It's been an interesting week for sure. Testing my patience massively. That's basically my view. I'm a little bit short biased because of what we have in the large time frames. Interesting day. Let's see what happens.
All right, thanks, Deanna. Hey, the pack, the Wolf Pack. What do you two when you guys get started? I know you gave a bit of a pre-open analysis. We want to go back over that, just high level, Wolf, and then let us know any levels you're looking at. And then Jay, I guess it's just like how do you and Jay work together? A big thing, guys, right now today is to understand how trading buddies work in the high caliber player that Stock Market Wolf is. The Wolf. In this business and growing in this business, pretty damn transparent in this business, and his story is one that is inspiring. Just the hard work to get to where he is after a little bit of a turbulence out of the gate, but now he's here with us and he's in the market. Now he's a big futures trader. I guess you're growing into a big futures trader since you've always been an
Growing
option
into it, man.
growing
Yeah,
into
option.
yeah.
But no, so Jay could probably tell the story better. But Jay came to me when Jay was down like 50 racks. And fast forward, he started with me with $6,500, and within 12 months, Jay, he was able to make $250,000.
Oh wow, that's bananas. That's a turnaround. So okay, how do you guys? While everybody's listening right now, we can get into that story a bit more in detail. But how are you guys right now? If you were just working together, just let's be a little fly on the wall with you guys. How you guys working together? Show us how that kind of works right now. While we're all teaming up with you on what you're looking at. You guys were looking at the NASDAQ or S&P as far as future
So
side?
right now, I'm on my screen. I don't know if it's still shareable, but normally what we
we'll
do,
jump over.
We'll have like 1,000 or 1,400 people that would join the live stream, and we look primarily at, obviously we trade options, but on my screen, I normally have about 6 to 8 different tickers on there: Tesla, Amazon, Microsoft, Nvidia, etc. Because those are components of the S&P, right? So if those are moving, then the S&P is going to move a certain way, which also then means ES is going to move a certain way, because they're the same chart. So I like looking at confluences to kind of help drive what I'm initially thinking. And the hypothesis right now is obviously it looks like it's going to go for a long. However, we know in about 10 minutes, we're going to have that PMI data that comes out. So that's either going to help continue to support the long or not, right? So we've already would have gone through the news, everything, and now it's just a matter of waiting for the right time. I personally like to wait till the close of the first candle to start to help give me direction, and which we're about to get here in 10 seconds. And once we get that close of the first candle, then from there I can start to gauge how I'm going to respond. Now, what I'm noticing right here is we just wicked all the way up to 49.31, and we're kind of staying within this little chop zone. Very much to, and forgive me, it was Danielle or Diana?
Deanna.
Deanna.
Yeah.
You just said
Yeah.
earlier she got chopped out, right? So one of the most important things as a trader to not get chopped out is to avoid the chop zone, right? So I see this complete zone here between 49.30 and 49.24 that's very choppy, and I don't want to be involved in this little area. So what we will be telling our members is like, oh, stay patient, just wait. Because once you get that breakout later, there could always be, that 5 to 10 to maybe even 50-point move, where I rather take that move than just settle for a 1 to 2-point move.
And typically,
Okay,
whenever he's
Go ahead, Jay.
typically
Jay.
whenever he's doing that, I'm kind of going through the thought process. I would consider myself I'm just over a year and a half of trading experience, about 3 to 4 years of being a trader. So I'm kind of talking through the mindset of what I'm thinking in the trades, what I kind of see, and then going through some of the emotional sides of it from the perspective of someone who's a little bit newer. Andrew can go numb because one, his account kind of allows him to do that. And then number two, he has so many years of experience. So he's seen all this before. So where me, I'm a little bit, I'm still a little bit raw. So I'm kind of talking to members through how I'm feeling and what's made me more profitable when I decide to get in a trade or get out of a trade. So that's kind of what we're talking to. And then typically I'm usually the one that's talking about confluences.
Okay, so right now, what do you guys levels again? Just so we can repeat those that you're looking to actually participate in the and you were talking about the S&P, the Nasdaq. Both of them.
So for ES right now, there's like a support around like 49.22, 49.21. So if I'm going to go for a short, I want that to break first before I take my short position. I don't like to trade reversals, meaning like I'm not trying to buy a put trade right at the top. I like it to already start to be working, and I may miss out on 15, 30, or sometimes 40%, but I'm taking a confident 20 to 30% potential win, right? So I don't care about missing on profit so long as it follows within my strategy. What I look for my strategy is levels in conjunction with indicators. So I like using the 9, 20, and 50. And so it's almost like a check mark where it's like, okay, we're below support. However, we're still above the 9, we're still above the 20, we're still above the 50. So it may not be the right trade. The same thing for the call trade. We could be at a support and we're going up, we're above the 9, we're above the 20, we go above the 50. That may be the time to get in. But then I would ask myself the question, where's my next level? So right now I have a support level at 49.21 that I want to break down first before I take a put trade. For the call trade, or to go for the long, I would be kind of happy getting out of this little chop area of around 49.32, but I'm going to give myself a little bit more room and call it 49.34. So once we get that break of 49.34, I would feel more comfortable taking a long. So anything in between here, I'm not interested. Just like earlier, we had a green candle that closed, and the following subsequent candle retested the wick, retested the high of that previous candle, and came right back down. So a lot of traders make this mistake and they just see green and they go for a long. not realizing, hey, we're in a chop zone, right? And some people would have got chopped out right now. So some people probably would have got here at 49.30 thinking it's going to go long, and then they just got their ass handed to them because now it's at 49.25, right? So
Okay.
I try to stay patient. So that's for ES. And then for NQ, it's the same thing. For NQ, the levels actually are a little bit better, and we can see them a little bit more clear because we don't have as much chop on ES. But if we're looking at NQ, I'm looking for the break of 17,440. That's our pre-market resistance that we have. And then for the put trade, I'm looking for a break underneath 17,340. So if we can get that along with the right setup, then I'll look to take a trade. And with futures,
We're
it's a little bit
basically
different. Go ahead.
Yeah. So basically, right now we call it fiddling in the middle. So you're not fiddling in this middle, and you got the 440s. You break that, guys. He's talking about a call, so you're looking for an upside move on that.
Yeah.
That's along in the outright futures world. Trading outright futures. Outright means you're just going one direction. Outright. And then you're looking for, but now what for on the 340 level of the if it breaks to the downside. Now, quick question: are you trading futures right now, or are you more primarily focused on putting some options on in your trip queues or whatever you're doing it in?
Typically for me, like on a Monday through Thursday, I'll trade options. But today, because I'm on here, I'm mainly just focusing on futures. Like I said, normally I'll have like 8 charts up, so then I could kind of see, and I call it like a bird's eye view, where I could kind of just quickly assess from the chart what's going on, and then on my main screen, I'll have my actual trading execution with just the one ticker that I'm primarily focusing on.
Okay.
So that's kind of how I do it. But today I'm just focusing mainly on NQ and ES, so futures.
NQ. All right. Anybody have questions in the chat? Fire those off. If we see something that's relevant, we're going to bring it in.
How many people we got in chat?
We got 4,200 right now tuning in. Yeah, there we go. So again, we have Wolf on here. Hey, where's John, Hoag, and Eddie? And John and Hoag and Eddie are John and Hoag are the same person. So where's Hoag and Eddie? Where's Andre? Those guys went to the Bulls game last night. So I'm assuming, well, maybe John broke his drinking thing. We're gonna have to drill him tomorrow and seeing if he had a drink in his hand, because I have witnesses that could do this. John took the whole month off, and we have $1,000 bet which ends tonight at midnight. That he would stay dry all January.
Question about the Hoag not drinking. The Hoag sounds like a deity. The Hoag. If he was drinking after 7 p.m. my time, technically, so your time, technically that's like London GMT midnight, right?
It would work, Deanna, because there's no central time. It was just for the month of January. So in a court of law, that could probably hold up.
So you would accept if he had a drink after 7 p.m.?
I would accept that little variance window.
Okay,
I'm okay.
Yeah.
I'm okay with that.
Fair enough.
Just the 31 days alone, or the 31 days and whatever.
I know.
Okay,
he
cool.
does so well.
Yeah, so they went to the game. We wanted to give them the morning off. They got the morning off, so they'll be here in the afternoon. But we got Deanna being able to join with us, Jay Cohen being able to join with us, and the Wolf and all his wisdom that he's sharing with his community as swiftly growing. We got him on. So you can get your questions in here. We'll ask those, but we're also going to wait. He talked about fiddling in the middle. So fiddling in the middle is still between the 340s and the 440s in the NASDAQ. That's a 100-point range. We're at 375. So as we are waiting for this to choose a direction, I'm going to have Dolby jump in.
Yeah, we got 2 minutes until PMI, about a minute 30.
Yep.
Forecast is 48. Previous was 46.9. Might get some volatility coming up in the next minute and a half. A baby news event in a sea of the FOMC statement at 1. But let's see how the markets react.
Mm-hmm. All righty. So
there are some questions in chat here. So from Eugene, for Stock Market Wolf, when you buy options, how far out of the money would you go on your strike price?
I try to stay within $2 from the current at the money. So like right now, SPY is 488. So the at the money contract would be 488. So if I was going for, let's say, a put, my out of the money would be 486. And then my in the money would be 490. So I kind of stay within a $2 increment from whatever that at the money is. Tesla is different. Tesla, it's every $2.50 for every strike. So right now it's at 190. So then the next out of the money would be 192.5. It's not every dollar, but that's how it works. And then I just wait. On days like this where we're waiting for PMI, where the market's choppy, I would tend to trade individual tickers, like Tesla, for example. I call Tesla the stepchild. So right now it just went from 186 to 189, and now it's at 190 for the long, and it looks really good. But now here we go with ES with there's the minute, right? So there's our PMI. We're getting close to that level I'm looking for the put. Now I just wait, kind of see what.
How far through the 340s? We're trading 350s, guys. We're just at 375s. Number just came out. Do we have anything on the number? Any news?
Yeah, hold on. I'm refreshing Financial Juice right now to grab
Got
it.
Okay, cut me off if you got it. 340s is the
46. It was 46. Forecast was 48. So under what they were anticipating.
Okay, cool. 46, 48 under. Okay, what does that mean to you on numbers, or does that not really mean anything to you, Wolf?
Doesn't mean anything yet. Obviously,
as far as economic release numbers, anything that you're like, hey, if it comes, do you look at that if it comes out 40? Everybody's saying 46 as well. And then what were they saying that it was?
No, I mean it's Anthony kind of touched on it right there. It's it's good for inflation, right? So it may go long, but I've had days where I think based off of these numbers, there's going to be a move, and then obviously the opposite happens. So I have learned to not let news so much impact or try to influence my bias. Instead, I just react to the chart and kind of let the chart play out and determine what I'm going to do. I'm more reactive than predictive. But because of that, I kind of can set myself aside and just take a step back and just say, hey, you know what? Still right now it's holding that level. The news came out. Maybe if it was a bad news, it would keep coming down, but I'm just going to sit back and wait on my hands. NQ on the other side has just broke that level that I was looking at 49.20. NQ is more heavily influenced, right, by obviously the tech companies. So we have Microsoft about to come down and break its pre-market low at around 405. We have Meta at its support level at 30.90. Tesla's the only stepchild continually pushing up. So we'll see if NQ continues to drop. I'm kind of holding on it because it's wicking. So I want to see that nice kind of volume coming in, which we're starting to get now, and maybe look for the short, right? And then I would set my stop at around 49.20. So like here at 49.18, looking for the move down here to 49.16 or 49.10. And then I have my stop at 49.20, right?
Okay, hold on. So we're talking S&Ps, 49.16. You're
for ES,
49.20.
Yeah, ES.
Yep. All right, here's your 16s. And here's your 57s, or 17,357s, the NASDAQ. So we're down here. Who's saying in here?
I took a short right here at 49.18. I have my stop at 49.20. I'm looking for a profit target of 49.16, which we just touched, and I'm looking for this continuation. And I know ES for every dollar is going to move $50. So what I will do is it's all risk management, right? And where people fuck up, excuse my French, is
that's okay. We have some French language that shows up every now and then.
Where people mess up is that they don't do the math based off of their account size, right? So like, let's just say you had a $10,000 account. if I had a $10,000 account, my rule that I give my students is that you shouldn't lose anywhere between more than 1 to 3% of your account on any one trade. Okay, so if you had 10,000, 1% of 10,000 is $100. So the max you can lose on any one trade is $300, right? So when you're coming in here, let's say you had a $10,000 account, then you would say, okay, well, shit, how much can I put in where if I'm getting in here at 49.18, I'm saying I'm going to get out at 49.20, that's a $2 move. How many contracts can I afford? Understanding that every dollar is 50 points, where if it comes back $2, that I'm going to be within that $300 tolerance, right? And that is extremely important. As well as how much you size with. Like typically with options, I tell my students to not size with more than 10% of their account. And then again, from that 10%, your only max risk that you could do is 30%. But anyhow, and then once it hits my PT, so I'm trying to like talk and get all this through. So like 49.18, it went to 49.16. Once it hits my profit target, I will trim some off of the top. So as soon as I take profit off of the top, and if it comes back to my entry, I get out of the remaining contracts I had. So let's just say I bought 10 contracts there on that short. Once it hit 49.16, I trim some off of the top. As soon as it comes back to my entry now, because I trimmed at 49.18, I'll get out of the trade. And then I wait for the next setup. And then so long as it keeps writing down, I'll trim along the different PTs. Typically 10%, 20%, 30%, 40%, 50, etc. Right? I would give myself a window. So 10 to 25% would be profit taking number one, between 25 to 50, profit taking number two, 50 to 75, profit taking number three, and then profit number four would be 75 to 100. And I'll trim a portion of the remaining contracts as we get into those zones. Then from there, after it breaks that 100% return, I just set my negative stop now to be like plus 25, and I just let it ride, because now at this point I've already made my money. And then if I just end up taking a second trade because I've already made money on trade number one, I'm willing to be more risky so long as I don't give back 30% of trade number one's profits. So that's kind of how it works. So right now I'm looking for another trade potentially here on ES. I already took one trade. It hit 49.16 like I was mentioning. It hit my profit. That's a $2 move. That's $100 per contract. If I bought 10 contracts, that's $1,000. $1,000 a day is $250,000, right? So now that when it came back to 49.18, I get out. Now I'm looking for it to break underneath that previous wick of around 49.15.6.
All right, so you don't have a position on, correct, right now?
Currently, right now, no. I did earlier when I was like, I like this level underneath that 49.18, right? In my PT 49.16.
Yeah, and then you covered 16s?
And then I covered some at 16. It came back to 18.
Yeah.
I got out of the trade. My stop when I got in at 49.18 was 49.20. So it was a very tight stop. And then now I'm looking for that continuation to come down. And obviously right now we're starting to see that hesitancy to come down. And then when I'm looking at NQ, nothing's going on with NQ because we have conflicting things. We have Tesla up, we have Meta up, but then we have, it looks like Microsoft wants to come down. So NQ hasn't really moved. ES looks like the better play. But now I'm just waiting to retest those lows.
Okay, retest those lows. So it's at the 18. It's back where your entry was. And
Yep.
does that get you thinking, get back in at that entry, all things are still holding up? Or is it a patience? Because you talked about patience between your last trades. Is there a time period between your last trades? Rips has a shot clock. He comes on here. I think that's a cool analogy for having space between your trades. Do you have that? You talked about waiting.
Yeah. So now I'm not looking to get in at 49.18 anymore because earlier I got in at 49.18. It did hit PT at 49.16, but as soon as it hit 49.16, it bounced right back up, right? So now I want to wait till we get some volume to push past underneath 49.16 to maybe take that second trade.
Okay, cool.
Yeah, so as long as it stays above that, I'm not looking to take any trade. I'm also not looking for the call trade either because again, going back to my strategy, we're underneath the support level. So currently right now it's resistance. So I'm not looking to take a long yet. And once we break above 49.21, I'm still underneath the 9, 20, and 50 EMA. So until it starts to break those, then I will start to look for the long. Again, I don't like trying to buy calls at the bottom or shorts at the very top. I like to have the move already kind of playing out a little bit to start to take that trade.
Nice.
Perfect. All right, cool, guys. If
I
you're
gotta look out
liking
for,
this,
I gotta look out for
ahead,
Deanna here,
Billy.
my CL team. Deanna, you still in a CL short or no?
Yeah, still waiting. So it's almost at about 30 ticks profit here. Actually, more because I widened my stop a little bit. Yeah, about 30 ticks profit. So I'm looking for the close below the value area. So I've got another 5 minutes to wait until I either confirm or invalidate that. And then, then I'm going to decide what's going to happen. I'm probably going to hold this into the inventories, but I'm going to close it maybe a couple of minutes before they actually come out. So let's say I've got at least another 35 minutes. Or,
Nice.
so either time or price. So if it hits 76.37, that is my 2R multiples target, and I'll be out. So, yeah.
Well, I'll put in a good word for the market for it and keep an eye on the chart. MP, back to you. You had some questions.
Yeah. So, hey, what time frame are you looking at? We're gonna rapid fire this. What time frame are you looking at, Wolf?
I use a 5 minute time frame. 5 minute
Okay.
chart.
5 minute chart. Sounds good. All right. What are people doing in the chat? Hey, Jay, what are you looking at right now? You got your trading buddy Wolf that just kind of shared everything that is going on in his mind. What's going on in yours?
So I've already made profit on my first trade. So now what I'm looking at is now I'm going to go ultra conservative. So I'm either going to only risk a small amount with, Wolf says 30% of my earnings on my last winning trade. And more importantly, I'm looking at what kind of confluences we have to move this. So the second trade, I want it to be a definite trade. Otherwise, I've already made my money today. There's nothing wrong with making your money. We're done already at 8:56 as far as my profit is concerned. So why not just take my money and be done for the day? So if I get into a second trade, it has to be a trade that is 100% looking like it's going to move in that direction. And right now we don't have that. Amazon is in a chop zone. Microsoft is now in a chop zone. Tesla came down, found its support, and now bounced back up. Apple came down, found support at 185 and bounced back up. And NVIDIA, same thing. It's coming back down, testing its indicators, but it hasn't closed below it at all. So there's nothing confluence-wise that says we're look like we're going to head up or down. So since we don't have all the main stocks working in conjunction with ES or with SPY, then I'm just going to sit on the sideline and be happy with the money I've already made this morning and take it a win that I've made money within 26 minutes.
Well, there you go. That's how you do. Okay, cool. So you're you're looking for high probability setups at this point. Wolf, you're looking, it's below 18s, but you're looking below 16s now. It's back coming down to 16s.
Yeah, it's testing that 16. So I'm waiting to see it drop past underneath that wick. And I'm also I'm being mindful of NQ. If we look at NQ, every single time we've touched this 9 EMA, we've been dropping. We wicked above it just a second ago, but we're holding respect to staying underneath. However, I'm waiting for NQ to start to go underneath that 17,340 to start to look to take the trade. And earlier during the pre-market, the level that I had to taking my entry was 49.21 for that put trade. So I was a little late taking that, but I waited for that candle. So here we go. We're testing underneath that wick. So I'm going to look to take another position here. And I have my stop set at around 49.18. Okay, so I'm taking a short here at 49.16 with a stop at 49.18. Okay, being mindful that I've already made a little bit of profit on that first trade. So if it does come back to 49.18, I'm sized in a way in which I don't give back my profits from trade number one. What a lot of traders end up making the mistake of is, let's say you made $1,000 on trade number one, and then you're sized in the same way, and now you lose $1,000 on trade number two. Well, now you just wasted time. And one of the things that I hate is wasting my time, right? So I want to be mindful of my time so that I don't come back and and now I'm now having to stay on here to try to take a third trade, and then you start revenge trading, right? So we just hit 49.15. That's a dollar move, right? From that 49.16. That for some people could be a little bit of a return, right? That's a $50 move. So if you bought 10 contracts, that's now $500, right? $500 a day keeps the 9 to 5 away, right?
Look at that on the fly. Okay, cool. So you're in a short right now. I might start following you today. It's January, so it's the last day of January, so I'm resetting for the month of February. What are you short from right now?
What was that?
You're short right now?
Yes, I'm short. It touched 49.16. It came to 49.15. I'm still holding this though.
Yeah. Yep.
So I'm a little bit
You got
negative. Yeah,
And you have a tight stop at what, 18s or 20s?
Yeah, I have a tight stop at 49.18. So if we start to break back above 49.18, I'll look to take that to get out. But right now, we kind of have that continuation down, and I'm waiting to see how these next candles start to play out. So I like this move back to 49.16. But what I don't like is we just touched it and we're kind of holding. Very similar to that one candle about 10 minutes ago where we whipped in that same level. So this may be a level for right now, right? So I got to be mindful of that. I always have to, it's like a boxer, right? If you're in a boxing match and you're fighting somebody, you're coming in with a game plan. But if that person is doing a whole different new thing and you're not adjusting to how they're moving and what they're throwing and the looks that they're giving you, then you're going to get knocked out, right? So one of the other important things about trading is to be able to identify levels as the day is actually going on so that you can make the necessary adjustments. So right now, I see that we have a little bit of hesitation here at around 49.15 and a half. Okay. So I'm being mindful of that because I don't want to stay just biased, right? This can end up holding support. And then at that point, then I'll just readjust. And if I lose on this trade, that's okay because it would only be a small amount of my trade number one's winning. So I'll still be up for the day and I could always take that third trade. What I don't want to do is give back my profits. So I'm still holding on to this put trade. I'm still staying patient. I have a whole 4 minutes before this candle even closes. So this may continue down, right? And that's part of trading, right? I take a high probability setup.
One of the beautiful things too, Andrew, here is that because the volume is so low, it's not like making a dramatic move. We see it. We now could be, and I also like the fact that the 9 is starting to come back down closer to the candle. We were really extended off of that last candle. So giving this 9 some time to catch up, it continues to move down closer towards. So I'd love to see the 49.20 become new resistance, and then we continue down from there. So that's pretty, positive for us.
Hey, Jay, there was a question in chat. Are you on social media at all? There were some people asking for your socials.
Yes, my Instagram is Jay Did The Deal.
Cool. I'll go ahead and find that and post that in chat.
Yep.
Just stock market.
Jay did the deal. I like that.
Yeah.
Anthony, yes, Topstep X will be released in February. Lots of folks are interested in that one. So we're getting the last and final touch-ups before we get that back on. So we got Wolf with us today. Again, guys, we have Wolf with us today. His trading buddy and very good friend, Jay Cohen, is on here. Deanna is on here. And then our big consistent guys that are on here all the time, Hoag, Eddie, and Andre. They stayed out too late last night, so they're sleeping.
Great job, Ben. Ben Camlet with 726 today. Awesome job, Ben. That's great. Like I said, $500 a day, 9 to 5 away.
Right. So, the folks in here that have passed the trading combine this week, give a little hey, I passed, and those that are funded, let us know about your week. Try to give us a little feedback. It's Wednesday, halfway through the week. Just interested in who's gotten funded this week, who's gotten a payout this week, who's up money on the week. Just for those that have passed the trading combine all the way to the funded level. If you guys got some of that in here, that'll let us know. What's up?
Yeah, if we want to switch to the crude charts, D is about 15 cents away from hitting her 2R on the trade. So excellent trade by D. It is breaking through 76.62.
Yep.
This is looking
Almost
good.
there. Yeah. Value rejection trade.
Yeah, excellent,
work.
excellent trade. Do you guys ever trade crude oil, or you just stick with NQ and the indices?
NQ and then
Just NQ and the indices.
Well, if you stick around TopstepTV long enough, D and I might be able to convert you to crude oil after a while.
Yeah, right?
We're trying our
I don't
damnedest.
discriminate. I don't discriminate.
We're trying to infect everybody to trade crude oil.
Yeah, we are. It's a great market to trade.
Yep. It
Why-
is.
Awesome.
what-
Make your
what-
500,
is it
right?
like super volatile, or what do you guys love about it so much?
It's kind of in the middle of volatile, but not as nuts as NQ. So you can get
Okay.
really good opportunities, but it's not as crazy, and it doesn't do the like intra candle stuff that Nasdaq does. So if you're good at Nasdaq, chances are you're probably going to be pretty good at crude oil. It's very technical, but it is a two-sided market, so it doesn't just go on runs and trends. It will do at least 2 or 3 kind of turnarounds in a day and give you anywhere from like 70 ticks up to about 120 ticks on that run. So it is, it's one of the toughest things to trade because of that, but it's so good. Like I've been trading crude oil now for 11 years. I started 16 years ago, and before I went into prop trading, before I became a crude oil trader, I was actually trading Forex, and I traded Forex for about 5-6 years, just euro dollar. That was my thing. And at the time when I became a prop trader, they put me on an equities desk, and they were like, there you go, now trade ES. And ES in 2013, it was moving like 12 ticks a day. So I was like, no, I'm not going to do that. So I didn't like it.
Hey, so we have Isaac, a funded trader in here. He had a major milestone. Everybody's sharing some stuff in here, so please go up and read chat. You'll either get inspired or educated or a bit of both, or misery loves company, whatever you like. But I hit a major milestone today. Locked in my total annual fixed expenses for the year in equity in my live funded account in January. The rest of the year is icing on the cake. Okay, Isaac, are you going to take that money out of the account? Because if you are, I'm going to try to get this expedited with my team. I'll just tell him, I don't know if I can put you to the top of the line. But, I mean, I can, but I'm not because I got to be fair to everybody else. But I'll tell them Isaac is got a payout request coming in here, and he was just on TV today talking about locking in his entire year expenses. So my question to you, Isaac, and you can jump in here, is are you taking all that money out? Do you put it on the side in something that is not, I don't know, like an account you don't touch, savings account? I don't know if anybody has those anymore. But what do you do with that to lock in your whole year? Because right now you're locked in, right? If you take that money out for all your expenses for the year. But it takes discipline and then parking it somewhere so you don't touch it the entire year to then take that pressure off and to make everything icing on the cake for the year. So if you have anything in there, and Dolby, if you catch it, let me know. Isaac, great trading, buddy. Great trading. Love to see you've been with Topstep for a while. Love to see you get in this zone, stay in this zone, and now take a payout, assuming you're taking a payout. Very, very cool stuff. I'm stoked.
Yeah, he was on TopstepTV while you were gone, MP. Phenomenal guest. Super entertaining, high energy.
Yeah, he was very cool.
Really, really good. Looking forward to having him back on, placing some trades and Power Hour probably. So who's the position on right now? It is FOMC day, but how are you? I know D is very, very happy right now. How about y'all?
Me? No, I'm down. I'm getting crushed. I got I got an all FM mentality. I got stopped out at 22s or 20s, 420s on that move. I had a 3-lot on that I took 20 handles heat on. So that's whatever, 412. That put me down really quickly. And then it sold off right after that. So, I mean, I'm in this spiral, love-hate. I'm in the hate side of trading right now. So that's my emotional state for the month of January. And, it's you don't want to sit yourself in a hole. I got Isaac funded trader that I'm backing that is kicking ass. So I got positivity on other people's journey, which it is what it is. So that's on me, and I'll fix what I need to fix, whether it's taking time off or whether it's going back to trading combine or whether it's talking to Mick and sizing my account down to only be able to put on 1 or 2 lots. So that's me. How about you guys?
I'm still in
so
my
far.
short. Go ahead, Andrew.
Go ahead, Jay. No, go ahead, Jay.
I'm still in my short position on ES. It just continues to kind of just bounce off of the 490.15 mark. So it looks like we're stuck in a zone between the 419.15 and 419.18. So we're just kind of stuck in that little zone. So I'm just sitting here, but I guess the important part of this is that I'm sizing in a way where I'm not stressed at all. I'm already still green for the day. I could cut out right now and still be green for the day. So, I'm just sitting here and enjoying the conversation because I've sized my position in a way where I'm not stressed and I can just, kind of wait for this zone to kind of clear out for us. Now, what I am thinking about, though, is that if you have to think about the other types of traders out there. I look at this kind of like a chess match. There are traders out there who thinks that this is forming some sort of a flag pattern. I don't follow patterns, but there are people out there who do think this is a pattern. So they may be getting ready to make a move, which could cause, the market to move. So my mentality is starting to think about, okay, what are the other chess players out there thinking right now that can make this market have some movement? So we can clearly see, I think this is like a bearish flag or bullish. I don't know. It's a flag pattern starting to form. So people could start taking action there. And I just want to see when that happens, which direction it'll move in. But it can also absolutely do nothing. And I think that's one of the biggest lessons a new trader can learn. Don't think the market has to do anything. It doesn't have to bounce off a level. It doesn't have to bounce off resistance. It doesn't have to do nothing. It can sit flat all day. And the sooner that you can realize that, the better you'll be long term.
I love that because I learned really quickly after I blew out of about 100 grand when I first started trading from the age of like 18 to 23. As a vending company I didn't have rich uncles or grow up rich. After that, and then I got on simulator and I'm like, the trading mentor guy in the room that would always talk to all the turtle trader type guys that were all on simulators that they were backing in the 16th floor of the Chicago Board of Trade, a prop firm, that the market will come to you, that the market is always right, that you do not know where the market is going. One of the reasons why I cut the individual off, we cut the individual off yesterday, and there's no disrespect to Pro Trader Mike. That's who it is. Nothing to you, buddy. Nothing at all. I just don't want that type of like, it's going to go here, it's going to go that, I'm always right, all that kind of stuff. It just really sends the wrong message. There's a community of people that do love that, and the flash and blah, blah, blah. But that was one of the reasons yesterday, it's going up, guys, blah, blah, blah. I don't like it. We don't like it. It may go up. I think it's going to go up. I think it may, I believe. But when you say it will, you're really taking a newbie. Yeah, you're really taking a newbie. And they're like, oh, shit, I'm going to get in. Oh, shit, I'm going to get out. Then it's like, that doesn't help things. So no disrespect to him at all. He's like an affiliate of Topstep. He's an affiliate of the other companies. That's great. We just don't want that. It's not a fit here on Topstep TV. So that's just kind of what. So that's going to send the message this year of transparency and then not leading people the wrong direction. Last year, I still don't like the fact that I didn't see how many some of these partners had reset. Get into that early, but they're not with us anymore, so that's okay. We got Wolf here with Jay Cohen, and then we got some great folks that are on here being very, very transparent, the best they can. We'll get into that really quick. Wolf, how do you, as a market, well, they're sitting here at the low, so we'll wait on that one. But, okay, it's below the 16s. 16s we're holding.
Yeah,
now
just hit 49.14. I'm going to say, I told you so. It's going to go down. I'm just kidding.
Yeah. Right. Hey, cut it. Hey, Dolby, get him, cut him. No.
I told you it was going to go down. No, honestly, I'm still hanging on to this short. I got in at 49.16. It just touched 49.14. So another $2 move. Again, every dollar is $50, right? So $2 move, that's $100 per contract. You buy 10 contracts, that's $1,000. So it's another nice little win on the day. earlier when I did the pre-market, I said I wanted that short underneath 49.20. But we had the news coming out, so I was staying a little bit patient, and I got in $2 later than what I wanted to. Otherwise, it would have went from 49.20 down here to 49.15. So I'm still holding on to this short. I did cover a little bit of profit here now that it touched that 49.14, and now I'm waiting. I'm also paying attention to NQ. But going back to it, anybody that says they know the direction, anybody that says like, oh, I could read the tape, man, when somebody tells me that they could read the tape, I'm like, okay, your name must be Neo from the Matrix, because that shit goes so fast. There is absolutely no way. Oh, here we go, 49.13.
Here we go.
Let's go,
Well,
baby.
there are tools that make that reading tape a little bit easier. Things like Bookmap that visualize where the previous
of
orders
course,
were
of
and
course.
stuff. So obviously you have ways to do it. But if you're just going to stare at time and sales, I'm with you.
Yeah,
So just like,
There's no
what?
way. Yeah,
So
so
Geez, let's
49
go.
down to 49.12. I'm curious in the chat, anybody take that short with me? That's a 4-point move. So on one contract, that's $200. Beautiful play out. Let's see that continuation.
Here's why I'm
Now
on
be
tilt.
careful though. Be careful, because we are at a level here. We are at a weekly level, right where we're at right now. So make sure that you guys trim some of your profit. That's the most important part to protecting your earnings. Is don't be greedy. Don't be greedy.
What level, Jay? What level and what market?
So I use the 5-minute chart, and we have a clear level at 49.10 for the week. So I'm just trimming right now. My position size went from whatever I was at to 50% of what my position is right now. And again, I've already had one winning trade for the day, so I'm only half positioned in on this second trade. So as it starts to bounce back up, once it comes back to my entry point, then I'll be out, and I'll be pretty much wrapped up for the day. Great trading day. Good stuff, Andrew.
Yeah, so I was gonna say cheese and rice is what day trading, cheese and rice, guys. Man, I like it because you guys were patient. You waited, we talked, and go really quickly.
Yeah, we're just
Wolf,
talking and bullshitting with you guys for half an hour.
Yeah, I know. See, that's another thing what we try to do here on TopstepTV is you get in this moment where you're talking as traders and explaining and discussing and all that kind of good stuff like we used to do in the trading pit, and then you keep yourself from over trading. And that's something that you guys were just talking about as far as patience and keeping trades in between there. And then you still have these conversations. You waited for a breakout and all that kind of stuff. Hey, Wolf, you've had quite a few people get funded too on your end of on the spectrum, right? Your community here at TopStep.
Yeah, here I'll show you guys real quick.
And those that are asking on the affiliate side, what's the most somebody's ever reset and all that kind of stuff, we're going to come out with a little bit more transparency there. I will never name. I'm not going to name names at this point in the game. We're going to create a transparency kind of pledge that TopStep's working on. But the highest one is 500 resets. Did not know that. I found that out in December. So
here's
yeah, that's a little heads up on that. We'll have more to come on that one.
Here's some of our funded traders. So we have like a little testimonials, and we didn't start futures until about 2 weeks ago, right? So within those 2 weeks, we've already had all of these students become funded, which is give or take roughly about 30 on here altogether from messages that I've gotten on whether that's DM on Instagram, emails, or just what have you. We have about a little north of 56 members that have got funded in the span of 2 weeks.
So are you guys then, when you say span of 2 weeks, 56 members, is this because you're having conversations on Fridays about, you're trading options, so you can still pick up your futures?
So during the day, like we'll trade options, but so this is normally what my chart will look like. Let me save this one because I actually like this. Hang on. Save grid. Simple 2 is what I'd call it. But this is normally what my screen will look like on a given day, where we have Tesla, SPY, NVIDIA, Meta, Microsoft, and then instead of Qs right here, I'll have like
Oh,
Amazon.
wow. Okay.
So this way, like the client or the students can see, and I only use these four in the middle as a confluence, but we're mainly focusing on the outer edges. So like Tesla or SPY is what I'll focus on for options. And then ES and NQ I focus on for the futures. In the middle, we just have that as a confluence to kind of see how the market is overall driving today. And then that kind of helps us with our decision making. But mainly the two that I focus on is SPY. But yesterday, as an example, SPY was very flat. So I took an NQ short from 17,550, which was on my pre-market watch list that I sent out to everybody. And we rode that because it stayed underneath that 9 EMA all the way down to 17,340. It was almost a 100-point move, which was for one contract, it was like $5,000. I had 10. So it ended up being a really nice play.
Alrighty. Very cool.
D, how'd your crude oil trade finish up?
Yeah, it hit the target. So it covered all of the stupid losses that I've done in London trying to trade this thing. If you go to my my chart, I actually entered at like earlier. I was at 76.99 with a view to do a value acceptance trade in London. And then it just did nothing, man. So I was like, oh, I should go long because there's average session range. So I got cut up on that. So I'm like, single prints rejection. So I got cut up again. But luckily, I never take my full 1 hour. So when I say that I got cut up, it just means that I took minus 0.5 hour. So, you're taking 10, 15 takes losses at a time. And then obviously you catch a very big trade like this that covers all of that. On my XFA, so this trade on my XFA, I was in with 2 lots because that's a bigger, slightly bigger padded account because I think I started it a bit earlier than my live. So that one made about 1,740, but net on the day is only about $500 because of the previous losses. And then I managed to pull. I had some problems with Topstep earlier. So it was like stop start. There was like some problems with the chart and whatever. So I had to exit a trade, get into it again. So that one is that one made about 940, but again I made a few losses. So that one is up about 120. So yeah, I think I'm done for the month. I am finishing January in my XFA on my pretty much the high mark. So that's
Okay.
not bad. So roll on February. My live, because like I said, we've had some bugs and I've had a few fat finger trades because it's a new platform. I am probably about 40% off my high mark, but it wasn't that much profit in there because I only started trading it I think about 3 weeks ago. So yeah, we'll see how February goes. Definitely a challenging January. I am going to work on really getting the grips with TopstepX because I've made some mistakes where I'm like, how do you put on a limit order? And then I'm like, oh, no, that's not a limit order. And then I fat fingered a couple of times where I thought I was doing a limit order, but I actually scaled in, just like stupid shit that, shouldn't really happen. So yeah, I'm going to probably take maybe the rest of the week off just to get a couple of days rest and to get fresh eyes on Monday. There's also a little bit of slightly sad news. I lost my gecko lizards that I had for 18 years. She was almost 19.
Oh.
So tomorrow we're going to cremate her. She's been a good companion. So yeah, I'm probably going to be a little bit emotional tomorrow. So I'm still going to do my live stream on my Mark Stoker's YouTube, but I'm not going to be trading. So I might trade a combine or something, but there's not going to be any live trading. So that's the full update. That's the power of big risk reward. Yeah.
Yeah. Sorry about the loss. It does suck losing anything that has meaning to you, especially pets and family and friends and all that. So yes, I get it.
Yeah. Okay, it's not as bad as losing a dog, but it's a bit sad. She just got old.
I had to put down an ex's hedgehog once because I had wobbly hedgehog syndrome, and the vet was trying to convince me to like put it through some sort of like surgery or something so we could live another 30 months. And I was like, dude, this is such a scam. Anyways, but it did give us a little like clay footprints of the little hedgehog paws, which was really cute. There's a question for Stock Market Wolf. Do you use any market internals such as VOLD, add, tick for any of your options trades?
No. I mean, I'll put it this way for people to understand. When I was trading options, I don't even understand the Greeks even to this day because it's fucking relevant. All I focus on is literally just the chart, my levels, my indicators, and then it's just a matter of placing the finding out how to place the correct order. But I've always been a strong component in less is more, and the more simple you can make things, the better. So no, I don't use order flow. I don't use time and sales. I don't use these different Ichimoku clouds or whatever people use, Fibonacci retracements. I try to keep my trading as simple as possible, and I let like the math just kind of let the math, and I'm very strategic of how I go through stuff. But aside from that, yeah, I told people in the very beginning, I'm gonna sound like a total degenerate because of how little I actually do know when it comes to the market. Like I don't know a certain lingo, I don't do certain things, but I can understand the chart, and that I think that's the most important.
And manage risk.
And manage risk.
Yeah.
There it is.
Yeah.
That's the important.
I think that after that, the lingo isn't. We like talking lingo just because we're on the trading floor. But like I said, there are much better traders out there that can read the charts better than I, that can read the markets better than I. I don't care if they call them cons or contracts or cars or whatever, new terms that all the kids are using nowadays.
Just a heads up to crude oil traders, 4.5 minutes to crude oil inventories.
Oh, good call. Thanks, Steve.
Hey, Wolf, have you ever heard the word pulled pork? Of course you have. But have you ever heard in the markets?
Yeah, bro.
Pulled pork. Yeah.
Is that Dobie? Is this a common thing? I'm like the old guy.
No. Okay. So this was like a couple of days ago. Someone in chat, I was asking about full port, and I didn't know what it meant. And someone said full portfolio, and I was like, that makes sense. And then someone in chat said pulled pork, and I was like, oh, that's kind of funny. So we've been running with pulled pork, which means full port.
Using
so
your whole account.
It's become using our whole account in position. Now it's become a meme on TopstepTV. So we say it's pulled pork. So if I get my balance back up, I'm at
max position.
Yeah.
So max position on a proper count. Yeah. Pulled pork. Yeah.
Yeah.
I think the Reddit world calls it YOLO and all that kind of stuff. I don't know. Full portfolio. Again, still think it sounds a little bit like you thought about it because in the other one's just you only live once type of attitude. But I think in general, nobody would say going full max position on anything is the holy grail of getting yourself to where you want to be as a consistent, profitable trader.
No, I can even if you guys want, I'll show you. I'll give you. I don't care about giving my strategy and my risk management. I could, for those that are beginners, this is kind of how I do my math. Let's see. Okay, let's just undo that.
MS Paint's coming out. Shit's about to get real.
Yeah, dude. As soon as Paint comes on, it's super real. So the first thing when it comes to risk management is that you need to know your TA. TA for short is your total account, right? So let's just assume, again, going back to it, you have a $10,000 account, okay? Then the next thing you need to know is your RPT, your risk per trade. The rule of thumb is no greater than 3%. So in this example, in terms of dollars, that's $100 to $300 is the max you can lose. Risk is not how much you play with, it's how much you're willing to lose. Then you also need to know your RPD, which is your risk per day. If this ever hits, that means you're done for the day, no matter what. In this case, I would say like 5%. In this example, that's $500. Okay, so that's if you have a $10,000 account. The next thing, and as I'm talking about this, NQ is starting to drop underneath that level. However, it's taken a while, so I've already taken 2 trades. I'm not probably going to take a third trade. I already feel comfortable with my profit. And if I was to take this third trade, I want to make sure I size in a way that I don't give back my total profit on the day of no greater than 30%. And I'll get to that here in a second. The next rule is that I tend on a full size trade to trade with no more than 10% of my account. This is easier to do with options because I could do that calculation. Obviously, with futures, I don't really see the cost. So what I focus on instead is my max that I'm willing to lose, right? So if it's like, okay, I could lose $300, and let's just go to the example that I had today. I'm going to get in at 49.18. I have a profit target at 49.16, and I had a stop at 49.20. Okay, so I know this is essentially like a 1-on-1, right? However, it's not a 1-on-1 if I start to trim and I let this continue to go down, right? Which is what I do. But so from 49.20, I know this is okay. This is a $2 move. Every $1 equals $50. So if I bought one contract worth and I lose $2, that's going to be my $100. And then I ask myself, well, how risky do I want to go on this trade? 1%, 2%, or 3%? Because if I could go more risky, instead of one contract, then I could buy 3, right? And then a great trader doesn't focus on their profit that they can make. A great trader focuses on making sure they don't lose more than what is within their tolerance, right? So when people are like, oh, I'm putting in 40%, or oh, I just lost 10% of my account on this
10
one
seconds
trade.
to EIA.
That's
Yep.
stupid as fuck, you know? So it
Yeah.
all comes down to risk management, guys. If you can understand the math and then you have a high probability setup, you'll be all right.
Here we go. Crude oil. Jumpy.
Yep.
The
Say a
number.
prayer to anybody who is in a position in crude oil while
Yeah.
all that happened.
Especially on FOMC day.
Yeah, no kidding.
All right, guys. Little update, guys. Find Isaac. Isaac, share what you were looking to do. I don't want to say things and then not have things. So, if you guys are catching me talk about, hey, what about Isaac on the stuff? Grab it. That would be helpful. Topstep X. There's some folks up here. There was a bug this morning with Topstep X. Due to the big release last night. We had a big update last night. It's linked to the symbols. So, needless to say, I told you, and I'm going to read it. We're currently investigating a link between the symbols, charts that are included. I think we did an update that did something with doing that, with your cursor or something. Drag and drop, profit and stop loss not working correctly. Charts flickering and chart saving issues, symbol link issues. Please disable link symbols and charts for now till we advise. Okay, so we'll drop that in there if we need to, but we're on it. So this is just an update we had last night. Bear with us. Very frustrating market. We're trading 17.3 for me, not for a lot of other people, but it's been a day of selling rips, selling little rippers to the high side. Those are little pops, guys, that if it's a downtrend.
What was that thing from the chat? Grip it and rip it. Yeah, that's right.
There's a grip it and rip it in here. Grip it and rip it. It's kind of hard to do if you have a stop, which you should be having a stop.
Yeah, true.
If you don't have a stop, then it just comes to how much until you get auto liquidated. So yeah.
Yeah, not a good idea.
Smash and grab. King Caesar smash and grab. I thought that's a break-in.
So, Andrew, I have a question for you. MP is, not having a great January. What would be some advice you would have to maybe a student who didn't have a great January? Also, you're on MP's TV show. With that in mind.
Yeah. By the way, NQ is still coming down, and ES just made a new low. But going back to it, any trader that's struggling, the first thing that I ask every trader, right, is number one, are you tracking your trades, right? And it's not just using TradeZella or some automated software that's going to put your trades in and you go and you see your win ratio. No, like it's very important to journal your trades. And what I mean by journaling is that you are manually entering, okay, I got in during this time. I traded the market open today. I traded this ticker today. This is how much I went in. This was my risk today. This is exactly what happened. And then it's important to have the why. right? Why did I take this trade? Why did I get out too early? Why didn't I get out too early? Why did I hold it too long, right? All those why questions are the most important part of it, as well as having your strategy. So when I was trading, I would I would number my strategies from 1 to 8, and then I would use those metrics to then help me determine what strategy had the highest hit rate. And then I would let my metrics help drive my decision making, right? And over 14, 15 years of doing this, I let my metrics tell me what time frame works best for me. How do I do that? I traded the 1 minute, I traded the 2 minute, the 3 minute, the 4, the 5, until I found out where I had the highest win rate. So with somebody having like a struggle, the first thing that I would say is you need to start tracking your metrics. The second thing is it doesn't make sense to go to a simulator because you're already past that. Your issue isn't that you don't know how to trade. The only purpose of a simulator is to understand how to use the platform. So going back to firearms, right? I teach SWAT officers of how to use a firearm. And well, no, I don't teach SWAT officers; they already know how to use it. But when I teach new people, I teach them how to use a firearm. And if it's a brand new person, like let's say it's my wife or one of you that have never touched a gun, I'm not going to give you a fully automatic gun, right? I'm not going to go and give you an AK. I'm going to give you a little 22, and I'm going to have no round in the chamber, no magazine in the magazine well, and I'm going to have you do what's called dry fire, where the gun is just going to go click versus bang. And you're going to start to get that familiarity of how to use the platform. For trading, you need to understand how to use your weapon. You need to understand how to use your platform to execute the right trade. So Michael's already past that. There's no need for him to go into simulator. While people stay in a simulator, it starts to build false confidence, right? Because subconsciously, you know in the back of your head that this money is fake, right? So all you're doing is you're not helping yourself. So instead, you want to start to go and maybe trade small. You want to maybe size down. Maybe you want to take 2 days off. So I have a rule where if I have 2 losing days back to back, I need to take 2 days off for mental clarity. If I have 2 weeks that are red, I need to take 2 weeks off for mental clarity. Now, I could have a red trade on the day, but I could always battle back, and that's where my risk management comes into play. So then my next thing that I will be looking at with Mike is, hey, how are you actually doing your math to size in onto these trades? And let's actually break down what, like step by step, what's going on. Because for me, there are days where I will have a red trade to start the day, and then I can always battle back because I have the risk management. I would also look at, hey, what is it that how many trades are you taking? Like me and Jay, we only took 2 trades. I could have definitely taken this short here on NQ and on ES and made more money today, but I've already made my money. There's no need to continue to try and be greedy, because now if I start to give it back, that's another thing. So these will be the questions that I start to ask the student, and I wouldn't start to know that until we start to work together kind of one-on-one and to really start to dive deep into those things. And then what I would also do is start to limit them. So let's say they take, I don't know, fucking 8 trades a day. I would say, okay, you're only limited to 1 trade a day. And I want you to take just 1 good trade. And I'll do that for 1 to 2 weeks. And then I'll say, okay, you're able to take 2 trades. And
Wolf, we are making new lows right here. What are you looking? Let's jump back into it when the markets are kind of getting back in their fiddling in the middle area.
They're rolling.
Yeah, they're rolling. What are you looking at right now?
So again, earlier I had my
position.
Yeah, I already had my position at 49.16. It hit 49.14. I mentioned my stop after that would be, well, I hit 49.12, so it was a $4 move. It came back to 49.16, so I got out of the trade. So I would have been doing the same thing. I would have waited for that break underneath 49.12 to take a short again, where I could have taken it. Now at this point, the move has already passed. I've already made my money. So I'm a very disciplined person. This move has already taken off. Now, on a typical day, what I would do is trim, right, along this as this is dropping, just like very much like yesterday when I made 50,000 on my NQ short, is I would trim along this way so long as it stays underneath the 9 EMA. So going back to my strategy, right, I talked about levels in that indicator. Currently, right now, it's still holding underneath the 9, so there's really no reason to get out completely of your setup. At this point, though, because I'm already out, there's no reason for me to jump in because it's already moved from 49.20 down here to 4900. So it's already moved a 20-point move down. This could start to reverse on me at any point, and I don't want to give back my profits that I already made on the day. I'm okay with the profits that I made, and I'm gonna trade for tomorrow. Now, on my thing that I look at today is, okay, why did I only use a $2 increment today? Maybe it's because I'm on here with, I don't know who these audience is, right? So I don't want to set them up for failure either. And you guys end up mad at me because I was like, oh, I'm going to get in, and so I'd rather have people take profit early, feel comfortable with it. And then we had our day. Let's wait for the next setup. And right now, to me, I'm not going to go. This would be for me the analogy of chasing, right? The move has already happened, so I'm not looking for anything.
Yeah, same as
Go ahead, Jay. No, I was going to ask you to follow on that one too.
Yeah, so basically, to the exact same point of what Andrew said is that, and the reason why he was able to talk through that last part without even kind of breaking is because we were already in the down trade. You guys saw our positions were already short. So all we're doing now is just watching the move play out. There's no reason to panic or no reason to start, being erratic because you're already in the trade. It's working in your favor. So myself and my process, all I'm thinking about right now is the levels that we're going to struggle at. You have to remember that while there's a bunch of us in here making these trades, as individuals, what really moves the market is the volume. And who carries the volume are the large hedge funds and large positions stakeholders, right? So I'm thinking about those companies, and they may have buy points at certain levels. So I knew that at 49.05, there was probably going to be a buy level there just because it's still someone manually putting those numbers in. As crazy as we've been automated, it's still somebody manually putting those numbers in. And 49.05 on ES sounds a lot better than 490.0523. Like, who's going to type that out, right? So I know that there could be a buy that comes in there, and we could get a little bit of a bounce there. So I've trimmed my position at 49.05, so I'm less than 25% of my original position left in this trade, and I'll see if it can break below. But honestly, I'll either set an alert. At this point in time, I would set an alert and walk away for the day, let it close out on its own, or wait for it to come back to my entry and get out if I'm going to see it. But you want to get into a big habit of not sitting around and watching the charts all day. Like, that becomes very, very, very draining, and it becomes habit forming. So, set your levels, respect whatever those levels are. If you're already profitable, you live a green day. That's always a beautiful day when you just walk out green. So right now we're below all of our indicators. We're in a clear downtrend on SPY and ES. No reason for us to panic. No reason for us to, get startled. So we're able to just remain calm. When I first came to Andrew, I'll tell you guys a story real quick. If you have time for it real quick.
Yes, sir, we do. It bounced off our lows.
Yeah, we bounced off of our level, so we're just watching that. If you entered at the right time, you're still fine. But when I first came to Andrew, to his point, I was down, I'd already blown. He says I was down 50K. I was down way more than that. I had already blown an account, and then I'd blown another $50,000 account when I came to him. And it just got to a point where I was like, something is not working here. This is just not right. And so I went to him, and Andrew had me step back and go into the simulator for a few months, and just learn, the way. And when I first came to him, I'll be honest with you, I was a little pissed because I came to him. I said, hey, man, you got to teach me the sauce. I've been following you for a long time, blah, 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 blah. He said, okay. And he gave me all these books about mentality, the mental game of trading, and all this stuff. I'm like, look, man, I don't want to hear none of the mental stuff. Just tell me the secret. And I now, a year later, I understand what he meant was that until I figured that part out, I would never be a good trader. So I sat there and learned with him for a few months. Then he said, okay, now it's time for you to go live. But he didn't let me really trade too many contracts. He said, you're going to keep it really, really, really small. So that way you're not so emotional because you're not seeing your money move fast. And I did that for a little while. And I like to tell people the story. If you go on Andrew's page, the day he made 1.65 million or something in a day, I was at his house. I didn't know him really at all. This is a true story. I swear it on my children's life. I didn't really know him. I'm at his house. He's sitting there and he's trading, and he's like, oh, we're having a pretty good day. And I was like, oh, okay. Now, if I'm up over $1 million, I would have been throwing chairs. But he was just like, oh, we're having a good day. And then he goes, all right, well, I guess that's enough for us. And then he just closes out his computer and he went to work. He went to he went to his job. I would be the worst employee in the world if I made that kind of money, because if I show up and a boss says anything to me, I'd be like, tuck your shirt in and go get me some coffee. But he was just so calm about it. And then later on Instagram, I saw how much money he had actually made during that particular day. So I say all of that to say this, is that what took me from being down 50,000, and plus to being profitable was just sizing in a way that would allow me to see trades work out, and to making sure that I also just followed some sort of rules. So, if anyone is new, and that's kind of what I kind of talk to people who are struggling, who are new, is you will go a long, long way if you learn to just let green be green and size in a way where you're not going to get emotional if it turns red against you. If you are trading and you start getting anxiety because you're in a negative position, you should know that you're trading the wrong way right there. Right there should be a huge sign, because even on my red days, it's minor. I'm like, well, I can't afford dinner today. I can't afford to eat a steak tonight, right? I'm not going crazy like, oh my God, I just blew my kids' college tuition. And I think that's where a lot of people make a mistake.
Got it. All right, cool. Well, that kind of segues exactly what you were talking about, Wolf, about the I don't know exactly dry firing, trade the small, all that kind of stuff. Sounds like, Jay, you got put on that, not at the shooting range, but at the whatever analogies I can use about the trading range. But Dolby, what do you got on this?
I have a question for D, actually. And D, what do we see in crude oil right now? Looks like we're back down to 76. Any trades recently? And I got two questions for Jay after this.
No. Yeah, so we are hitting the average daily range low.
Mm-hmm. Go ahead, Deanna.
What about? Yeah, so there was a build of 1.2 million in the inventories. I don't really take much stock when it comes to releases. Sorry, my dog is reverse sneezing right now. It's like choking over there. Yeah, so we are hitting the average daily range low. For now, there is an extreme of the swing, but because it's FOMC day and because we have that base drop formation potential on the daily chart, I am not too keen on taking trades against this sustained auction that is currently happening. It's not the strongest auction because we didn't leave any single prints on the TPO profile, which is what I would want to see if the move is really strong. Having said that, being in this area, there could be some scope for pullback. I'm not going to take it because, again, it's the last day of the month. I'm preserving profits here. So if you guys want to take it, fair enough. If I was going to take this trade, I would want the day to be a little bit further along rather than now, because crude oil likes to turn around properly for like 60, 70 ticks later than basically 3:45 my time. So I'm not going to take this, but like I said, technically there is some scope for a bit of a reversal. Wouldn't ask for a failed auction at this point. So if you do go into this, keep in mind that you have the initial balance low at 76.68, where we already had a reaction from. So looking for anything more than 50 ticks from here might be a little bit wishful thinking. Again, caution, because it's the FOMC day. It can open up the potential for asymmetrical days that go in one direction relentlessly, especially when we're rejecting the daily supplies. If you don't know what a supply is, it's the previous area where a lot of sellers stepped in and left their mark. So it means that they had their inventory there. So I'm always a little bit careful going against those fresh new reversals. So those are my thoughts. I'm not going to be getting involved in this at the moment. Maybe if something comes up very late in the day, I might look over at gold, trade that instead, because that tends to move a lot more for FOMC. But again, it's not going to be anytime soon. I'm going to give myself probably about 2 to 3 hours break before I trade again, if I trade again.
Awesome. Thanks, D. I want to go back to Jay, actually. I have two more questions. One is, you look like a fairly built dude. I was curious to see how many push-ups you could do in a row.
Why are you doing this, Dobie? Because you hold the you hold the record.
I'm just curious.
Yeah, Dobie does hold the record. What, 43?
42.
42.
Okay.
40. I could probably do 41 and a half.
My man.
You're such a humble,
Oh,
so humble, Jay. So humble.
Yeah, you're being nice. You're just being nice.
Yeah. So I do have another. I got a serious question though. There was a question by TVD earlier in chat, and he said, "How did you find, Stock Market Wolf?" But I want to broaden the scope of the question, which is, if you are new to trading, what advice would you have to someone to, like, how do you begin finding a mentor? Like, what did you look for when you were looking for someone to help educate you? There's a lot of different people out there, a lot of different styles. What do you look for? What's your advice to a new trader trying to find someone?
Sure.
You don't need
So,
someone. Oh, that's for Jay?
I asked it to Jay, but yeah, I mean,
Yeah,
sorry,
be
my
both
bad.
you.
Go, Jay.
Sure. So I actually had been a fan of Andrew's for a little while. I had seen him trading on there, and I'm like, dude, this dude is killing it. I didn't know what I was doing at all. I was so new. I just saw numbers. So I'll be honest. I was like, dude, this dude is making bank. And so I was a fan, and this was way before like you could buy a check mark on Instagram, right? So I used to be DMing Andrew like a fangirl, like, hey bro, you're on fire. Yo, bro, teach me how to trade. He never opened it. He'll never tell you that right now, but he completely played me to the left and never even gave me no response, right? At the time, I had a brother who played in the NFL. So I hit my brother and I said, yo, you got the check mark. He'll see your message, because he also had a lot of followers. So I said, you DM him and tell him that we want to learn how to trade, because this NFL stuff will end one day. Let's learn from him. So he did. They worked something out, and the rest is history. And then we just became like this. What I can tell you as far as finding a mentor, I have been in like 4 or 5 different groups, Discords, Signal chats, all that kind of stuff. I've learned from some of the biggest names. I've gone to some of the bigger guys' conferences and mentorships and all that, and I was still blowing money on accounts. The biggest advice I could give anybody is find a mentor who speaks a language that you understand. If you're on here and Deanna is like, hey, this crude oil thing, she said some really, really, really enlightening things. And I'm like, dude, that's pretty interesting, right? If I hear that and it makes sense to me, then do it.
Yep.
I am very, very, very just like cut and dry. And so when I went to Andrew was like, I said, okay, Andrew, tell me about the delta, gamma, theta, beta. And Andrew was like, man, I don't pay attention to none of that ish. And I was like, oh, okay, all right.
Mm-hmm.
I guess. And because of that, he started speaking to me in languages that I understood. This charting is a whole nother language. The stock market is a whole nother language. So you need to speak to someone who interprets it in a way that you can digest it. And that is the best way for you to find a mentor, because here's the thing. I don't care what you trade. I don't care what your trading style is. There's people who trade flag patterns, levels, indicators, Fibonacci, all that kind of things. You never know which one is going to speak to you. Find the person who speaks your language. And I guarantee you that if you're like, oh, well, Andrew's way is the only way, that's bullshit. That's bull. There's somebody who trades flag patterns who is phenomenal. There's somebody who trades levels who's phenomenal. And just find what works for you. And that's the best way for you to find a mentor.
Awesome.
All right, so
answer.
Wolf make it nice and short and sweet so we can get back in the markets. Just help somebody understand how they would find a or the trading buddy. Your take on trading buddies, real quick, since you and Jay are.
Well, obviously that's where the communities come in, right? So,
Yep.
on here, like there's 4,000 people on here. I mean, there's tell people where you live, right? Or like at least your state, right? Oh, I'm California, or I'm Utah, or I'm Texas. Then you start to reach out, and then you start to connect, and you help each other out. So I'll just keep it sweet like that. In terms of the market, earlier we had ES for a break of 49.20. That was the level that I gave in the pre-market. It's all the way down to 49.06, so about a $14 move, which would have been a nice play the whole trade. NQ, we had a break underneath 17,340. It's currently at 17,290, so it would have been a nice little move there as well. We took a little piece of it, and now I'm just waiting. We still haven't, I wouldn't say we hit our complete low yet, it could still continue to drop. So right now I'm just kind of sitting on my hands, waiting potentially for another setup. But I already have 2 trades that ended up being successful. So
Nice.
nothing for me on this terms of the market yet.
Okay, I love what both of you guys said. And we're going to get back to the markets, but I love what both of you guys said about trading buddies, having a trading buddy that supports you in a community that thinks and all that's like you. Reason why, guys, we were going to like literally carve you out of the community, not you guys, but the trolls in here that come in here is because you're not even helping find a trading buddy. So that's that. Those that are in here that talk and all that are trading buddies, whether we're a big one and a trading team like we have at TopstepTV, or you got people that drop it and be like, hey, hand over the mic. This guy's talking too much, blah, blah, blah. If you guys really want to rewind this and go all the way back to the very beginning for the trolls that do jump in here, and there'll always be a certain percentage of people that are just going to be like misery, I don't know, hateful. But Wolf, you talked about the 17,340s. After it came down and paused at the 17,3, you could have sat here, listened to everything in here, good knowledge, taken notes, stayed patient, and just said, you know what, I'm going to take his 340 play. The 340 play, when it came down, it ripped down to the 340s. It was trading 380s, 370s, and then it ripped down to the 340s. It had a 5, 10, 15-minute pause before it fell out of bed, and now we're trading 290s. So if you're missing the forest through the trees, then you just need to go play Fortnite, dude. Like, it's just like, so pay attention, catch little things, trust a bit. So that's why we're going to have people on here that hopefully you guys feel a little more comfortable with, and they open up like this open-minded, growth-minded type of approach that you're going to take to the market. So you're always learning, and then you're staying patient with TopstepTV, and then you heard a 340 level, 17,340 in the NASDAQ. You're like, I'm just going to take that. I'm going to take that on a one guy, one con, one car, whatever you want, one lot, and then go with it. And we'll put a 20 handle stop. So you would have had that one. I'm not saying this is always going to happen and all that kind of stuff, but if to have a trading buddy, to have a community, and to have it be tight, you need to look at that and find the quality content in here, and to do what you should do as a trader, and that will define you as your trader and your journey and always improving. So that's my rant. We're down here on our lows, literally a couple handles away from our lows on the S&P, and fairly close to our lows on the NASDAQ.
Speaking of communities, Topstep has a amazing Discord. Nearly 40,000 traders are currently in it. There is a link pinned at the top to join it. If that link doesn't work, you can actually just go to Discord and search for our server, Topstep. It is a public server, so it is searchable if that link does not work. And we actually do have a Trading Buddy channel in there that you will get kind of filtered through when you go through our onboarding process. So introduce yourself and find someone who lives close to you. Maybe do a background check or something. Don't meet strangers. And that's it. It's a great community. Almost 40,000, almost 10,000 online as well.
Yep.
So very, very active.
Yeah, and those that are dropping where they're from or any of that kind of stuff, you can do that there. And it's going to have a longer shelf life than the rolling chat here. And then maybe somebody will ping you and be like, yo, I'm from Brooklyn as well. Sweet. Let's meet at this coffee shop or restaurant or bar or cafe and talk shop. And then you go there, and next thing you know, you found a buddy in the neighborhood that is like-minded on one area of your life that you're kind of interested in getting better on with somebody. Sitting on our lows. Here we go.
Yeah. Did you have any mentors growing up for trading crude oil?
Deanna?
For trading crude oil, well, yeah. I mean, I had Hoag, didn't I? The first prop trading company that I worked at, they weren't that kind of specific to instruments. They were just more there to kind of, hey, this is volume profile, off you go now. So it wasn't quite the same. But I really listened to all the stuff that Hoag was saying back in the day. This was like, I don't remember, many years ago now. And I back tested everything. So I started blending what I already knew to be true from my own experience at that point. And obviously, crude oil has always been very technical to me. I was always able to read it really well. But actually, Hoag was using crude oil to explain some of the auction process. Even though he doesn't actively trade it, he was still very good at reading it. So I just like ate it all up, man. Like whatever he was saying, I was just like, wow, this is amazing. Wow, I love this. So Hoag was my mentor, one of the major influences in my life.
I think he's
Hogan's
influenced
a great.
a lot of people in chat.
Yeah, he has hundreds and hundreds. So much so that I remember him yelling at me, turning around. He's doing some like spreadsheet work and all that. This is probably in 2014, 15, 14, 15, 13. And he just turns around. He's like, all I want to do is help traders be better. And he was doing like inputting stuff on spreadsheets because we had to do that. We didn't have a deep bench of a team like we do now. And probably, I don't know, 10, 15 people. And now we got 100 and plus or whatever at TopStep, helping make sure the support team, a marketing team's communication team, and framing out, different events that are happening, tech team, TV team, finance team, funding team. So back in the day, he was wearing multiple hats. Kudos to Hoag if you're listening. In bed right now. Hopefully you're just chilling, even though I think you're jumping in here in about an hour or so. So yes.
Well, he shouldn't be hungover. He should just be sleeping in.
There you go.
$1,000 on the line. 1,000 on the line.
1,000 on the line for sure.
That is good. Oh, there was a question in chat from Timmy Tuto. How do you guys ID different market conditions, trending, ranging, etc.? We can go around the horn, just do a little bit of everybody, because we can do one for crude oil, one for NASDAQ. How do you all kind of figure out what the market's doing? If you guys want to go through it real quick. Start with D.
How do I? Sorry, what was that? I was reading the chat.
How do you ID? Chat's getting to you. Oh boy. How do you ID different market conditions?
Different market conditions. Yes, of course. Yeah, I did hear that somewhere in the back of my head.
Oh, okay.
Yeah. So the first step for me would be to see where the market is opening today in relation to the previous distribution curve, which us profile traders like to call the value area. I will then also see where we are in a very large time frame. I think Andrew talked about the bird's eye view. I do the same thing. So every day I will look at the daily chart, 4-hour chart, 1-hour chart, 30-minute. Like I just drill it down from a top down. So higher time frames, and then just trying to match everything up. So if I get an inside day open like today, the first setup that I will look for would be the rejection of the value area. Now, depending on when that happens in the day, the stats over the success of that setup will vary. And I'm a statistician, so my big comfort zone is knowing the probabilities of all the setups that I take and the time of day when they work out. If I have a gap day, and depending on the size of the gap, if we have like just a little bit of a gap, I will look for a gap fill. But if the gap is enormous, so we're opening miles away from where we were yesterday, that usually tends to be either a partial gap fill or it ends up in a range-bound day. So all of that will play into my ability to correctly identify the day. And obviously, I'm not perfect. Nobody is. Perfection in trading doesn't exist. But the best that you can do is just to see where the market opened, track your data. Again, we talked about this as well. And see how many times you can actually take advantage of what you're seeing. Typically, if you get an early value rejection on crude oil, that tends to open up the possibility for an auction in the same direction like we've had today. Whether it continues, that's a little bit difficult on crude oil because it's a very double-sided instrument. We're seeing that today. But the second thing that you might want to look at if you don't get that early value rejection is a range-bound day. So just assume that we're not going to get some crazy momentum and breakout and just try and play the range. So again, all of these things should help you almost like systematically eliminate what can happen. But obviously you need some pretty decent tools. I prefer to use supply and demand for higher time frames, market profile with all of its little components for intraday, and then also my average session and average daily ranges. So I have my own twist on the average daily range, as you guys already know. And all of that literally forms every part of the method that I coined the Market Stalkers method, because it's got these like 3 different areas of, like, let's say, pillars of support. And then the final one, the 4th one, is the time of day. So I want to see something happen, not just randomly, but at a very particular time of day, usually within a 90-minute period. And then again, after lunchtime in New York, as we head into settlement, I want to see yet another reversal. Now, if any of that is not matching my assumptions and stats that I know are true, I will be like, okay, hold on, I need another hypo here. Because I work off of hypothesis. You've seen me write them on the fly as well. And yeah, so as long as you can find some kind of a way not to involve your inner critic and random thoughts just based on whatever you're seeing move. So have some sort of orientation points that should help you greatly to improve your results.
Hey,
Nice.
really
Thank
quick, you
Andrew.
guys, on ES, I just closed out my position. This is going to be the very first candle we see that closes above the 9 since the market opened. So I am now out of I came back to my entry point and I'm out of ES.
Nice. What was the profit on that, or what was the result? Let's say.
I caught 35% on the way down, the first move, and I caught 40%. I'm sorry, 25% on my second entry.
Nice. And then, Andrew, how were you looking at the market in the morning? I think earlier you said that you do a top down, but just a quick recap. How do you kind of figure out we're doing range day, trend day, and how do you approach that?
Well, number one, you'll never know whether you're in a range day or trend day, right? But every single day I start off on my pre-market, I do a top-down analysis. I start on the 3-year chart if I need to. I draw my levels, then I go to the 1 year, I draw my levels, then I go to the month chart, and then the week, the 5-day, 5-minute chart. I try to do only a max of 2 levels per chart if I need to. I try not to have my chart completely covered with lines. I want to make sure I have really good solid levels. So again, less is more. And then from there, in the pre-market, I'll formulate my hypothesis to kind of see what I would do for a call trade, what I would do for a put trade. Like today, for ES, we had the level at 49.21. And so I said if it breaks underneath 49.20, I would be looking for that short. It went underneath 49.20, and it went all the way down here to 49.04. Okay, so that was a 16-point move. Same thing with NQ. I had my levels. I said if it broke underneath that 17,540, which I said also during the pre-market, 340 that I said during the pre-market and during our live as we were trading the first half hour. I said if it broke underneath that level, we saw it break, came down a quick 10 points, would have been a nice return. And I just wait. And then so long as it stays underneath my indicators, I'll hang on to the trade. So like right now, we just hit that low and it's bouncing up. But also right now doesn't mean I'm just going to jump into a call trade because we still have all those indicators that can hold up as resistance. So that 9 EMA, that 20 EMA now can be resistance. It could come a touch here and drop right back down. So the last thing I want to do right now is look to buy a call trade. Now, my style is different. Some people would have saw all the support and started to add into a call trade and look for the reversal. I don't look for those trades. I like a breakout in conjunction of a level with my indicators. And then from there, I just wait. So I never know if, it's going to be a range day. Oh, it's going to be a trend day. I just let the chart play out. I use my risk management and my strategy to cover my profit when I'm in. And then the rest is that. So that's kind of how I go.
Perfect. Just some brief news in CL. CL bounced almost 80 cents off of 76 evens in about 10 minutes. So that if that's a one-lot trade and you caught 76, that's an $800 move in 10 minutes.
I'm short again, by the way. I'm short crude oil again. 76.66.
Nice. It's the beauty of crude oil. It's some really nice movement in that market. It's a fast move on the way up.
Mm-hmm.
So for FOMC, do you guys typically? Sorry, go ahead, Steve.
No, I like you guys. You guys keep talking about letting the market come to you, and you said reactive, not predictive, in the beginning, Wolf.
Yeah.
And I think that's really a special thing to note for traders. Because I think when you become predictive, you can watch, and then you guys also said don't watch the charts all day long. You watch the charts all day long, you will start to think you're perceiving something, start to get this predictive mode, and then start to be, I'm going to get in it early. Look, I did that probably a lot in January, especially as behind the 8 ball and taking heat in my account. So I'm like, I'm going to get in this early instead of waiting for to be reactive. Now, that's the thing. I just put it in my notes. on that. Look, I got a lot of things to work on, but for me, it's very helpful to hear you guys say that because where's it at? I have it in here. We don't predict as a trader. I have a couple cards in here. If I find it, I will play it. I always had not trading cards like I don't know. I mean, it's a different one. Like I used to have these in the trading pit. This is one's just like small ball, chip away, brick by brick. That's how you build. That's how you become a winner as a trader. These are little things that connected with me. It's no different than journaling. But I like what you guys are saying about reactive, not predictive. And then that's kind of just shows that you're patient and that you know the areas that you want to stay a little bit more focused on, so then you can be in that reactive stage and you can see it happen and you can pounce on it.
100%. 100%.
And CL is still pushing higher.
Yeah, we got 30 minutes left of fast markets. Guys, if you have questions, we're gonna kind of answer those. Wolf, what indicators and settings are you using?
I use the 9, the 20, and the 50. And then I just draw my support.
SMA, or is those moving averages?
Exponential moving averages.
Exponential, got it. Why do you choose the exponential over the simple?
Just because the trend's closer to the candle movement. So I want to have like a true trend. And again, it goes back to metrics, right? So I would have tried simple before in my trading career. And using this 9 exponential moving average along with in conjunction with the 20 and levels, I have a high probability of success, which point proven today. And I just ended up staying with those.
Okay.
Nice. And there's a question from Traditional Buck. I have a question for Wolf and Jay. I'm a bookworm, so I'm wondering, what are the books you recommend for mastering mentality? Jay had mentioned the books earlier. What are a few of those examples? I think you mentioned some trading books earlier. Was there any books that you used for mentality specifically?
So trading books, Trading in the Zone, Market Wizards, The Disciplined Trader, Mastering Trading Psychology. It's a really good book. It's by Andrew Aziz. Those are directly related to trading. The Mental Game of Trading is another one, like 4. But then outside of trading books that I would recommend you look at is The Power of Discipline, because if you don't have discipline to follow your trading strategy or your risk management, you're never going to be successful in this. So that's a really good book of how to build your discipline in all things of life. And then Atomic Habits. So I would say those 6 in conjunction with each other would make for some really good stuff. But here's the thing. Reading is just reading. And unless you're implementing it, you're not helping yourself.
Yep. That's why we started TopStep in general, is to have experiential learning platform with a funding opportunity evaluation in it. So that to me is extremely important. I do value the simulated experience more than I value the live experience. This is me. I went to the live experience, got smoked, and then went to the simulated experience, learned the importance of that, was with a prop firm that kept you on sim. And if you blew out on sim, they put you back to sim, and kind of got that until you had this trader development. And you're working with other traders, so it's not just in your room. So I like that approach.
Yeah, did you ever read any of those books, MP? Like Atomic Habits, anything like that?
Yeah, the Road Less Traveled by Scott Peck. Yeah, the big part about that was he's like a psychologist. I had a trading psychologist that I would go to when I was like 21. That was my investment, and he recommended that book. Read that book, and it's like you need discipline in your life to even like move forward in your life in an impactful way. Whether you're waking up every morning and you like, if you don't have discipline, are you like taking a shower? Are you brushing your teeth? Those are things you got to stop and do and take the time to do. And if you don't do that, your hygiene, your teeth fall. I don't know. I mean, like this, you do it. So find little things, and it was all about finding little things in your life that you do have discipline in, and then take the time to learn to have discipline in other areas. And that's to me like before that I had already lost like 100 grand. So to me, there was no discipline. It was a lot of kind of what the attitude of other traders that aren't Topstep community have of like YOLO or just I'm going to be right. I don't need to stop because it's going up, all that kind of stuff. That was the rookie trading. Those are rookie traders. Those aren't experienced traders. Those are ones that are just catching a little bit of a hot streak. Next thing you know, they do think they're God's gift to trading. I have been there before. And then next thing you know, and then you get put in check by the markets and all that kind of stuff. So, and the other one was Zen Golf. They said Zen Golf to change the word golf to trading, and it aligns. That's just a short little read. Those are the two ones. The other one is the Day Trading Coach, and Brett Steenbarger's book, Enhancing Trader Performance. These are really all about discipline psychology because, like for me, I'm like I don't need a book about charting. I don't need a book about, like products to trade, but the psychological part is really where the real work, in my opinion, starts to show up. I don't know if you guys like the psychological part was a big was the big hurdle in the forever like thing that you're working on still to this day. But for me, that was always the one that would get the best of bad habits die hard and things like that. They all creep back up. So that was my take. That's my take.
And I think if you talk to anybody who's doing anything, we all have the same thing. You talk to somebody who's in really good shape and you're like, hey man, how'd you do it? They say diet and exercise. And you're like, man, there's gotta be an easier way. You talk to somebody who's like financially really, really well off. And you're like, how'd you do it? And they're like, man, I was really disciplined and I took, risk. And you're like, it gotta be something else. It's the same thing in trading. It's like the risk management and the discipline. If you talk to any real successful trader, I guarantee you that most of what they're going to say is going to boil down to those two things. And a lot of times we ignore those two. We're like, no, it has to be something else. It has to be some sort of secret thing you're doing, but it's not. It's just those two.
It's a big thing. It's very different in the world I think that we're living in now, especially with the social media. And I'm not going to be that old geezer that's blah, blah, blah. But delayed gratification doesn't get as much emphasis on the importance of it because we get fed shit, whatever we want, whenever we want, eat whatever we want, digesting any information and content and blah, blah, blah. And we get this instinct and whatever triggers in your brain and all that kind of stuff. Delayed gratification is what discipline is really instilling in you. That's why I always say, like, do the hard things first. Like people are like, no, I'm going to do easy first. And then the hard thing, I don't know, it's not going to get to. Procrastinate. So for me, it was like learning delayed gratification and the importance of it. People that get themselves into shape, they don't see anything after their first workout or after their first change in diet. You see these 90-day pictures. What is this, 72 hard, 75 hard? Like 75 days later? Hard. Yeah, something like that. My brother was doing it. Dude's ripped. And I'm like, wow, damn. He's like, yeah, I'm doing 75 hard with my girlfriend. I'm like, wow. And 75 days of like training and disciplining yourself. You get before and after pictures. You see them on the Jenny Craigs or the Weight Watchers. Those are the people in their program that actually stay disciplined. We always said a little bit of it. It's like Topstep or what we have is like, it's kind of like a Weight Watch program. Some people want it quick. And some people will hear it and will go in one ear out the other. And some people actually do it and it'll make a freaking big difference in their life. But it's later and it's only like days, months, I would say, later, like building a new habit. I think there's also a time period that psychologists would say about the length it takes to build a new habit. But like that's delayed gratification. I think it's so damn important because it puts you in a new you environment that you're working into every single day as an individual because you took the time 30, 60, 75 days ago to make those changes. So,
yeah. And you have everyone who asked me like over my first year how it happened, Andrew will tell you, I didn't even look at like my P&L for a long time. I just was focused on being green. And what happened was I was just trying to make like 100 to 250 bucks a day was my thing. But most times I was making over that. But that was my goal for my very first year. And then I decided a couple months later, let me just check and see where my account is at. And I had I looked at it and it had already hit 6 figures within like 7 months. And I was like, whoa, did I add some more money to this account? I had to go look at did I move some money over? And it was just, so I think to your point, it was just those small little base hits. And when I look back at my trades, it was $300, $500, $200, red day negative $50. All of those things were so much more important to the long term of what my account ended up being over the year, because I was okay with just taking those small little base hits. And I didn't worry about, I was treating it at first like it was a slam dunk contest. Like I needed to come in and hit it out the park every single day.
Yeah. Well, I love Jay. So I love where your head's at, because I have this. This is from like 10 or 15 years ago, easily. Small ball, brick by brick. And we talk about all the time, base hits win ball games. And not everybody's like, oh, this baseball. Like, I'm from Europe and like we don't play. But I mean, you get it. Like jab, jab, jab. If you like little things in life, little daily improvements. There's like a Chinese proverb on this or something like that. Little daily improvements add up big time when you look back at those. So, hey, really quickly, do you guys journal? I mean, Wolf, you probably journal on the notepad or the paint. So,
I've taken track of every single trade I've had since 2017. So it's about 16,000 lines of data, or 1,600 lines of data. And I ask myself those questions. Why did I get in? Why didn't I get out? Did I hold too long? Why did I set my stop right here? I have every single decision that I've ever made in the market tracked on an Excel file. And then I quantify the non-quantifiable data by adding like a number, right? So like if my strategy is I use the 9 to 20 EMA and levels, I'll call that like strategy 1. And let's say I had a strategy of using fib retracements, I'll call that strategy number 2. And then I just track all this data, and then I have charts that then I could then open up, and then or pivot tables, and I could open up and then look and see, hey, here is where I'm successful. Like an example, I've had students before that every single time they trade the first 5-minute candle, they lose. And I'm like, your data is telling you that every time you take the first 5-minute candle trade, no matter what, you're losing. So guess what? Stop fucking trading the first 5-minute candle, right? Like let your data help you with that. So yeah, I journal all the time. I use an Excel sheet, and in that Excel sheet, I'll track all that, and then I ask the big questions of why. And when you can understand the why, then you really start to think of trading in a whole different perspective.
yeah. Okay, cool. The other point I was going to make on this one is, do you guys hear the difference? And Riley, yeah, we're going to quiet you if you're saying stupid shit, bro. So get out of here.
Already
If you're
done.
saying stupid shit, we're going to quiet you. Yeah, beat it. Or be cool. That's it. Like I'm not nothing personal. Just beat it or be cool. Do you guys? I'm going to everybody that's listening. Do you guys see the difference between what these guys are saying versus? I'm not going to pick on anybody that was on yesterday, but like other traders are saying, these guys are talking about putting in the work, taking 16,000 lines of journaling, and the hard work that it takes to do all that, the time you have to spend. It's not just click, 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 and then you're done for the day. Like I come in and I don't prepare, okay, because I'm driving and I'm not waking up at 5 a.m. and then having a 16-hour day because I got to do CEO and I got to do dad and I got to do pickup and I got to do all that, and I want to have a life too. So I'm not preparing. So that already hits me. That little thing already hits me. You guys can see it and all that. And I talk about that. Preparation, the work, the dedication, the grit, all that it takes to make in this business. That's why I want to say, guys, I know we're going to be wrapping up here soon, but I want to say thank you guys for all this, but we're not wrapping up soon. But this is the difference between putting the time and the effort and the work. Deanna, she's been doing that. She's been like, you can see how she studies the markets. You can see how she doesn't come on here and nobody comes on here. They have in the past. This is easy peasy. I just made a 70 grand and I'm not this easy peasy. That's smoke and mirrors. It's Jenny Craig of Weight Watchers that says, like you can lose all the weight you want to lose without doing anything, man. It's easy. That's not true. So, and that's my experience. Maybe in your experience, you see something different, to each its own. But in my experience, the hard work pays off. The delayed gratification pays you back. And the markets, or I said the undisciplined pay the markets, and the disciplined get paid by the markets is what I always learned.
Yeah, that's. I mean, we were talking about this yesterday. Go ahead.
I'm just quickly. I'm out of my trade. I grabbed about 20 ticks because obviously I don't want to keep a trade open at this time of the day. So yeah, I just grabbed a quick 20 ticks and I'm out. So flat.
Nice. That's an easy 200 on a one lot.
Yep.
Yeah, we were talking about this yesterday on Power Hour with Dakota. And one of the nice things about being able to bring in all of these traders who have such good experience is I'm now able to kind of piece together what it takes to actually become a professional. And it's like reviewing my own trading. I'm only doing like half the puzzle, but the other half is all the risk management, all the prep work. And whether you're, Jay, Andrew, Rips, Danny's trades, every single person has their own system that they follow to a T at 110%. Or I feel like maybe a lot of amateur traders only have a piece of that, but don't have yet the full thing. Jay, would you feel like that was a pretty accurate description of the kind of the difference between maybe like an amateur trader and someone who's truly a professional?
Yeah, absolutely. If you look at like even when I'm on live with Andrew, a lot of times Andrew will sit and he'll go, "I'm gonna wait," and I'm still very anxious. I'm like, and not only that, I'm a very high risk trader. I jump in all kinds of crazy stuff. And I've had to learn that that's what my natural personality is. So I'll go, I'm in. And Andrew's like, I don't really like the entry there. He's just so much more patient and calm. And he's willing to maybe miss out on some price action. It very rarely works where I'm like, you should have got in earlier. Most times he's right because his patience sits there and then I end up getting stopped out. And I'm like, damn. So that's, I 100% agree with you.
It goes to the
I think the ability to stay calm during a drawdown, like when you're not maybe reading the market well, that's like almost a superpower, but it is one that you have to develop as a professional trader. Otherwise, you will never have longevity. If you're going to get emotional every time you lose a trade, then, maybe rethink day trading. Losses are part of the game, right? So we all have to just learn to be okay with being wrong, as long as we have the numbers on our side. This is why I like the 2-to-1 risk reward rather than just scalping all the time, because I hate doing a lot of work for not a lot of money. So that's why I look for greater opportunities that will give me that. And it's not like I don't scalp. I will do a scalp here and there, but it is very much situational and very much dependent on whether I can actually see a setup. I will not just scalp for the sake of it. There still needs to be a very strong reason for me to go into a trade. And again, some days that's not great because the market, just kind of flattens on you and you're like, it's a range-bound trade now. And I'm in the middle. Great, looking for momentum. And then you have to adapt your understanding of what is happening and maybe try, a different strategy that day when you see the market change in front of you. So you have to have that flexibility. We talk about flexibility. MP talks about flexibility a lot. It is a huge part of being a trader, but so is staying calm in light of a challenging situation, which is a losing trade. Yeah,
that was excellent. And then we are wrapping up here. We are 4 minutes to 10:30. We have Shoulder Tap coming up with Mick and Hoag, everyone's favorite segment. It looks like chat absolutely loved Jay and Andrew today. Definitely want to have you guys back. Chat was eating it up. Jay and Andrew, I'm going to give you guys some final words. If you can wrap it up real fast. Any advice for the traders out there and any socials or anything that you guys have currently that you want to plug?
Go ahead, Jay.
First and foremost, thank you guys for having me on. Andrew, thanks for, definitely, getting me on here. Thank you guys so much. The final words of wisdom or advice I would share with everyone is that the process is, I use this saying all the time, that the way to the top, you got to take the stairs. There's no escalator, right? You got to put in the work. You have to take your time. And if you're dedicated to something, you're going to go far. But if you get frustrated easy or, you're looking to not learn, you just want to quick buy signals and stuff like that, it's going to be a very long road. So stay at it, you guys. It's possible. I would say that one of the fastest ways to kind of shorten your learning curve is to find a mentor or a trading buddy and hold yourself accountable to development and learning. Thank you guys again. If you guys want to follow me on Instagram, my Instagram is JDidTheDeal, JAYDIDTHEDEAL. And if you guys do follow Wolf, make sure that you guys follow the right Stock Market Wolf. He's probably one of the most spammed accounts that I've ever come across. So make sure that you spell out his right. And I've put it in the chat like 100 times. He's never going to ask you to give him crypto, and he doesn't want to trade for you. So just be aware. Thank you guys so much for having me, man. This was awesome. I look forward to seeing you guys again.
Hey, appreciate it. Stock Market Wolf, 15 seconds. What do you got for chat for us?
15 seconds. I hope you guys had a good day. I hope that you guys learned something today. And at the end of the day, what you put in is what you get out, right? And it all comes down to effort and knowing what it is that you're doing. So the only person that needs to believe in you is yourself. So when you go to sleep at night, when you look in the mirror, ask yourself if you did enough. And if the answer is yes, then you didn't do enough. You got to always say, hey, I went above and beyond today. It's 1% better every day or 1% worse every day. There's no middle. So keep striving to be the best you can be in all aspects of life, health, wealth, love, and happiness. And I wish you all the best. And we'll see if I get on here another time. In terms of levels, just real quick, ES, I talked about that 20 EMA. We just rejected off of that. So I'm glad I didn't take a call trade. It looks like it's going to come back down. Just stay patient and delay that gratification. Catch you guys later. If you guys want to follow me,
this is the type of folks that I love having on here. And Wolf, if you want to come on here, not if we want you back. The room wants you back, guys. I heard these guys are badass. They're legit. Let's get them back, genuine and honest. I do. And what you guys are saying, I align with the work that goes into it, thought process, and believing in yourself and keep jabbing away. You did that with your backstory, guys. If you didn't hear his backstory, it was an opening call. This will be, as always, our broadcast. You can tune back in at the end of the day or rewind if it was already on. So thanks for coming on, Jay, Wolf, Deanna. Always a pleasure. Nice drive in the car, Dolby. Thanks, James, for being in the back. Thanks, Robert and Danielle and Eric and Martin and everybody helping out. If I missed anybody, I apologize. But I'm done for the day as well. And great trading with you guys. Great learning. If you got one thing out of today, it should have been at least the 17,340s. And if it breaks those, it sells off. You would have had something there that you could have sunk your teeth into. If you missed that, hopefully you filled up the think tank with everything that they were just talking about. We're done for the day. Fast Markets. Thanks for joining us, guys.
good morning, everyone. I'm back, and just in time for the favorites segment here, Shoulder Tap. Good morning, Mick. How are you?
Good morning, John. You're going to make me blush. I'm doing well. How are you? How was that Bulls
Doing
game
well.
last night?
It was a lot of fun. I haven't been to a Bulls game in quite some time. We got to do a shoot around on the court. Had some dinner and got to watch the game, and it was a wonderful opportunity again to go watch the Bulls play. And thanks very much to Plus 500, our hosts, very gracious. We had a really good time. Got to see some old friends, make some new friends. It's a really good time. I was glad to be able to do that. It was a good time. Thanks for asking, Mick.
I'm happy to hear that. It looked like a good time. I was a little envious, not gonna lie. And I saw a video you doing a layup. Nice form out there, John.
Yeah, right. Yeah, I was gonna stuff one, but I figured, didn't want to show everybody else up.
I used to be able to dunk back in the day, one-handed, not two hands. Do you remember for my my walk-in song for the wedding? We had the Bulls theme song, and we had that Ray Clay, who did the stuff. He actually announced it. I don't think he's the announcer anymore, but he was. That was. Anyways, it was something. It was the one thing I got to pick out for my wedding, so I remember it well because my wife and mother-in-law did everything else. Thankfully, there were a lot of moving parts there.
There are a few things I remember from your wedding, but not a lot.
Well, we're not here to talk about the wedding. I just had to mention it. Glad you guys had a good time. It looked like an awesome time. We got FOMC Day today.
Yes, we do.
FOMC Day today, and a little movement in the market so far this morning, to the downside in the equities. I'm actually surprised that I don't have too much in the way of like trading activity or like a lot of big numbers, with that downside move, especially in the NASDAQ, which is the laggard today. There wasn't really anybody on the live side of things or the XFA side of things, our funded traders, that caught a big move to the downside with size on. So I don't have, any 5-figure winning days to be reporting today. We got 3 trading cards.
Do you figure they're probably holding their bullets till later on when maybe we'll see a little bit of volatility?
Well, I certainly hope so, because before we get into the trading cards, I was going to kind of talk about FOMC days, my stance on them, as a trader, and then my stance on them as someone who watches the risk for, a firm. So FOMC days are always wild card days, despite, us. We already have the prediction that they're not going to change rates from 5.5%. So, you consider that's priced in, even when things are priced in and, priced in, maybe not, I don't know, but you assume that it's priced in. They're not predicting any changes, but there could be changes. Typically those predictions are accurate though. It's always a good day to sit on the hands as a trader. That's what I would do. That's what I like seeing other traders of ours do also, whether you're trading smaller size or, you're just kind of an observer, because it's a wild card. I don't want to get into it too much, but, from a risk standpoint and watching our traders, it's a concerning day for me all day long. With these violent spikes that we could see, regardless of how the number comes out. I mean, it's always something that I worry about, traders getting caught on the wrong side of moves, traders, going long, following the trend off the initial spike, maybe buying highs only for the market to, ratchet back against them. Or, people, just getting in with too much leverage. And I think even, one contract is a lot of leverage to be trading around this. It's one of those things that we as speculators, discretionary traders, flip a coin. Maybe you make money or you lose money. I know that there's the allure there to get in, put risk on, and participate because there's the potential for large rewards there. But, the way I look at it is, if you're making big money today trading off the number, even if it's coming out as expected, there's an element of luck to it. And I don't think that traders that seek luck or, flip a coin, heads I'm long, tails I'm short kind of thing, those traders don't have long careers in this industry. So I always respect people that trade the markets based off of their strategy. I don't know who's got FOMC spikes and volatility in their strategy unless they're trading options. So
Right.
from a futures trader standpoint, risk standpoint, I like seeing that we don't have, a lot of activity today. I'll remind traders about the last FOMC. It actually might have been the second to last FOMC statement when, Hughes, our live trader out of France, who had gotten his account up above $100,000, he was up 15 grand coming into the FOMC statement. Seconds after 1 o'clock Central Time, when that came out, started shorting the market one lot at a time, cannonballed all the way up, and he turned his $15,000 winning day into a $3,000 losing day. That's an 18 grand swing in 5 minutes, a little less than 5 minutes. It was like 4 minutes and 50 seconds. And if that's not a kick in the gut or below, I don't know what is. So just be careful out there, traders. This is a good day to, you could, if there's a spike and you are on the right side of the market, you could be up a grand in a second. So I'll go back to our job here. Our number one goal is preserving capital. If you've had a good week through Wednesday, it's been a tough trade all week. I forgot to mention we had 2 XFA to live call-ups yesterday and 2 off-boards yesterday. And it's been quiet on the call-ups and off-boards, in the first 2 days of the week. So
we're still a net zero for the week.
We are, yeah. There's not much going on. So if you're ahead, protect it. If you're behind, don't try and chase it. If you're looking to make money back, it's better implementing your strategy in a market environment that's, giving you your strategy or giving your strategy a setup. So anyways, I'm done with the FOMC. We're going to keep a close eye on everybody around 1 o'clock today and leading up to 1 o'clock. I'm looking at, who's got big positions coming into the 1 o'clock number. We used to require people to be flat 1 minute before and 1 minute after these releases. It's not a rule anymore. Personally, I wish it still were because I like protecting the traders, but it's not. We let you guys manage your own risk. So anyways, I do have a couple shout outs for the day though. Live traders, shout out to David up $3,200. Shout out to Avinash up $2,500. We got another David A up $3,500. And then John, our guy, Isaac Rivera, he's up $2,800 today.
Beautiful. Good job.
I'm really happy to see that. That's good performance. And then I'll mention we got Rips. Rips is down on the day today, snapped a 9-day winning streak. It was a massive 9-day winning streak. I know he's coming on later this afternoon, so maybe he can talk about that a little bit. But over the scheme of things, this was 9 consecutive winning days, followed by the 10th being a losing day. He's still well ahead, and I was cheering him on. I've been cheering him on. I like what he's doing. He's been making really good trades lately. So no doubt that'll come back. So I just thought I'd mention that for the sake of content. But moving away from the shout outs, I guess this is a shout out. This is a trader we called up from XFA to live yesterday. Let's pull up a trading card for Timothy. And we have some really good stuff to look at here with Timothy. Timothy has been a bit of a singles hitter that is kind of flying under the radar because of his small winning days. Average daily P&L, $210, John, over 50 trading days in his XFA. 50 trading days.
Stacking bricks,
lights out trading. 92% winning days. 92% winning days out of 50 days. Frickin' phenomenal. 82% winning trades out of 50 days. Phenomenal. Trading one lots tells me he's consistently profitable and he's happy staying in his comfort zone. If he ever wanted to get out of that comfort zone or expand his comfort zone, I guess, for a better way to phrase it. This kind of activity is really scalable. He's averaging $500 on his winning days. What's not scalable, though, and I want to talk about this, every losing day out of those 50 days, which there weren't too many of them, I think the math pans out to 4 losing days out of 50, puts you at 92% winning days.
Sure.
maybe my napkin math is wrong in my head right now, but each one of those losing days was for hit the daily loss limit on the 150K. So stopped out at by the auto liquidators at 3,000. So those 4 losing days on average were about $3,400. So if he wasn't so consistently profitable, to the tune of $500 a day on average on his winning days, we might have a problem here. But I tend to think that Timothy's got a really good short time frame strategy, because the hold times aren't very long, but
Not long at all.
It's extremely impressive to maintain these high winning trade percentages and winning day percentages over a 50 session sample size. That's 10 weeks straight, where you're right over 90% of the time. So, hey, this guy's good. And if he can continue doing, even just a fraction of what he's done in this XFA and the live account, I'm going to be a really happy camper, as well as, the entire risk team and the firm. I want to put into a little perspective, though, these 4 losing days of about $3,400 or more. So daily loss limit hit 4 times. Call it over $12,000. Those 4 losing days of 3,000.
Sure.
Times 3,000, 12,000. At $500 a day average on the winners, it took Timothy 25 winning days to make up 4 losing days. Now, I'm singing his praise right now, but that is ass backwards right there. You do not want to have to put up, and again, it's working for him. I truly believe that he's so accustomed and used to being correct on his trades that when it goes against him, maybe a little bit flabbergasted, but you don't want to be having to put up 25 winning days to make up for the 4 losing days. I think that's kind of, clear as day right there. And that's really the only thing that I could say, Tim needs to focus on, because everything else is just great. It's a highly successful strategy I encourage him to scale that strategy. You go from trading 1 lots to 2 lots. Now your average daily P&L is $210. Average winning day is probably going to be $1,000, and kind of leads me into a good story about, people. We've talked about it before, John. You've heard it. I've heard it. Traders saying, well, I want to average $1,000 in profits every single day. And we've talked about how that's not really a good way to approach it and look at it. But the way to determine what you could truly be averaging on a daily basis, this is an example of a large sample size, 50 trading days. So Timothy could be saying to himself, if I keep doing what I'm doing, I can realistically average $500 on my winning days, or average $210 per day if you factor in those big losses, which don't come about too much. But, if Timothy ever wanted to scale his business and say, I think I can average, and I would like to average, $1,000 a day, he's got his he's got his roadmap there. He's got his data there to actually justify that. And from that data, he can tell himself what he needs to do to get there. Because with a large sample size like this, it's very realistic to say, well, I go from 1 to 2s. Now my average daily P&L is $420. I go from 2 to 3s, so on and so forth. So it's a good example for everybody out there who, wants to take down X amount during the day. And I'll always say it, you're only going to be able to take down what the market, presents to you. If there's a narrow range, and you're trading small size, then you're limited to that. If it's a narrow range and you're someone who will put on larger size and larger and smaller ranges, then, maybe there's that there. But anyways, Timothy, really good stuff. This is a huge shout out. I'm freaking pumped to get him onto a live account. And
one thing, if I could say something about Timothy is, we say this a lot, Mick, and we're going to say it again. The average winning day, $500. Do you have any business losing more than your average winning day on any given day? Now, on top of that, a couple of these daily loss limit days, he was actually up more than his average daily profit on those days, and then ended up turning things around and then hitting the daily loss limit. A couple of things that he did do. I mean, he was down 1,000 one day, ended the day up 465. Is that in process and strategy, or is that just kind of reinforcing bad behavior? You know, there's only one day here that it looks like he started out down and ended up hitting his daily loss limit, but on all the other days, he was actually up about his average daily profit or more, and then just buried the day on those days. Emotion may be a little bit of an issue here. Timothy, you know, I think you've got a really good thing going on. You know, like Mick says, if you start to scale slowly, you know, that move from one contract to two contracts doubles your risk, and it's going to change your thought process and your mental state a little bit by doubling the risk in that. But if you can do that for a long time, keep building the account, and then add that third contract, which is just third again as much risk. I agree, Mick. This trader should watch his downside and keep positive days and begin to scale his strategy.
I'm happy you brought all that up. Really good things to note. And I wasn't going to mention any of that before we moved on to the next card, but since you did bring it up, John, a couple things there. You know, if you're averaging $500 a day, and what was his biggest winning day? $2,700. So,
right. Yep.
You know, he didn't have a lot of four-figure winning days. 2,700. There's three four-figure winning days. So definitely, you know, anything over 1,000 significant profits for Timothy. As you were talking about him being up on those losing days, you know, made me think about how we say, you know, when you're up ahead, you've taken 2 steps forward, only take 1 step back. Something Timothy could do is, you know, hey, I'm up 500. You know, if I go back to 0, 2 steps forward, 2 steps back, maybe call it a day, because like John mentioned, we'd seen what's happened a couple times on those days that you actually were up money. So if you could have done that, and I'm not going to spend the time looking through how many of those 4 losing days was he up 500 or more, John?
One day he was up 317. The next day he was that was when he started down. His P&L was never higher in closed positioning on that second day. He was up 106 on the second and up 175 on the third. So out of 4 days that he hit his daily loss limit, he was up at least a little bit on those days. The one day he started out down, and it just got worse.
Yeah, I'm not seeing anything too significant there. All right, so forget what I was going to say there. But the last thing I'll say before we move on, if, like John said, no business risking more than you're making on average in any given day. So if we took those $3,000 or $3,000 plus losing days, there were 4 of them. Remember, let's do the math here. If we limited those 4 losing days to $500, that comes out to 2,000 in losses. Now, I told you of those 4 losing days of 3,000 or more, it was over 12,000. So 2,000 versus 12,000 plus, we're talking about a $10,000 difference there in 4 days just by changing your habits and how you're calling it a day right there. So I'm happy you mentioned that, John. I think that $10,000 difference, just about changing behaviors on 4 little days, a small tweak, turns out to be, you know, a lot of dough. Who doesn't need an extra 10 grand, right? All right. Let's pull up.
Everybody can use an extra 10 grand, right?
Yeah, come on. Let's go.
Let's go.
It's not chump change. All right. I've got a shoulder tap for the next person I want to pull up. If we could pull up Ben's card. Ben is a live trader, and I want to talk about him because I've been working late lately, sticking around, trying to get everything that I need to get done. And I'm sitting here at the desk, you know, past 5 o'clock some of these nights, and I see what people are doing on the 5 o'clock open. And I kind of, because of Ben, he's been slapping on 15 lots at like 5 o'clock every single afternoon with wide stops and wide take profits. And it's bothered me. So that alone wanted me to talk about him a little bit. I didn't know if he was going to be a full trading card today, but I pulled up his trading activity, and we're talking about him now. So Ben is in a live account. We got a hot mic somewhere. Ben's been in a live account for 10 short days. And as you can see from his average daily P&L, he's not making any money. Very low winning trades, very low winning days. Again, small sample size. So,
Right.
And that the stats there are based off of 9 trading days that are reflected in the trade report. Today's his 10th day. He hit his $3,000 daily loss limit in the evening last night. And I just wanted to talk about him because I don't think anybody has any business slapping 15 contracts on at 5 p.m. in the evening. You don't have market participation there to push the market around. Not the big boys and girls that actually move the markets and during the period of time, 7 a.m. Central to 11, where all the volume comes in. So my own opinion, this is a bit of gambling, and it's not worth risking what he's risking to take shots or gamble. Also, Ben has been trading 15 contracts. You know, we've got the scaling plan. We say if you have an account over $4,500 or more, you can trade 15.
Right.
Everybody, all our traders want that leverage if they deem, the situation calls for it. But in my opinion, it's way too much to be trading on an account with 4,500 or, in Ben's case, it was, I think he's got less than $3,000 in his account right now. So he was well within his limits trading the 15 contracts early on, but Ben started in his live. We transferred him from XFA to live with $17,000 in that account. He took a nice payout of $3,000. So, and I commend him on that. You get transferred over with 17, you have the ability to take up to 50% during that transition period, regardless of how many winning days of $200 or more you've had. I respect him for paying himself a small chunk of that. He took a $3,000 payout during that time. Sure. And he didn't look to go take, $8,500, which would have been half. So he took far less than he had the ability to. Shout out to you there, Ben. But he's been bleeding out. He's on a 4-day, $12,000 losing streak right now. And he's trading 15 contracts. Ben needs to pump the brakes and stop what he's doing. You only got 3,000 left. I already trimmed your position sizing for tomorrow, Ben. Make some adjustments because, with us losing this much this quickly, you've got to stop immediately. You're putting yourself in a position. Your back is up against the wall now, but your back was against the wall if you're risking 3,000 on an account that had, that started with only 13. It's way too much percentage of your account to be risking on a daily basis. And without adjustments, I could be talking about this account being lost tomorrow. So
yeah, I know Ben. Ben's been here with Topstep for as long as I have. I've known
over
Ben
a
for
decade.
a long time. Yeah, I've known Ben. I've talked to Ben. I've worked with Ben, and I was so excited to see that he was doing well in the XFA and moving up to the funded account. And Ben, I'm glad you took some money out, like Mick said. But slow down, man. I'm not sure if Ben is trading at night because he's not available during the day, but you gotta trim that size. Try and build this account back up, Ben. Try and build it up again. I know you can do it. You've been at this a long time. You've got the experience. You've got the knowledge. Just make good choices. Putting a 15 lot on at 5 o'clock in the evening. Obviously has not been performing well for you, but I do have high hopes that you're going to build this thing back up. Slow down, size down, build your way out. You've been building yourself as a trader for many, many years. I know this, and it's a never-ending process. There's no destination to anybody's trading career. It's the destination is always a journey until the last trade that you take. So Ben, you got this. Slow down a little bit, size down. Look for good opportunities when you are available, not because you're available. When you are available, you look for opportunities. Don't take opportunities just because you're available. That tends to be the wrong thing to do. I know, Mick, we're getting a little short on time here. Any last things? I know we've got another card here, but we do have to move on. Any last comments, Mick?
Yeah, just Ben, rein in the discipline. Last comment is going to be tomorrow. I want to start out with an analyze my trades. We've had people submitting their trade reports to analyze the trades. I've got Travis, who I want to talk about tomorrow. Travis is a trader who reached out to one of our trader support reps, Lou. Lou passed it along to me. We're going to talk about analyzing his trades tomorrow, right off the bat when we get started.
Awesome.
I know we're long. Thanks for having me on, Travis. Travis. If you're watching, tune in tomorrow. We'll talk about your stuff.
Yes. All right. Thank you very much, Mick. And thanks for the traders. Thanks for joining us for the shoulder tap segment. We've got power players coming up here. We've got Eddie, Andre, and True coming up for power players. Don't forget it's FOMC. Stay calm. Keep your powder dry, and we'll see what kind of opportunities we can see later on. We do have group coaching with myself and JD. We've got Back to the Futures with Dolby and Rips at 1 o'clock. We're going to roll right into the Back to the Future segment at 1 o'clock, right from group coaching, so we can all watch and see what the FOMC does. And then, of course, at the end of the day with Power Hour, Andre, Dolby, and Isaac S. Isaac Suffren is going to be with us. So we're going to take a short break here. Enjoy the Power Players segment, and we'll see you later on. Stick around. A lot of good stuff coming up today.
Welcome to Power Players, everybody. I know yesterday's Power Players was a smash hit. Hopefully we can kind of replicate the same energy from yesterday's Power Players.
Wow.
I'm just kidding. With this here is True. He's one of our funded traders. You guys know Eddie, everyone's favorite. True, we got a little bit of time here. We want to get to know you. He's been trading with Topstep for a little under 1 year, despite his relatively short tenure. He is seeing success. You are in a live funded account. Yeah. Is that true? True.
Yes, sir, it is, and I got a certificate to prove it. My Pikachu.
We're going to show us. Yeah, tell us about that background real quick, because it's very cool, very eye-catching. Tell us about your background. What are we looking at here, True?
It's just a custom-made rug from an artist in LA. He goes by SC Class. You guys might want to look him up. He's pretty cool. I have my beautiful wife sitting behind me too. They just wanted to chime in.
Tell her to say hi. Tell her to say hi. She's on live television right now. She's with over
Television says hi to you.
3,000 people watching. We are very proud.
TopstepTV.
We're very proud of her husband. You're seeing success here at TopStep. TopStep, tell us how you got to know, how you found TopStep. Tell us about your trading journey. Tell us how you ended up here on TopStep TV live in front of thousands of people across the world.
Yeah, so a good friend of mine, he goes by name Sipo. He actually started a free Discord a couple years ago. Quick Trades here, you see. He reached out to me knowing that I've been trading for a little bit over 13 years now. I traded back in college in like 2011. I'm a lot older than I look.
Same.
But I've been trading for quite some time, mainly options, back when you had to like call in and not on your phone or on a PC nowadays. But I've been doing options for quite some time, and we built this free community for a couple of years now. And Quick Trades actually was supposed to be with you guys on Topstep TV a while back, but I think some personal matters came up, so he wasn't able to get on with you guys. But he did introduce our community to you guys, Topstep, and he told me that you can trade without using your own capital. And I was like, that sounds amazing. At first it was a little skeptic, of course, and a lot of people were also skeptical, especially in our community. We got about like 12,000 people in our community, and nobody really wanted to try it out. So I was like, hey, you know what? What's $150 gonna hurt? Or at that time, I think it's like 300 something for a 150K account. So I hopped on, and I've been trading futures on Thinkorswim. So just looking at the DOM is pretty much the same thing, and kind of just dabbling in it. It did take me a while to understand your rules, I would say.
Right.
But once I got it down, and I shared it with my community, and I think we got over a couple dozen funded members in our community now that's trading along with me. And thing about me is I like to put my friends on money, whether it's passive income or
He's a good friend.
Yeah.
That-
what
that's-
does that mean?
I mean-
What does that mean?
actually. Hey guys,
What? Oh, what do you got here?
I got some friends that come over every single day.
Tell them to come
Yeah,
over.
you
Tell
got
them
a
to come
party
in.
going
Let's
on.
see them. Yeah, bring them in. Bring them in.
Hey,
Look, what do we got
Roger.
here?
Chad,
Get in there. He likes to
David,
put his friends on money. This is a first on Topstep TV. Let's see the gang here.
where are they?
We got a
This is what we
team of
do. Yeah.
profitable
squad.
traders.
What do we got here, True?
Hey Chad.
Wow, Eddie, this is the first. I can't say we've seen this before. Oh, this is the QT
I
I
don't
don't
gang. This is-
know, man.
Oh, good.
Give
Well,
me a
whenever they
second.
come in,
Give me
Got a
10
team
True,
seconds.
run live
behind
TV.
you.
True, run live TV here. Hold on. We got to keep you on camera. Tell us what you mean. Tell us what you mean
Well,
about. Oh,
here's-
here we
here's
go.
one of them. He actually got funded not too long ago.
What's
Uh,
up,
here's-
man?
All right.
Yeah, so they
Wow,
come
look at
over
these guys.
They come
You
over
got your
every single day,
entourage.
and they trade with me. So
Okay,
I like
okay.
to
What's
put
up,
my friends
guys?
on money.
What's up,
and-
guys? Yeah. Tell them to
How
wave.
you
And,
doing, man?
Yeah, I mean David here. He's new. He's only started about a week now, and he's still learning, trying to get into. He does a lot of wheel trading, cash secured puts, and stuff like that.
Cool.
But he wanted to
Sick.
dabble into
What up?
futures
Look at this
trading. Make some passive income. So I think that's the biggest thing that Sipo, the guy that started Quick Trades, he
Huh?
put me on money, and that's where I learned from him. Is like, to be honest, you guys should know trading is a very lonely
Yes, it is.
lonely thing. And if you're making decent money or good money, you can't spend it alone. You can't go on trips by yourself all the time. It's all your friends are wanting to do the same thing, and so my thing is if I can put my buddies on money too, they can help others as well.
Well,
And,
true. You are a true friend, that's for sure. And having your trading buddies, and it looks like you got a great setup there. Are those some video games and behind you
yeah,
and
no,
stuff?
I could,
You
yeah,
got
this
video games, and we're trading,
room,
and the
you know.
atmosphere is positive. No, look at that. You just got
I
a whole
got two
arcade going
Samsung
on.
Arcs running at the same time, so
Nice.
it's a pretty gnarly setup they got going on. But I've been doing this for over a decade now, and
Right.
it's my office, so I got to make it my safe space. Especially when I'm in the zone and trading.
Right. You got some years experience under your belt. What are you trading right now? What's your number one? You got a priority on the secondary market?
I mainly trade NQ, but the largest market I trade is actually oil and gas. But I mainly do
Ooh,
that on
gas.
options. Yeah, I
Okay.
do, crude oil. But Exxon is probably one of my biggest companies that I trade. But other than that, I mainly trade the indexes, so either NQ or ES. But I mean, to be transparent, after I moved over to the live, I've been kind of bit of degenerate lately, and I'm trying to slow down on that. Making 60,000 in 10 days. I mean, that kind of like gave me a
Wow.
little push.
Let's talk about that. Let's talk about that. You made 60,000 in 10 days. What did that do to your psyche? Did you feel like you were invincible, like you had the markets figured out? Or did you become more hesitant? How did you react to such quick success, such early success in such a short amount of time? Where do you go from there? What's your next move? What are you thinking in your head? Tell the audience what you're thinking next.
I think the biggest thing, I mean, I even told my wife, like, I didn't even know how
Uh-oh.
to feel, like days that I was making like 10,000 a day and I would just sit there. I mean, market hasn't even opened yet. I remember my wife came in, I'm still in my boxers and I
I
was
like
like,
you, man.
and they're like, hey, like, are you gonna get ready? I was like, oh, I just made 10,000. And my wife was like, in your boxers? I was like, oh, yeah, the market was moving.
Yeah.
I had to get in a trade, and but at that time I didn't know how to feel, because to my, like, the people that I trade with, and they know me, I'm not very emotional. I don't show much emotions. I kind of trade like a robot.
That's
I
good. That's great.
I see the stock market as just a bunch of letters and numbers that make you money.
Yep.
I'm not really invested in these companies, because at the end of the day, they don't really care about you. Like, how many iPhones have you bought from Apple? So they
Right.
Yeah.
don't care. They're just gonna make you buy another one.
True. You're putting up some really nice days, and we're really happy to have you here at TopStep. You've seen success here at TopStep in a short time. What do you look for for an entry? What sort of piques your interest to say, "Hey, this is a great opportunity"?
Yeah, I can definitely go over that on my charts here.
Sweet.
I was listening to what was it, Wolf
Yep.
speaking, and we kind of have uh quite the same strategy. I don't use that many indicators. I mainly use the EMAs, the 9 and the 21 and the 50. The biggest one I use is actually the 50 moving average and the 200 moving average. I like to trade levels where, I don't know if you guys are looking at my charts here, but
Yeah.
let me see if I can point out here. So I look for movements that breaks either the 50 MA, which is my yellow dotted line here. I'll put
Mm-hmm.
see if I can draw there. Usually the movements that we find are 50 to the 200 MA. And anytime it breaks that, that's where I look for my entry. And I also use the 9 EMA, which is my blue line here. And the 21 EMA is the white line. And every time I see a crossing there, that's usually where my entries are at. And I think Wolf even said it too. So I use the 9 EMA to hold my positions. So for example, if I'm in a long here down at 17,301, which I actually did earlier, I'm up 2,700 right now,
Nice.
and I haven't made a trade since. But we got a long down here at 17,300. As soon as I saw the 9 EMA broke above the 21, you can see that it approached the 50 EMA, which is the yellow dotted line. And then my biggest catch right here is the 9 crossing over the 50 exponential moving average. And that is where I get the most explosive movements. That's where I kind of size heavier. You guys will see, my lots go up to like 15 sometimes. And this is where I get most of my big trades, is holding above the 9 EMA, and I'll cut right where I see the break of the 9 EMA, or I'll trim most of the time. You guys probably see my white lines I have here, with price levels. What I've learned from, so I've been lucky enough to know a lot of people within Wall Street, actually, floor traders. Some of my biggest clients is actually Mr. Fisher of Fisher Investments. I didn't know he was Mr. Fisher until
Guy that's on TV. That's not doing the commercials.
No. This is
Oh.
Robert. So Robert
Okay.
Fisher.
Okay,
is
go
his
on.
dad.
Sorry.
He's the
Gotcha.
one from Dallas. They started their hedge fund up in Dallas like years ago. The late Mr. Fisher, he's passed now, but his son is actually my client for photography.
Whoa.
My actual job is I'm a photographer. I've
That's
worked
right.
with National Geographic for a couple
Whoa.
years now,
Really?
and
Talk
that's my
about
real
that.
job.
Yeah,
Yeah,
talk
No
about
kidding.
that.
So you have two. Okay,
Yeah,
so let's talk about that. You have an additional revenue stream. So trading is essentially what? Is it a side hustle? Is it something you're trying to look to make full time, or what would you say the percentage like your passion? Are you fully passionate about photography? Fully passionate about trading? What's the balance like there?
Well, trading has allowed me to enjoy my passion. I think
Okay.
that's the biggest thing. Being able to have that passive income, or just being able to make money when I'm in another country. So I take people um, across the globe. I mainly focus on wildlife photography. So I
Very
teach
cool.
people wildlife conservations. My last trip was to India. We were out there in the jungle for
Bengal tiger.
about we were out there for about 14 days, and luckily we had internet, so I was able to trade while over in India. The market opens at 8 p.m. over there, so after we're up at 5 a.m. going out to the jungle trying to track down these big cats, photographing them. I got some pretty gnarly photos and got about like 10 feet away from the queen of the jungle, so she was pretty pretty massive, pretty scary.
Wow. Now, do
But
you
I
have
think
these posted anywhere? That
it's on
you have a
it's actually on
website?
my Instagram. It's under truevisions.com. So True Visions is my Instagram handle.
Nice.
Okay.
Yeah, so it's
Yeah.
TRIEU Visions. You can see all my photography there. But that's like my passion, just trading, photographing. And funny enough is Mr. Fisher, he's been on a couple of my tours. And he was actually there when I proposed to my now wife. He was a photographer there. We were photographing in Costa Rica, and I proposed to my wife there, and he was actually photographing our engagement.
That's
Um,
nice.
but knowing him, he introduced me to a lot of older generation traders that were on the floor. They don't look at indicators, they don't look at patterns, they don't look at any of that. And that's what they instilled in me, is just mainly focus on price action and volume. I think you were mentioning about on the card earlier, Ben, how he was trading at like 5 p.m. I was doing that sometimes too, and yeah, obviously that doesn't work. That's a huge gamble. And what he told me is that if there's no volume, you definitely shouldn't trade, because at the end of the day, what's the definition of trading? Just between you and another person. And if the liquidity is not there, you're not going to be able to get any type of movement. So I think that was the biggest thing I learned from these floor traders. They were telling me just look at price action and volume. Nowadays, we have all these algorithms. So going back, I used to work for Citigroup as a DBA, and I did a lot of coding too. So I was able to just code a bunch of stuff, and something that fits into my style of trading, so that makes
Right.
it easier for me to see the charts and stuff.
Now, true. You're out in the wilderness, and there's a big risk. Like you just said, you were 10 feet away from the queen of the jungle. I mean, that's
Yeah.
pretty risky. Now, you wouldn't find me there. I would not be that close. But
Oh, Eddie. Come on,
let's-
Eddie.
the closest I am, I'm 5 minutes from the Brookfield Zoo. That's about as close as I got. But
There you go.
I love watching, and I'm going to check out your website. I love nature and everything, but it's a risk being out there, you see these photographers out in the wilderness, very close to animal. How do you sort of let's turn that into risk in trading?
I like it.
Now, how do you manage your risk in your trades?
So a comparison between risking my life for a photo and risking some money is a little different, but your heart still jumps the same, I would say. I mean, the closest I've been to a bear in Alaska, he was about 5 feet away from me.
Wow.
And I didn't even hear him. That's the scary part.
That's the problem.
See, now that is
That's
very
the tricky
scary.
part.
Yeah, that's it.
But how about if you're in a situation when you're trading? What's your risk management process?
So for me, I've taught a lot of people on growing, small accounts, especially on options, and it's all about utilizing your buying power. Now with Topstep, what I realized is, you kind of have the idea of unlimited buying power, right? And a lot of people kind of take that for granted, and they kind of go too heavy sometimes. And that's what I did before too. I would say that I've reset the account probably over a dozen times before I actually fully understood and locked in into risk managing and knowing how much I'm willing to lose. So the biggest thing that I've learned, and I'm still learning to this day because I am human. I do get greedy at times, but when I am up, I do my best to step away. I do my best to step away, and I have support system that tells me to step away too. The biggest example I can use is the other day I was up about $4,800 after hours, and my brother was like, "Hey, let's go, stop," and I didn't stop, and I gave it back, and I got stopped out on the daily limit, and I kicked myself on that. But the biggest way that I found to reducing your risk is just knowing how much you're wanting to make, right? Have a goal for yourself and have a realistic goal, not a goal that you see other people make, because now you're chasing other people's dreams instead of your own. I've been telling my guys, just can you prove to yourself that you can make just 200 a day and just stop and just be happy with it? Just stop, because at the end of the day, $200 a day is still more than most people's 9 to 5, sadly,
Right.
in this day and
Exactly.
age. And I tell them, can you do that for a week? And so today, my best man actually, I'm giving him a shout out, Joe. He's getting his payout today. He hit his 5-day green. I think his
Nice.
account's at 5,000 right now, and he's just chipping away at like 500 a day. And
That's all.
for him, if he loses 50%, like let's say his goal is 500, he'll stop if he's down 250. He won't go anymore. He'll wait until the next day, or just wait for another setup. And
That's
I think
great discipline. Yeah.
at the end of the day, I read a lot of Tony Robbins' book, and it's all about risk management. And I think the single biggest threat financially is our own brain. I think that's what he said in his in the book. And you can do everything right, but if you fail to master your own psychology, I mean, it's everything just gets thrown out the window. And that's happened to me plenty of times. I'll tell you that. Even though I have days where I've made $10,000 to $20,000 a day, there are days where I would not listen to myself or listen to what I preach and say, like, I can't be wrong. I think that's the biggest rule that I tell a lot of my followers is the only thing worse than being wrong is staying wrong.
I like that. I like that a lot.
Yeah.
So
Yeah,
how do
'cause
you,
Go ahead.
when you do notice that, okay, for instance, you were up $4,800 that one day and then you ended up getting stopped out. How do you come back from something like that? Give us some advice. Give me some advice. How do you come back from something like that? I've been there. It's a tough pill to swallow. How do you come back? How do you come back from a day like that? You seem very confident in yourself. You seem very confident in your trading and in your belief system. You got your support system. How do you come back from a day like that?
Good question.
Leave the room. Stop looking at the screen. Find different activities. I do a lot. I work out a lot. I do a lot of lifting, sports. Find different avenues to kind of get that emotion out. And then when you come back to the market, don't trade to try and recoup. Trade to trade well, not to make money. Because if you trade well, money will come with it. But if you're trading out of desperation, you're trading to reach a certain goal that you haven't actually achieved before, it's kind of detrimental to yourself, where you just keep knocking yourself down and you start chasing rather than trying to just consistently make gains. I think the biggest thing is, when I'm down 3,000, doesn't mean that the next day I need to make 3,000. You can make your goal. You hit maybe 1,000, maybe even 500, and just stop. Because at the end of the day, you're still making more than a lot of people out there.
Right. You got to put it into perspective.
Yes,
how
you
many people on your block are making the money that you're making, or I should say, have the opportunity that you have. It's something that we benefit from, and we should be very happy the position that we're in. Now, let me ask you, True. Everyone's always looking to continue to grow. I've been doing this for eons, and Andre's been doing this for a very long time. But each and every day you learn something new. Everyone's looking to continue to grow. What are you hoping to continue to work on most right now to make sure that your growth is moving forward?
like that.
The biggest thing is putting. I mean, my wife and I have been talking about a lot too. Is putting family first, and I'm still struggling
Perfect.
to put work and personal life apart. I find myself looking at my phone too much, or looking at the screen too much. While I have a beautiful wife just sitting there waiting for me, wanting to have dinner, and I'm sitting here, order filled. It's not what wants to be heard. And I think that's something that I have been struggling with, is separating work and personal life. I think the biggest thing is getting that separation. Once you're done trading for the day, stop. Some of us are done trading within 30, 45 minutes in the day, and then we get to enjoy our life. We get to enjoy doing what we want to do versus, sitting there on a 9-to-5 job. I that's not what I want to be doing for the rest of my life. If I can make money within 30 minutes in the day and go on and doing what I want to do, like that's my goal. And that's how I will continue to push myself, is to do that.
Right. Well said. Very well said.
Yes, it is. So true. Okay, we got FOMC coming up today. Let's talk some markets. Let's talk current events. What's going on in the market? We have FOMC today. Will you be trading it? And if so, what would you be looking to do? What kind of trades are you looking to take? What are you looking to get out of the market? What are you looking to hear from Powell on a day like today?
So for me, I am a very reactive trader versus prediction. I don't like to predict direction. I mean, that's where you create your own bias in your head, and that's how you lose. So with now, they're wanting to maintain the pause. We just have to see what Powell says, to be honest, because at this point, is he going to, cut rates earlier? I think they said March was the date.
Yes, they said March.
One of the targets, yeah.
I think it sounds like they're pushing it more out to July. They're maybe talking about July. I think we'll find out. So on a big, today, all the fireworks are going to start here in about 90 minutes with Jerome Powell press conference starting in about 2 hours after. What's your mindset going into like a trading day like that? Are you just stay cool? You just wait for the market to come to you? I know for me and Eddie comes from the floor. On days like today, these are the days you get super amped up for. You kind of have to calm yourself down a little bit.
Yeah,
you seem to be pretty,
exactly.
Pretty mellow type of guy. Maybe I'm misreading. We just met, obviously, but how do you maintain your calmness and coolness going into something, a big event like today that we've been waiting for, since the beginning of the year?
I mean, I've been trading for a while now. FOMC is just another day. That's how I treat it. A lot of people treat it as like, I'm gonna get rich today. I'm gonna become a millionaire today. And that's how a lot of people just screw themselves over, is just trying to catch these big moves. Because we've seen FOMC days where it just goes sideways. And then at the end of the day, people just complain and say the market's manipulated. And I was like, well, the market's always going to be manipulated, if it doesn't go your way. So the best thing is I just sit out, to be honest. I don't even trade on during the release. I'll trade before, if the market gives me a movement like the drop today, I was able to capitalize a little bit on that and then capitalize a little bit on the bounce. But other than that, I don't look to trade on FOMC. I've noticed for past couple of FOMCs is the movements afterwards, the days afterwards. Those are the big movements. Right now we've hit all-time highs and we've come down just slightly, and people are freaking out that market's crashing. I was like, you guys haven't seen the crash yet unless you guys been in 2008 or 2020. Those are the type of movements.
That's a crash.
Those are crashes. Some people are too biased, and that's where trade, especially trade on FOMC, is going to just wreck you.
Right. True.
So my advice is just stay out on FOMC.
I like it. Noted.
It's better safe than sorry. I cannot agree with you more. What advice? I mean, we've got a lot of people listening here and watching TopstepTV. What advice would you have for somebody that's new? Now, you've got some good experience. You've seen the highest of highs, the lowest of lows. What advice would you give somebody starting out? I want to start trading, True, and what would you tell them?
I would say education is key. Don't just go on and follow, that, like, my community, there's people that pay to follow me, but the biggest thing I throw at them is education. Like, learn first before you just go in and follow anyone, because I'm not going to be 100% right. No one is. Someone that says that they are the best in the market, like, then they'll be richer than Elon Musk. There's you hear a lot about it, and I want to be transparent and honest about it. Is education. There's a lot of free education out there. There's a lot of education that you can pay, or you can pay the market fee. I mean, that's probably going to be the most expensive one, but the biggest one is probably education and learning your broker, learning how to use your broker, because people would just go in and think that they can just hit the buy and sell button and, not know how to do anything else. And when, excuse my language, shit hits the fan, they freak out and they don't know how to use their broker, how to get out of position or how to add into position if they're doing well, if their position is going the right way, how to capitalize on movements like that. I think it's the biggest thing, because a lot of people that I've ran into, they don't understand even how to, set limits or set stop losses. I think that's the biggest thing that people need to understand, is just learn your broker inside and out.
I like that. All right, we have a few more minutes left in Power Hour. True, again, thank you so much for joining us. This has been very enjoyable for Eddie and I. We'll put your social media information here in the chat throughout, so people that are liking what they're hearing can go follow you. Now, you're talking about education. How are you educated? Where did you get your education in the markets? I know your first passion is photography, and I don't know that there's necessarily a formal education for that, so to speak. I mean, I'm sure there's
no. Actually, went to med school.
There you go.
You went to med school to be a photographer. Now you're trained. All right, man. You're super interesting.
Yeah.
This is very, very cool, man. Okay, so how'd you get? I didn't see that coming. True, I'm not gonna lie. How did you get your education in trading?
So actually, a buddy of mine in college. I think he works for Fidelity. No, I think he moved over to Denver now. But he got me into trading options back in college, and I mean, please don't do this if you're in college, but we use our school loan money to trade. And we made some pretty good money, being broke college students, and we were like, man, like, this is life changing. Like, we can, this is something.
Yeah, man, for real.
And it's something that I've kept up with, after graduating undergrad. And then when I went to med school, I went to UT Southwestern here in Dallas, Dallas, Texas. And I kind of had to stop because, for those that are in medicine or anything in that field, it's a full-time job just being in school. Um, and then, fast forward, I went to New York for my residency, and then I landed a photography gig just to try to make some side income. And long and behold, I met some people, right time, right place, got into with National Geographic, and kind of left the medicine world behind. And then I just traded on the days that I could, just make that consistent growth.
Right.
And overall, I was able to, retire my parents, and
Oh, wow.
and actually, helped a lot of people. This is a crazy story, but I helped a gentleman with trading, and I guess he made a buttload of money, and he gifted me 2 Teslas. I have 2 Teslas sitting in my driveway that that's
You
not
know what's
that was-
true?
you? How do we find you, man?
What
This is
goes
cool,
around
man.
comes around, my friend. What
We
goes
find
around
Drew.
comes around.
Yeah,
Nice.
and I think that was the biggest thing was, for me realizing that, helping people has always been my passion, whether it's
Right.
in medicine or now, finding that financial freedom.
That's
I'm,
beautiful. That's beautiful.
by no means am I filthy rich, but I do my best to just live within our means, and my room
Nice.
doesn't say much. I like to spoil myself here and there.
It's
But
fun. It's fun.
it
You
is fun.
gotta have fun, brother. You gotta have fun. Speaking of fun, now it's time for the fun question. And I see that your fiance is still in the room there. I've got
yeah.
questions 1 to 20. Ask her to pick a number, and we're going to ask you that question.
Hey, babe, pick a number from 1 to 20.
18.
18.
I like it.
18. All right. You mix these up here. Okay. You're walking along a beach early in the morning and you find a magic lamp along the shore. Just for kicks, you rub it. And yes, a genie pops out and grants you 2 wishes. Yes, I know it's usually 3, but the recession and so forth, you only get 2. What are those 2 wishes?
Man, that's a loaded question. I would probably end world hunger
Okay. Very well.
and, try to stop war. I mean, that's probably the
2
biggest
number
thing.
1 answers. There you go.
Yeah.
True. Very cool, man. Very, very
Yeah,
cool.
true.
We got about 2 minutes left. Anything you'd like to say before we close this amazing power hour out? I know the chat's been loving it. People here in Topstep behind the scenes have been loving it. You will definitely be coming back on. Please leave us some parting words of wisdom to us and everyone watching right now.
Exactly.
I do have like the rules that I follow by. I like to drop down you guys. I got 5 rules that I've learned. Trade to trade well, not to make money. Rule number 2 is fiercely protect your capital. You got no capital, you can't trade. Right. Rule number 3: act immediately without hesitation on qualified setups. If you've been working on this all, for however long you've been doing it, however you're trading, whatever strategy you're using, I don't care. If it works for you, it works for you. I don't try to push different strats on other people. If it works for you, it works for you. And if you see that qualified setup, just get into it. If you're wrong, just have a stop loss. That's all you can do, and then find another entry. Rule number 4, I said it before, is only thing worse than being wrong is staying wrong.
Right.
Don't try to think you are creme de la creme and you're always right, because you will never
You'll
always
find
be
out
right.
soon enough.
Yeah.
Right. Well,
And
true.
then rule number 5.
Oh, you got
I was
another
like,
rule.
yeah,
Bonus.
if you're confused about all of this, go back to rule number 2: fiercely protect your capital. At the end of the day, that's all it is.
Wow.
Awesome
Good stuff, man.
True, you've been very enlightening, and a wonderful human to talk to, a great person to meet, and we thank you very much. As Andre said, we're going to get you back here again. But
Ah,
before
let's
we
be
go,
back. For having me.
please, just want to make sure that the YouTube chat We do have the group coaching form pinned. Get your questions in, and we're going to be going to our top quiz here. We've got Jack and Bonnie, two of the MVPs in yesterday's scrimmage. But once more, all the best, True, to you and your fiance, and of course your entourage of friends. And we'll be back. We'll be back. We're going to take a break here right now. All the best, and we'll be right back with Top Quiz.
All right.
Hello, everybody. Welcome to Top Quiz. I am your host, Jack, joined by a very special guest, future NBA Hall of Famer, Bonnie C. What is up, Bonnie? We're going to show it at some point, but Bonnie and I got to play a basketball scrimmage at the United Center last night. And Bonnie, you probably scored 8 or 10 points and had 4 steals. It was pretty impressive.
Oh,
You
thank
played basketball before, right?
Yeah, I played basketball in junior high. It was actually
right.
one of my favorite sports to play. I miss playing.
Yeah, I would too if I played like that. Although we were on the same team, we crushed the other team. Thanks for asking. We'll show. James, you can throw up that Bonnie pick if you have it. There is the goat right there. I'm clapping in the background. Anyway, if this is your first time playing Top Quiz, click the link that is pinned to the top of the chat and follow the instructions there. We need your email to send the prizes. Answer the questions on your device. There's a 6-second delay between us talking and YouTube. If you get 3 or 4 right, we will have a random raffle and we will give away 40 total resets. If you won yesterday, we are sending those emails out tonight. There's some delay creating the codes, but yeah, most of you know how it works. So, Bonnie, are you ready to follow up on your excellence from last night?
Yes,
With
let's do it.
Okay, cool. We'll give a few more seconds here for folks to get in. And be sure to stick around. After this, we have group coaching with Hoag. We're going to end that a little early today so that we can go into full Fed mode. Powell watchers, what's up? We got Rips joining us to talk through that. Should be rocking. All right, roll.
Also want to just give a quick shout out to Plus 500 too. Yesterday was such a fun day for us.
Yeah, they
Great
were
time.
great. I hadn't shot a basketball in 10 years probably, and I'm
You're playing
grateful to
really
them
good.
for the opportunity.
You're a good teammate.
Yeah, I think it was just an abnormally short group of people. So,
It worked in my favor, for
yes.
sure.
Alrighty then. What do you say? Let's get this started with the very first question. The date, the count, the question. Question number 1. A Delaware judge yesterday struck down a $55 billion compensation package for this CEO, which will obviously be appealed. But who got the clamp? Was it Mark Zuckerberg, Jeff Bezos, Jensen Huang, or Elon Musk?
Is it Elon Musk?
It sure as heck is. Who else would be getting $55 billion in stock compensation? We will see what happens there. Who knew it? Jack, reset me, please. Direct. Slowpa, Becca, Rangefinder, Scuderia Ferrari. One of the lesser known Ferrari children, along with Enzo. All right. Question 2. What is the name of the deepest point in the oceans on planet Earth? Horizon Deep, Emden Deep, Challenger Deep, or Brownson Deep? And yes, James Cameron has been there.
I feel like I should know this. Has this question come up before? I forgot.
Many versions of it, perhaps.
Brownson. Oh.
Brownson is the deepest in the Atlantic Ocean, but Challenger Deep at the bottom of the Marianas Trench is the deepest. It is deeper than Mount Everest peak from sea level. Pretty cool, huh?
Nice.
Okay. Oh, we got I feel like Johnny Quabaniqua has been up there quite a bit.
Yeah, I've
Good
seen it a
job.
few times.
G Trader, Wet Egg. I love you all. Love it. And I never win. Could possibly change
Same.
that today. It's all about positive thinking. Okay. Let's go to the next question. roughly how much is the overnight margin for a single CME ES futures contract? Is it 1,000, about 2,000, about 6,000, or about $12,000?
Would it be 2,000?
It is about 6 times that. It's about 11,800 for the overnight margin for a CME futures contract. One of the many reasons it's difficult to hold positions overnight. Got my notes here. Right now, the nominal value of a ES contract is 50 times the index, which is about 245,000. So that margin is only 5% of that, which is the 20-to-1 leverage. Let's see who knew it. Nudge Calf, G Trader, Pamer. Black Swan has entered the mix.
Black Swan is back.
There we go. And I have a thing here just to show that I'm not pulling this out of anywhere. Yeah, it's expensive. The whole thing's overnight. Okay, ready for question number 4. Last one. You ready?
Yes.
All right. Here we go. In what year did the United States abandon the gold standard? Now, this is how you ask questions with years. I separated them. Is it 1951, 1961, 1971, or 1981?
What is the gold standard?
The currency tied to gold reserves. We don't have it anymore. We have floating currency.
1951. Oh.
That is an answer. Yes. Nixon, 1971 is what I've been told. Notice how I did not put 1970, 1971, 1972, and 1973 because that is a silly way to have answers. All right. Let's see who came out on top. Janiqua Baniqua. In second, NQ blew me up. The parentheses make it a little interesting. G Trader, a true G and a gentleman. All right. Thank you very much, everyone. We'll reveal this towards the end here today. And stay tuned. We got group coaching. Daddy Powell's coming for the FOMC. You're going to want to see that. So stick around. We'll be back in a few minutes. Keep it cool. Goodbye.
welcome to group coaching, and we've got Hoag and we've got JD. So let's get those questions up and running. John, all yours, my friend.
Thank you, Eddie, and welcome everybody, and thank you for being here with us. Also, here, JD. Just going to introduce myself. If you don't know me, my name is John Hoagland, a senior performance coach here at TopStep. In February, it's going to be 41 years of futures industry experience, not necessarily all of them as an active trader. I did trade on the floor of the Mercantile Exchange for 20 years and migrated to screen trading in 2009. And since 2011, I've been here at TopStep, hopefully increasing the knowledge and performance of futures traders from all over the world. I got to mention the guests that we've had on today. Everybody has been so great, so spot on. I'm really I'm feeling humbled that you guys are hanging out with me for this, and looking forward to an excellent session. The Commodity Futures Trading Commission, a disclaimer here, says that futures is risky. These are leveraged products. You do run the risk of losing more than your initial investment because of that. We should only be using risk capital to trade with. And to me, risk capital is money that I can afford to lose. We're not going to be suggesting the purchase or sale of any particular product during the session. Remember, this is for educational purposes only. And we're going to jump into the questions now. I'm going to take this down so that we can see the charts as we are kind of going through some of these questions. And JD, it's great to see you. Great to hear from you. I appreciated your comment about the cheeseburger contest after the Bulls game last night. However, that did not actually happen.
It was pure speculation. I figured something might have happened, and it could have been a cheeseburger eating contest, but I was wrong. Good to have you back, Hoag.
It's been a long time since I've had a Billy Goat cheeseburger. It sounds really good right now, and it's good to be back. Again, thank you everybody for joining us, and with such great guests today. Everybody was so spot on in the things that they were saying. I'm just grateful that we had such great guests, and we have such great guests here on Topstep TV. I also want to do a little bit of a shout out to Plus 500. They were our hosts yesterday at the United Center, and for the Bulls game, it was a wonderful time. And thank you all very much again for that opportunity to spend some time, meet some new people, see some old friends, and watch the Bulls game. It was a lot of fun.
Awesome. Yeah, it's been a killer show so far today. Andrew and
Steve
Jay on the opening call this morning. Excellent. True.
Yes. Yeah.
I think True was just a diamond in the rough. What a great find getting him on the show. And then he brings out a team of traders in the next room. Oh man, I just thought that whole segment was fantastic. Way to go, guys!
I was watching and I was wondering, if he's trying to separate home from work, he's not doing a very good job of that. He's bringing work into the home with a bunch of other traders.
That's the way to do it, though, right? He's winning. All right, let's dive in to some of these questions. What do you say?
Sure.
All right.
I just want to answer one question here in the chat.
Oh, yeah.
I think it was Steve is asking one question. Did I break down and drink at the game? I did not. And there was actually an attempt to lure me into drinking at the game. One of the people that we were with offered me $1,100 to do a shot with him last night, but I did not do that. I stuck with it, and it's only one more day, and I had to drive home anyway, so I didn't want to be drinking and getting behind the wheel of a car. So, but it was kind of funny. They were like, "Well, we'll give you $1,100 to do it right now."
Was there cash in hand? Did they show you? Was it a legitimate offer? Would you have received $1,100?
I did not see the cash, but I know the person with the suggestion is good for it.
Okay, that makes sense. All right, first question from Noah. Oldie but a goodie, Hoag. I know we've answered this one before. Noah wants to know, I have passed 2 combines, but have ended up losing both of my XFAs. What kind of advice would you give Noah?
Noah, I mean, this is a thing that we hear quite a bit. I think Mick and I have had lots of conversations about this over the years, and one of the main reasons that I think that this happens is the additional risk in your trading in your trading activities, right? Trading combine is one level of risk. You do have skin in the game, but when you move to the XFA or into a funded account, then it's real. You can actually make money in that period of time, and it does have a tendency to change the decision-making process. I think a lot of folks, when they go from the trading combine into the XFA, become a lot more risk averse. They may not take some of the risk that they would normally take in a trading combine in the XFA, and they end up kind of dying by 1,000 cuts. The other side of that is, now I can make real money. I'm gonna just kill this. I am going to be taking a lot more risk, looking for bigger wins. Those that also turns into bigger losses. The most important thing to me, Noah, and everybody that's listening, is that when you are successful in the trading combine, you've passed 2 of them. There is a record there of you being able to recognize market states, find opportunities, limit risk, hopefully maximize profits. Just being able to take that process and that strategy from the trading combine into the XFA, I think, brings your best chance of getting off on the right foot in the XFA. I think that's very important. If we get into the XFA and we start with a drawdown, it happens. I mean, it happens to everybody. It happens to me. It happens to everybody that trades. Sometimes when you get into that account, you start a little bit of a drawdown, even if you are managing trades the way you had been. Sometimes states change a little bit between the time you finish your trading combine and you get into the XFA. I know it's a very quick turnaround to get into that XFA, but we say it a lot, JD. It's dance with the one you brung, and it is difficult to do so. When there is more risk involved, it makes it much more difficult to make those same trading decisions, because they just feel more important, because you're now able to actually profit from the markets. Noah, keep at it. If it doesn't work the next time, keep at it. Keep at it. You're not going to lack in success as long as you keep trying. Maybe each time you'll get a little better at it. And by getting better at it, I'm talking about just being able to make those same difficult trading decisions. I hope that helps you, Noah, and I hope that helps everybody. And that's the goal here at TopStep. We want to see everybody reaching new levels of success. And, there is no single level of success. Succeeding in the trading combine, that is a level of success. If you don't succeed in the XFA, you might succeed the next time. Every time you step forward is another level of success. So keep at it, Noah. You're going to get this.
Thanks, Hoag. Yeah, there's definitely a mindset shift once you have actual skin in the game, right? But I think the trick is to just focus on profits, or process over profits. I almost slipped there. Focus on process over profits. Money is just a byproduct of making good trades, right?
Yeah. And I can still hear the trader that told me that in his voice. I can still hear him saying that to me. And that was 30 some odd years ago.
Never truer words were spoken, right? All right, this for the next question. Thanks for the question, Noah. For this next one, we're going to combine a couple. It has to do with stocks, underlying assets, and their effect on the broader equity markets. Major stock prices. Let's say big tech, the big 5, the mega caps.
Right.
In what way do they affect price action in the futures markets? Can an individual stock drive down the price of the NASDAQ 100 futures?
Okay. I think there's a lot more questions about this with the advent of RIPS coming into it, because RIPS is keeping track on the Magnificent Seven, right? Those are the big FANG stocks, the highly the big stocks. They're weighted in the indices, can they affect price? Yes, of course they can. You just have to remember that, some of those big stocks are only a part of the index. There's there's a lot of different. If you're looking at the S&Ps, we're looking at 500 different stocks. They're weighted in different industries. The Nasdaq, of course, there's 100 stocks in there, and they're weighted in different indices. Are they useful? I've never really had maybe it's a personal thing, but I've never had the ability to look at like one of the stocks, like Apple was barreling to the downside or earlier today. I think it was Apple. I haven't been that involved today, but was that part of what brought the equities lower? Yeah, it probably was. We're looking at the stocks. We're looking at the underlying commodity. We're trading futures, which is an assumed price at some point in the future. But as the cash price moves up and down, you're going to see the futures move up and down. So do they affect price in the futures markets? Yes, because they're going to be affecting the cash market. And again, being able to make trading decisions in the equity index futures based on a single stock or a group of stocks heading in one direction or another, it may give you an opportunity to look for direction in a specific in a stock index future for a session, but I've never been able to use them as entries and exit points by looking at the underlying stocks. We're trading the S&Ps, we're trading the Nasdaq. I focus more on the information that I'm getting there than from the individual stocks that do and can affect price in the futures markets. There's a spread between the cash and the futures, and when that spread gets out of line, traders respond to that. If the spread gets too wide, they're going to sell the high one, buy the low one. If it comes back in, they're going to undo those arbitrages. So those arbs are what keep the futures prices in line with the cash market, the SPX, whatever it is that you're looking at, and those individual stocks, the highly capitalized, the big magnificent seven, as Rip say, yeah, they're going to affect price. But again, I haven't been able to figure out a way to use those specific stocks in any real opportunities in futures. Rips is going to say, he may say something different. Of course, everybody has their way and their opportunities, the way they look at things. But these stock index futures are based on those stocks, and those highly capitalized ones do have a little bit heavier weight. So that's why, Rips is keeping an eye on them. We're trying to keep an eye on them now. And so I hope that's a good answer to your question. There's some specific things like, if we get through this order of 600 contracts, what does that mean? Anything? Well, we talk a lot, and Andre and I talk about Rips. I mean, everybody talks about order flow and liquidity. So the market has a tendency to move price towards the liquidity. So those are things that we're looking at during fast markets. And an old boss of mine that JD's dad knows, John Fisher. When I was a deck holder in the lumber pit, you had all these orders, right? You had this big stack of orders, and the downside was in the middle. So you could go, by price and go lower in prices. As market moved lower, you got to the bottom, you went through the downside. The upside was wrapped around the top, was wrapped around the outside, and the order was written on the back. So if price was moving higher, you just went through the deck this way. And if the deck was stacked really heavy to the upside, John would say, hey, make sure that upside's in order. I'm going to keep the first half. You keep the second half. If we start ripping to the upside, just hand in the upside and I'll take care of the rest. Because he knew that the liquidity, by what we were seeing in the deck, the actual orders in the pit were stacked to the upside. Odds were we were going to go in that direction, because as he used to put it, the market always goes to the point of greatest aggravation. But we knew we were going to be busy, probably to the upside. And, I used to tell my dad, maybe I was insider information. I was just a deck holder. I wasn't even a member, but I would, say, hey, Dad, I think, S&Ps are going to probably run to the upside today. So, once in a while he would put in a trade and he'd make a little bit of money. What firm in lumber? K&S, Crumhorn and Schiller. Oh my goodness, Bill, you're talking way back in the day. Wow, goodness gracious. Awesome. So I hope that helps, Steve, and we will take a look, and we'll keep an eye and see if we can't find a way to maximize some of those magnificent seven for some of our trades.
Yeah, especially in a week like this with all these earnings coming out. It might pay to take special notice of individual stock prices also. And yeah, you'll see Rips talking about it later on too. He's always watching.
100%.
Just like Hoag said, he's always watching stock prices. All right, next question comes from Homari. Homari wants to know, Hoag, how do you handle pressure while trading? What's your secret to staying calm?
Stay profitable. That's probably one of the best ways to handle pressure, but we can't always count on that, can we? So, I think it's a learned thing. When you think about it, there's nothing that the market can do to us that we don't do to ourselves. The only thing we can control in trading is our risk. If we are managing our risk and we are within our risk appetite and we are recognizing that this is the worst thing that can happen and we can accept that, that's going to take a lot of the pressure off of any given trade or any given trading session. Now, do I feel pressure when I'm actively trading? Yes, I do. But I've learned to recognize when that pressure is going to cause my thought process to change. For some people, it might be you're going to start feeling pressure if you get down, for example, $500. You're down $500. Now you're feeling that pressure of that loss. For me, it's more of a consecutive losing trades thing. If I have 3 consecutive losing trades, I know that that's enough to kind of get me a little upset, emotional, mad, whatever it is. And when I feel that, I'm off center. There's every morning on the opening call, I say, let's stay humble, grateful, creative, and centered. The centered part of it is, they're all very important, of course, but staying centered means you're not emotional negatively. You're not over emotional positively. You want to trade from center. So when I start feeling pressure, and by pressure, I'm saying, things aren't going well. I'm getting upset, angry, whatever it is. That to me is the pressure that I feel in trading. And I know from experience where that switch flips, where I go from, okay, calm, thoughtful trade ideas to, all right, now I'm pissed. Now I'm going to try and get this money back. And knowing where that level is for you is going to do a lot to take some of that pressure off, because you're going to get to that point. And you're going to say, okay, I know through history that when I get to this point, usually bad things happen. So I'm going to walk away, take a break, even if it's 5 minutes. Like Rip says, put a timer on your phone for 5 minutes. Give yourself a timeout. Breathe in and out. Let go of what has already happened and focus on what might be happening into the future. Look for those asymmetric opportunities. There's always pressure in trading. What about if you're up? Maybe you're up big in a single trade. Is there pressure there? There usually is, because most people are going to kind of default to, I got this big winner on and I think it's going to keep going, but I'm afraid to lose any of the realized profit. Well, that's something that we have to deal with. And dealing with pressure, like everything else, is a muscle that you have to work. You have to say, I'm in this good trade. The plan was to get it close to this level. It's moving in that direction, but I'm starting to get nervous, not because something in the market is telling me. Okay, you got to be creative. If something in the market's telling you that something has changed, you have to be able to respond to that. But if the trade is going your way, nothing has changed. You're trying to build those muscles to stay in that trade, taking some of that pressure off. getting out of a trade that way would take the pressure off, but it's not necessarily what you want to do as a trader. You want to experience and profit from that trade if it gives you that opportunity. If something changes, maybe it's such a big trade, you start to protect some of the profit in that trade. The point is, there's always going to be pressure. It's how much pressure you put on yourself and how much those muscles are to withstand that pressure. Dr. Menaker gave us a wonderful thing. You're going to have to get comfortable being uncomfortable. When there's risk on, you're going to be uncomfortable to some degree every time you have risk on. And I hope that helps. Again, there's nothing we can do there's nothing the market can do to us that we don't do to ourselves. Accept the risks and know when your switch gets flipped, when you go from, cognitive, thoughtful trade ideas to, I just got to get this money back. Then that's when you want to step back. You want to let go of that venom, and you want to, get back into the markets when you feel as though you're again making cognitive, thoughtful trade decisions. Great question.
Thanks, Hoag. And I think this is a great opportunity to remind you all of our tip of the week, which is to keep your emotions in check. Emotional control is crucial for successful trading. Don't let fear or greed drive your decisions. Take breaks if you feel overwhelmed or stressed. Take a screenshot.
There you go. Yeah. I mean, emotional control to me is very difficult and takes a lot of energy. Understanding what your emotions are telling you, like three straight losing trades, that's my signal that I'm likely to become emotional. I have to put that in check. If I can't, say, okay, I've accepted this, got to move on and look for the next opportunity. Maybe it's taking a break. Maybe it's taking that 5-minute timeout, like Rips talks about. You got to find your way to deal with it. But, it's emotions are telling you something. If you're trying to just stifle emotions, you may be missing part of the picture. And for me, when I start to get emotional, that's my signal to say, okay, let's slow down. Let's let go of that venom and re-enter the market when we're making good cognitive decisions. Even good trades can be losses.
Wonderful. Thank you, Hoag. Thank you for the question also. All right, let's just keep it rolling here. Magnus wants to know. He's got a question about charting styles. He's having trouble deciding. What are the pros and cons between a candlestick and a Heiken-Ashi chart? Do you have any facts about them that could possibly help?
Okay. One of the things that I do often say at the opening of group coaching is I don't know everything. Nobody knows everything. If anybody tells you they know everything, you don't want to trust them. I don't know a lot about Heiken-Ashi. So for me to be able to answer this question with the amount of knowledge that I would ask for from somebody that I asked this question, I have to say, this is not the question for me. I've always been a open, high, low, close, candlestick, profile, and sometimes range charts. I've looked at range charts, but Heiken-Ashi charts are not in my wheelhouse. So I apologize, Magnus. Maybe a question for another day, for another coach, perhaps. But I appreciate the question, and I apologize for not being able to answer it. Again, nobody knows everything, and I am certainly one of them.
Appreciate your honesty and transparency as always, Hoag. Thank you for the question, Magnus. Let's just move right along again. Charles, another similar question. I think we've answered this one before too. Charles doubled his personal trading. Let me start that over. Charles just doubled my personal 50K account today, which I opened the second week of January, but broke a rule twice on my 150K combine. What do I do? Is it the restrictions? Is it possibly the expanded risk parameters? Having trouble controlling risk when you have too much to play with? Sometimes you play too much.
Right. Charles, number one, congratulations on doubling your personal account, 50K, since the second week in January. I mean, that's incredible trading. my question would be, what is it that you are doing differently in that account than you are doing in the 150K trading combine? My thought would be you're probably trading some pretty good size in your personal account and trying to trade that same size in the 150K combine. Be careful, Charles. If that is the case, I'm very happy that you were able to double that account, but one of the dad wisdoms that my dad bestowed upon me and that I from time to time offer to you guys is, money is easy to make. Money is easy to lose. The hard part is keeping it. So, number one, Charles, if you've doubled that account, make sure you pay yourself from your personal account. Take some money out, get that in your hand, use it for something fun, use it for something useful. Make it real. Make that money real. It's not just numbers on a screen. Make it real. If you're doing that well in your personal account and you keep hitting like daily loss limits or max drawdowns in the 150K account, size down. Don't be in a hurry to get through the trading combine. We want you to succeed. We want to fund you. Obviously, if you're trading your personal account that well, we want you trading our money too. So my suggestion is, do what you're doing, size down in the 150K combine, so you're not hitting some of those restrictions. Again, whether it's really the only rule is trade sizing and the max drawdown. If you're hitting the max drawdown, size down. Give yourself more opportunities to get into some of those good winning trades that you're doing in your personal account. You would think it would kind of be the other way around, right? When you have personal risk, when you have personal funds, mental and financial capital in play, probably more difficult to trade that than it is in trading a trading combine. But the trading combine, there are some rules that are probably a little bit different than the rules that you're playing with in your personal account. Size down. Take the same trades, just make them smaller. If you continue to do well in your personal account, and we of course hope that you do, we're looking forward to seeing you, funded in the 150K account. Why wouldn't we? We want you to succeed. We want everybody to succeed. So, if you're whatever size you're trading in your personal account, trade half of that, trade a quarter of that in the 150K combine. You don't have to do it in any specific amount of time. The point is that you succeed in it, get to the XFA, build it, and continue to succeed and learn and grow and all of those things that are so wonderful and difficult in trading. Charles, I'm happy for you. Let's get you through that 150K combine, trade smaller, and let's get you funded.
Looking forward to seeing you in the funded account, Charles. Thanks for the question. All right, this next one comes from Max. Max says, "Hi, Hoag. This morning at about 10:45, while trading crude oil, Deanna said, we didn't leave any print on the TPO profile, hence why I'm reluctant to take the trade. Any chance you can explain what was meant by that?"
Okay, I'm thinking it was probably 9:45 Central Time. If Max, you're in Eastern Time, because
that makes
I
perfect
wasn't
sense.
watching. Yeah, I wasn't watching at the time.
10:45 was the shoulder tap, so it would definitely be 9:45 Central Time.
Okay, right. Okay, so what I'm thinking that she is saying in this, and I've been wrong before. Just kind of looking at the profile here. Okay. Okay, so A, B, and C extended below the initial balance. Okay, it closed here. D came back inside and closed out any single TPOs below the initial balance. If you're asking a question about the single TPOs, I'm thinking that you're probably familiar with the terminologies and what single TPOs mean in profile. So when B opened and drove lower, D opened here, which would leave a single line of TPOs in the C period, right? So when C period came back in, or when D period, I should say, came back in and closed out those single TPOs, that makes the profile, basically one big area or distribution of time. There's no excess in the single TPOs that were originally left in C period because D period came back and took them out. So if price after that happened was anywhere near the point of control or anywhere near the center of this area of balance or developing balance, or even here, because none of this had happened yet, I would agree with her. I would say, well, it's right in the middle of the range. It's kind of a developing area of balance. So I don't want to trade anywhere in the middle of it. I would prefer to look for opportunities at the extremes. Now the crude oil continues to look to the downside here. We've had one continuation, two continuations below, three continuations below the initial balance. But anywhere in the middle is kind of even risk, and the risk is large because if I trade the point of control, I've got value high all the way up here. That's too much risk for a short. If I take a long here, then risk is to below value. That's too much risk if I'm going to be trading in the middle. So what I think she was saying was if C period left single TPOs here and D period did not close them out, that might leave this area of C period as excess above price, which could give us opportunity for continuation to the downside. It did not happen. Now, nobody knows what's going to happen. D doesn't know what's going to happen. It's just in the way that D, and I think I'm speaking correctly about what she would be saying here if she was answering this question herself, was thinking in profile terms, thinking in auction terms, and the closing of those single TPOs was, it was an indication that little area of excess did not last for long. Therefore, we're going to be focusing more on the extremes of that situation for our opportunities. I hope that I answered that correctly, kind of from myself and kind of from D, but D and I see things a lot the same. So I hope that's a good question, and I hope that answers your question, Max. Thank you again for the question.
Excellent. Yeah, I think that made perfect sense. Thank you, Hoag. All right. Nick B is asking, do you ever use time and sales at support and resistance levels to influence trading direction?
Great question.
Yeah.
Go ahead, JD.
On the TopstepX platform, if you haven't noticed, there is a time and sales function, so you can see how much traded at each price in real time as it's happening. So if you're on TopstepX, take a look at that. But anyway, didn't mean to interrupt you, Hoag. Continue.
No, not at all, JD. Thank you very much. Yeah, just time and sales. It's basically just order flow, right? We're looking at the number of contracts that trade on the bid or the offer. How many contracts trade on the bid and the offer? And watching time and sales. You're going to be able to recognize when there's an accumulation or a liquidation in a specific area. There's other tools like that as well. Just looking at the dome, sometimes you can see that. Bookmap is another tool that you can kind of see those areas. Do I use time and sales specifically? Not that much. Not that much. It is pretty much available on most platforms. It's not something that I've been really focusing on lately. I think I've had enough to focus on lately, but I know that some of our coaches have been watching it. They've been posting areas where they're seeing accumulations or liquidations in specific areas. I'm not saying it's not useful. It's just not something I've been focusing on lately. There's so much out there. There's so much information coming at us. I find that keeping things simple really has a better decision-making opportunity for me. Am I missing some things by not watching time and sales? Maybe from time to time. But, I think that instead of just staring at time and sales, and you can filter the number of contracts that have to trade on a bid or an offer before it posts. I think that, filtering to some larger orders or larger quantities of executions can help slow that down. That time in sales sometimes runs pretty quick if you're looking at one contract. Am I missing something from it? I'm sure that I probably am. But it's all in the user, and if you can find the right opportunities. And it's a great question. I'm not suggesting you don't use time in sales. I'm not suggesting you do use time in sales. It's all in your ability to recognize the opportunities in and around that tool. Great question.
Excellent. Thank you, Hoag. This next one, it's right up your alley. It's another profile question. This one's from Ben. Hi, Hoag. Can you explain how to trade sustained auctions out of value? Also, what are some anomalies in market profile?
Okay. Ben, sustained auctions out of value. Let's take a look. Okay. All right. So let's start with anomalies. Anomalies are anything that doesn't fit into a smooth bell curve or a smooth profile. Quite often, these are anomalies, and these are true anomalies. It's a one tick price overlap from a previous period of time. Okay. B period traded down to here. J, K, and L all traded through there. M period stopped there. That's an anomaly. It just sticks out. It's a one tick price overlay. There's another anomaly here in L period. Okay. This little L sticks out. It's one little price overlay. B, I, J, and okay. So if it stopped here, we wouldn't have an anomaly. It left an anomaly. It's a visual target for traders, whether they're looking at profile or not. It seems that they're important, and they usually get revisited at some point in the near future. Here's another true anomaly. A true anomaly is, you could have had an anomaly in I period, and then it goes back over it. This is a true, pure anomaly. So on this day, we took out one anomaly on the open, another anomaly. We actually ended up turning around and finishing up this anomaly down here. Are they, good areas for executions for entries? It depends. Sometimes, yes. Sometimes they're better for potential profit targets. But here's a couple more anomalies here. Okay, K period traded up to here. L period traded up to here. B period traded to those anomalies, and the first thing it did was come off. Okay. Here's another anomaly. Look at the high from today. So A period went up right to this anomaly, which could be kind of a point of control from this upper distribution here before we put in the late spike. But that's to the tick, to an anomaly. It traded right to it, and then it turned around and headed the other direction. Directional activity. So when the market is directional, as let's say this day here, that's when I'll kind of default from market profile to volume profile. If you start to say, this market is really going to run to the upside, how do I find a way in? So, and nothing works every time, but I've had some reasonable success waiting for the market to extend, building some volume, letting the market come back near a low volume node, using that as a support level. We get to I call these volume shoulders. So the volume goes from a high volume node to a low volume node. The lower volume shoulder offers an opportunity to limit risk. And that's all I'm suggesting is if you do this, you have the opportunity to limit risk. There's absolutely no guarantee of any profit or loss ever in this industry. It's just getting to a point where the market continued to push, did not close out the single TPOs, a low volume node to a high volume node, somewhere in there might be a decent opportunity. And again, if only because of the fact that it limits risk. And let's see if we get an opportunity here. All right, so we continue to push to the upside here. We built a little bit of a volume bubble here. Okay, where is our opportunity to look for the long? There's a lot of low volume. This moved very quickly through that area. The only place that I would be able to look for an opportunity in this period, in H period, would be against a low volume node below the highest volume node here. So if the market came up here, pulled back, and we don't have time really to go back and see in short time frame if the market came up here, sat here for a while, and then the market continued. But looking in the past, if we have a high volume node to a low volume node, this gives us a potential opportunity against a low volume node to use that as support. If the market is directional only if your hypothesis says this thing is going to the upside, it is screaming, we can look to use these low volume nodes as potential support in very short time frame. And if we can get it, if we can get that trade in short time frame, and we're correct on the directional activity of the day, we can profit greatly from them. This is something that I kind of looked for and kind of watched for a while. You could say back tested if you want to, before trying it. And again, there's no guarantees of anything, but I've had reasonable success because getting into a trending market has always been a big challenge for me. If the market is already directional, I have a hard time getting into a market that is one time framing or directional or all time frames acting in concert. It's always been very difficult for me. So in the effort to try and find a way in, that is one of the things that I will use in a directional market. So that is really the way that I will try and trade into a sustained auction out of value is trade against low volume nodes on pullbacks.
Excellent. Thank you, Hoag. And for those of you interested in learning more about the market profiles, I have pinned Hoag's market profile masterclass to the top of the chat. Mike D, that was your question. Mike D asked, do you have a market profile course, something more than the canned ones on YouTube? Mike D, you are in luck. Look at the link pinned to the top of the chat for Hoag's market profile masterclass. There you go, guys.
Yeah, and that's really just a kind of a basic construction of the profile, different day types. I mean, that's really the beginning of it. If you really want to get into it, Mike, there's wonderful books by Jim Dalton, Mind Over Markets, Markets and Profile. I understand Jim Dalton's working on a third book now. I'm looking forward to the release of that, but it's probably not going to be for another year. There's the original text, which was Markets and Market Logic, which was by a gentleman by the name of Pete Stottlemyre. It depends on how deep you want to get into the weeds here, Mike, as to how much you want to learn about the market profile. But I certainly suggest reading the first 100 pages of Mind Over Markets, because that was what really opened up my eyes to what these markets really are. And they are two-sided auction processes that occur in multiple different time frames. It's a mouthful of words, but you can make money on a 1 minute, you can make money on a 5 minute, you can make money on a 10 minute, you can make money on a 30 minute, you can make money on an hourly, a 4 hour, a weekly, or whatever chart you're looking at. There's opportunity in those charts. It's all in your ability to recognize, manage the risk, and look for those profits.
Thank you, Hoag. All right, I think we got time for one more question before we bring in the guys to get ready for the FOMC announcement.
Cool.
This question comes from Christopher. Christopher wants to know, did you ever go into a deep drawdown? And if so, how did you get out?
I've been in more deep drawdowns than I can even remember. It reminds me of a country song that says, if you're going through hell, just keep going. If you stop, you're stuck there.
The only way out is straight through, right?
Right. And every trader at some point, and probably several points in a long trading career, gets into a deep drawdown. How do you get out? Take some time off. Number one, clear your mind, clear any anger or venom that you are holding in your veins, because that doesn't help anything. Anger and jealousy and rage, and they just feed on themselves and they get worse over time. So you got to find a way to let go of the pain of the losses. You got to find a way to, let go of the fact that you are not a perfect person. And again, in that time off, just let all that go. Do something fun, do something good for yourselves, do something good for somebody else. When you're in a drawdown, one of the things that I noticed is we're probably feeling pretty bad about ourselves. And happy traders just make better traders. If we're feeling bad about ourselves, if you're anything like me, I have a really vicious inner dialogue, which I've worked very hard to try and silence, and we can never fully silence it. We just get better at discounting the lies that it tells us. So, it's take some time off, let go of the venom, get yourself back to center, start small, go back to basics, start small, and build from there. One of the dad wisdoms some of you have seen, some of you have not, is the hardest steel comes from the hottest forge. You get into a drawdown, when you're able to pull yourself out of that drawdown and get back to profitable trading, get your account back to where it was, it's an amazing feeling. And you're going to be a better trader for it. When I first started, I wanted to learn to play guitar. I was a drummer. I wanted to learn to play guitar. One of the guitarists that I was working with in a band says, if you want to learn to play guitar, get yourself a nice steel string acoustic, a dreadnought. Don't start with electric guitar. I said, why? He said, because you'll be a much stronger player, because it's harder to hold the strings down. You're going to get some good pads on your fingers. They're more difficult to play than an electric guitar. So therefore you're going to be a better trader, a better player because of it. Okay, made sense. So that's what I did. I'm not a great player by any stretch of the means, and I haven't played in a long time, but I feel as though that the strength that I got in my hands, the pads that work on my fingers, the more difficult instrument to trade, the more difficult instrument to play, made me a better player. And it's when you dig out of a hole, instead of YOLOing it and saying, well, if I do it, I do it. If I don't, oh well. No, you dig yourself out of a hole, you're going to be a much better trader for it. It's a really, really great question. But, again, how do you get out of it? Take some time, let go of the venom, go back to basics, start small, and build from there. The way you got to where you were is how you got to get back to where you want to be.
Thank you, Hoag. We all appreciate that. And thank you all for the questions. We're going to cut out of group coaching now. We've got Eddie and Dolby time in the staging area. Rips is going to be joining us real shortly. We're going to get ready for the FOMC announcement out at 1 o'clock Central Time, coming up real quick. There they are. Dolby, Eddie.
All right.
I will catch you guys later.
Thank you, JD.
Enjoy the ride, guys.
Thank you, Hoag.
Thank you.
All right, my friends. We've been waiting for this for such a long time. Yes, and we've got our all-stars here to walk us through, or maybe run us through. And I'm going to pass this over. We got Dolby time and Rips. Rips, how are you today?
I think Rips just joined. He might be
Did he just
muted. We threw him right into the frying pan immediately. Let's see if he's
Well, then, D-Time, how are you doing?
I'm doing good. I had a lot of fun this morning with Jay and Andrew and MP. I thought that was an incredible segment. Can't wait to get that put up on YouTube for later viewing for all the people out there. It was awesome. And now we got FOMC coming up with Rips. Could not be happier.
Yes, we do. And it's coming up here soon. So I'm gonna back out of here. I'm gonna let you guys get set up. And remember, hey folks, check your platforms, okay? If you want to play it, play it. If you don't, make sure that you don't have a position on, because if you get caught, it's not going to be happy, okay? It's not going to be good. But otherwise, we'll pass that over as soon as we get Rips in.
Eddie,
So, D-Time, what do you think's going to happen?
Love the jousting.
I got no idea what's going to happen. No one knows what's going to happen. All the pros are sitting on the sidelines. And there's some
Well, here we
shark
go.
music making me nervous already. Waters are not safe right now. Waters are not safe. Is that because FOMC or is that because Rips is in the water? I don't know.
Oh, goodness
don't know,
gracious.
but,
How's everybody doing this afternoon? Are we all ready to party or what?
Oh, let's
Oh, yeah.
party.
If this is your first time ever trading FOMC, I would say please be very, very cautious out there. This is a one-way ticket to get your account blown in a lickety-split moment. So just be very, 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 very careful out there because this is not the time to be a hero. I'm going to be trading a combine myself. I'm not going to be trading any of my XFAs or my live account because I'm actually locked out of my live account right now because I hit max loss on it earlier. We'll talk about that later in the segment, of course. But as you know, FOMC right now, the rate decision, it's expected to be a pause, but that's not what we're looking for. We're looking for Jerome Powell to speak at 2:30, where we're going to be hearing from Mr. Jerome Powell himself, where he's going to talk about the path forward. And that is what matters today, folks. So buckle in. It's going to be a bumpy ride in here about 5 minutes and counting down.
Yeah, Rips, like what you said about this being a one-way ticket to blowing your account. I always say it's a one-way ticket to Palookaville, but in my experience, trading these days, you can be tremendously profitable or just get smoked. And in adding up all of the profits and losses of the days that I've done that, I'm about even. So I'm with you, Rips. I don't play. I don't want to take that risk because I'll make money this time. I'll probably lose money the next time.
Yeah, this is one of those events where if you are keen on trading it, if you've never traded this type of volatility event before, trade it in your practice account, trade it in your sim account, or just don't trade it at all. It's just one day. It's not going to make or break anything. I've already accepted the risk. I'm probably going to be trading a combine on the print and maybe on the subsequent press conference from Jerome Powell. But that's a combine. I've assumed that risk already, and I know what I've been getting into. I have made amends with myself saying that, hey, Rips, if you blow this account, that's perfectly fine. So if you've accepted the risk before the trade has started, I think that's where you want to go into this with a clear head.
Mm-hmm.
Don't go into this thinking that you're going to be making tens of thousands of dollars. Take the downside risk first on the table before you start thinking with those hungry eyes.
100%. Always think risk first, right?
Exactly right.
You should. You should. I actually wonder if we can get a poll in chat. Is this your first FOMC experience? I know we got some veterans in there, but we have a lot of new traders at Topstep. So I'm kind of curious to see if this is your first FOMC. Maybe we can get a little poll in there. It's definitely not my first rodeo. Highly recommend sitting on the sidelines and watching the fireworks because it is gonna be wild.
Maybe it could be a nothing burger too until Powell starts speaking.
Yeah, I do want to keep an eye on the Fed fund futures that are being traded. Right now, we have close to about a 50% tapering of the rates starting in March, and then every subsequent month that follows that. Right now, the markets are kind of pricing in over the 3 rate cuts that the S&P dot plot suggested back in December. So we'll have to see if Powell takes a dovish or hawkish tone during his press conference. The Q&A is where it really comes alive, and that's where we're going to have most of the information that's going to be swaying the market. We're going to have an initial reaction on the print here in about 3 short minutes. But after that, we're going to be kind of in a holding pattern where the market is digesting the fact that 97%, 98% chance is pricing in a pause right now. But if that kind of comes away from that, if for some reason we have a rate cut right now, I do think the markets would jam up on that. But again, we're talking about this is a 1% chance of that happening. It's all but certain that we're going to have a pause for the rates today.
Yeah, we're starting to see the dome get pretty thin here, mostly 40s and 50s in the dome and the S&Ps here.
Yeah, I'm seeing that very similar here in the NAS as well. A lot of order book, a lot of the orders are clearing out right now.
Yeah, we're down to single digits pretty much everywhere in the NASDAQ as far as the liquidity
that
is
is
concerned.
to be expected.
Joe K. I'm very happy that I was able to help in any way, of course.
Yeah, I was listening to your talk there, Hoag. It was really just solid gold stuff, as always. Very nice stuff.
Well, thank you. I do my best. There's so many great people and so many great guests, of course, present company included, Reps, that, there's just so much there's so much great stuff happening here. It's like, you guys don't even need me. I could just go away.
Yeah, right.
Oh,
we
no
would
way.
be missing a lot without you, Hoagie. I hope you stick around for a very long time here.
Thank you. I appreciate that, Rips. I appreciate that. Thank you very much. It's all, just trying to help, right?
100%. We are about 90 seconds away from the rate decision here. Again, the money markets are pricing in a 98% chance of a pause. If there's anything that deviates from that, we'll have a huge reaction. We may even have a huge reaction on the upside to a pause. But again, this can be a lot of shakeouts and fakeouts. So again, if this is your first FOMC, please trade with caution or just trade on a practice or sim account or don't trade at all.
I would recommend the latter. Yeah, so the ladder's going to get real thin, and then what ends up happening is that because the ladder is so thin, there's no liquidity, you can get some massive, massive moves really, really quickly. And no stop really has a chance, no matter how wide, if they decide to really run things up or down. 5 minutes later, you could be in the same spot we just were. We are 45 seconds out from FOMC. Maybe a little moment of silence for all the Topstep traders who currently are not watching TopstepTV and don't even know that there's a meeting happening right now. They're about to get a very, very rude awakening in the markets, which seems to happen every single time.
What happened to all the orders?
Yeah, what was there a glitch in the system? Nope. The news event. Should have marked it on your calendar.
15 seconds, everybody. Buckle up.
All right, here we go.
5, 4, 3, 2, 1.
There it is. What do we get?
Yeah. Still looking. See how thin that dome, it just whips.
They removed the reference to additional policy firming. That is a big change right now. So we'll have to see if the market reacts on that.
5.5.
It's like pushing to the downside temporarily. Never know if that's going to stick or not.
All right.
I mean, I'm on Topstep X right now, and my ladder is
A little
looking a little real thin. Looking about as thin as my hairline.
Market has traded down past that 33 level. That was kind of the crux that was holding up the market earlier, where we had the big flush down. So we'll have to see if there's any bidders that are showing up in the market right now. We're looking at the Magnificent Seven right now. Tesla, Nvidia, Meta, Microsoft, all sort of rolling over here. But if the market is going to catch a bid, I think this would be the spot where it is. I'm listening to all the squawks, kind of analyzing everything that kind of came out here on that print.
Oh, nice. Which squawk do you have in your ear right now?
I got about 7 of them. I'm trying to listen between all of them that are going off right now. It's a noisy amount of chatter right here. I'm just trying to pick out the key points that they're talking about. But the biggest thing, I think, is the potential that the whole thing of talking about policy firming. They took that out of the notes here. So that is a big deal that they have left that out. So that we're going to see how the Q&A comes in with Jerome Powell here. That's going to be in 28 minutes now, and he'll probably be asked about that omission.
Well, coming over the wire here, the Fed does not expect it'll be appropriate to reduce rates until it is greater confidence inflation is moving substantially towards 2%.
Yeah, so very, very hawkish on that terminology.
Mm-hmm.
Not seeing a lot of action in crude. But gold down pretty substantially, actually. On this 5-minute bar, we went from 2066 down to 2058 in about 5 minutes. So pretty steep move in gold right now. I'm assuming the ladder is also going to be very thin in that market for more minutes.
Yeah, we got
yes. Yeah, I was
A
taking a
little bit of
dive
a
as well.
jump. Looks like a little bit of a jump maybe in the U.S. dollar. Seeing the UVXY, the short-term VIX ETF, got a nice little boost here at that 2 o'clock or at that 1 o'clock Central Chicago time, and it just seems to be kind of tapering off a little bit. I got a level here I wrote down a while back, 48.99, which kind of puts us right up against a trend line here. What are you seeing on Bookmap here, Rips?
Well, we had this pressure back down to that 330 level in the NQ. If we're looking over at the S&Ps right now, it caught right below that 4,900 level. So I do want to see potentially whether or not that 4,900 level is going to continue to hold here. We had a lot of orders going off just tucked below 4,900 all the way down to 48.95. A lot of liquidity being entertained there. But most of the liquidity from today is kind of sticking out betwixt 49.09 all the way up to 49.15. So we'll have to see on this press conference, do we have that continued sell-off kind of persisting here? That's what I'm going to be looking for.
Yeah, it looks like at least for now we found those buyers down around 4,900 if they can hold.
Yeah, that's the idea right now, seeing whether or not that's going to be weak. We had some weakness down there on the NASDAQ below those 30s, but then we pumped back up towards that 351 and 3/4 level. So if that continues to reject, that would be a sign of weakness for me and could potentially find a trade there. So that's what I'll be looking for.
Okay. All right.
There's a question in chat for some clarification on the definitions of hawkish and dovish. Rips, can you give us a definition of those two words?
Yeah, so the statement that kind of came out alongside this, again, that was as expected. The rate was 5.5. They did remove reference to potential additional policy firming to consider, quote, any adjustments to interest rates. Do not see cuts until more confident of nearing to that 2% target. That is considered hawkish terminology, hawkish verbiage, because if they were going to come out and say that we are very close to that 2% target and rate cuts are right around the corner on the table, we've reached a sufficiently restrictive tightening cycle, anything of that nature would help to bring the market to the top side because that would be considered dovish commentary. So, but what we've seen in other FOMCs is the statement comes out like this. It's a unanimous vote, which I do believe this was unanimous. But you will see in the press conference that Jerome Powell will sometimes take a turn. And if, even though this is hawkish, he might start to speak very dovish to the Q&A, which is what we saw, I believe, in 2022, which caused the market to then rally through most of 2023. So we'll have to see. The press conference is the big part of this. The rate decision is only just a small piece, considering that Jerome Powell has been able to sway the market pretty much every single time he does these Q&As.
Okay, and who's asking these questions to Powell? Is it just like financial websites, CNBC, those types?
Well, we
of
will
people?
have the fan favorite, Nicky Timrose from the Wall Street Journal. He usually asks the most poignant questions for Mr. Jerome Powell. He's one of my favorites. He always asks the ball busters, so to speak. And he will definitely be asking questions that will spark some volatility in the market. So definitely be looking out for Nick Timrose to be asking questions for WSJ.
Oh, nice. I'm gonna look that up right now. Get him shared in chat. I've not heard that name, but that's what I was wondering. It's like sometimes these, people do Q&As and like they just get lobbed softballs the entire time, and it's not really like an in-depth Q&A per se. They're just doing it because they have to. But now that we got this guy, he just pointed this out. I'm going to link him in chat. The gentleman that you were talking about, Nick Timrose, asking the hard-hitting questions today in about 20 minutes or so.
Yeah, we're going to have that depending on whether or not we have climate activists who are interrupting the conference again this time. We'll have to see whether or not that's happening this time around. If not, then we'll probably be starting here in about 22 minutes, and it's going to be a doozy. The thing about this press conference, however, is that Jerome Powell can say something extremely hawkish, which can barrel down the equities. It can make equity futures go down to the south side. And then the next question, he can say something extremely dovish, and that can make the markets give back that entire sweep to the downside. And this is why we say FOMC is so completely dangerous to trade, because it can look like it's flushing and holding a flush, and then you get an immediate reversal, 80 to 100 handles on that reversal, and you just get your tuchus handed to you. So again, trade with caution if you're going to trade this at all. It's going to be extremely volatile, extremely dangerous, and what looks like a really, really nice trade may not hold for very, very long. So again, just be very, very careful out there.
Rips, it's my understanding that there will be like a prepared statement that will be released right at 11:30. He will then speak. He will read the prepared statement, and then the press will get their chance to ask their questions. That's right?
That is spot on, but there is one detail that is quite important. That prepared remarks statement that he does have is absorbed by the algorithms the moment that clock strikes. That's when they get released, and the algorithms are able to scan that, and they get that immediately. The algorithms will originally react on that. I'll be hearing the squawks in my ear at a human's pace, and I'll be listening to any of the key things. We want to see verbiage like sufficiently restrictive or the lack thereof. If it does lack verbiage like that, we're going to assume that it's very hawkish. But again, this is only one piece because the Q&A opens up an entirely different door. But you're spot on with that. But it is good to note that we will see some rejiggering of prices right around my time. It's going to be at 2:30 here. It's going to be some rejiggering around of those prices right when the algorithms are getting a hold of that prepared remarks statement.
Nice. Yeah, that was really the kind of the thing I was going to point out to everybody was, once that prepared statement gets released, it's all the algos. They just pick up the words that they're looking for and start acting. And so, hey, look out.
As well as there are people who are live streaming from the press conference room that are also connected to algorithms listening to what Jerome Powell is saying. And that is all back tested. And there's AI that's plugged into that they're listening to his tone of voice, his speech, and his actual tone, the content of his words. And they have certain keywords that they're looking for certain statements. And they're also reacting on that. This is a game of milliseconds, of nanoseconds. And every single little thing that he's saying, every algorithm is going to be hanging on that word, believe it or not. And that's the volatility you're going to see. Most of the liquidity providers, the big liquidity providers that are providing for a regular market session during the New York session, they're going to peel back a little bit and probably be giving about 25% of provided liquidity during this time. And that's why we see such large sweeping movements. And especially, if you have a lot of people who are going for a certain price, going for a certain order, marketing in or heavy limit activity at a certain price, these algorithms are also smart about that. They're going to be sidestepping these moves, allowing price to get to those areas much, much quicker as well.
Excellent.
Yeah, that is.
Excellent. And those of you asking what Lacey was saying, she said, stay out.
I was either to the traders or to the squirrel who is running around outside.
Yeah, right.
Applies to both.
Yeah.
There was a question in chat.
Yeah,
I want to relay here.
It was probably Amazon saying it.
Or Amazon, yeah, right. The number is exactly like on December 13th, and we pumped off of that from the release. What makes this day so different to make it plummet off the release? That is a great question. Does anyone want to have an answer to that? I certainly don't.
What was the question there? I missed the end part of that.
So the question is, this number is exactly like the one on December 13th, and we pumped off of that release. What makes today any different if it's the exact same number?
So is it different because we had the S&P dot plot being released during that time, and they expected 3 rate cuts for the year, but the analysts looked at the verbiage used during the statement, the prepared remarks, and they basically said that we're looking at 6 to 7 rate cuts for the year. This is pumping the brakes on that because here we are in 2024, and we're using, they're removing the quote, consider, quote, any adjustments to policy firming and talking about how we're not close to the 2% yet. That is vastly different from the dovish tonality that we saw in December's S&P dot plot and how optimistic the Fed was at that time. They're basically saying that what they've seen in the recent data releases between December and now have not lived up to the hype that is supporting what the S&P dot plot was originally looking for. So it's sort of a pumping the brakes moment, and we'll see if Powell is going to walk any of that back. But right now, it's looking somewhat hawkish to me.
Hawkish, nice. And are we starting to see the ladder fill out a little bit? It's been, almost 12 minutes. Are we starting to see that liquidity return to the markets, or it's still pretty thin?
Looks like the blood's starting to come in again. Yeah.
Well, that's good. Waters are warm. That shark isn't circling anymore.
Well, we have about 15 minutes till the press conference. So these liquidity providers will jump in since we found sort of a small agreement on the price here. We're trading just above 49.05 in the S&Ps, just above 360 here in the NAS. So we have found some players that are kind of stepping back in, providing that liquidity. I don't think that we'll jostle too much until the actual Q&A starts, or rather just even the prepared remarks. So once that starts to happen, we'll see the order book once again clear out before that clock strikes the bottom of the hour there.
Oh, nice. Okay. Well, I'm glad we had you on, because I probably would not have known that there's going to be a Q&A later that is, just as important, if not more important than the release itself.
Mhm.
So still some pending volatility, which will be coming out in about 17 minutes.
When the
Powell will be
market already
freewheeling
prices
that.
in something, sorry, go ahead, Hoag.
I was just saying, the Q&A session is the fun part because Powell has to freewheel then.
Yeah. And when the market has been so keen in pricing in a lot of this stuff right now, they're really looking for what is he saying about the path forward. And I think that a lot of these journalists are really going to be pressing for that. That's why I look to somebody like Nick Timmeros, who's going to be really pressing for that information. And I think that we'll have more clear direction once that's all kind of subsided. There also usually is, I would say, somewhere between 60 and 80% that we do pump when the press conference concludes, depending on where we are. It's generally been a good indication that once the press conference is over, we generally do start to catch a bid, because it's kind of the green flag is waving, saying that there's not going to be any more bumpy volatility ahead. We know that those are all the remarks that we're going to see. That's where the market is settled, and maybe we've oversold at that point. And conversely, we can also have, if we are completely overbought at that point, we could start to have a failed auction up there and come back down to earth. So really, all eyes are going to be on Jerome Powell for this press conference and the subsequent Q&A.
Yeah, looking forward to that. I wonder if we could get that audio piped in. Are they streaming that somewhere? Probably on Darren, some YouTube.
It is actually streamed on the YouTube channel for the Federal Reserve, and I do have that open. I can drop a link in chat here for that if you'd like. It's the actual Federal Reserve's YouTube channel.
Oh, I didn't know they had one. Do they have
Yeah.
There's a lot of jokes.
I
there.
dropped that in
You can
chat
watch
for
it.
everybody there in the YouTube chat, and you can have both of the streams open if that's helpful for you folks.
I didn't know they had their own YouTube. I wonder if there's any deep cuts in there from 5 years ago, like Mr. Beast. He has stuff when he was
Yeah, you can go back and watch the other press conference. There's the gem where he says, "Close the f***ing door." It was an amazing one that he had. But so
Dolby,
this is like I said, this is like our Super Bowl here.
Yeah, this is a good day. James, did I hear your voice?
I was just gonna say, Dolby, you gotta go check out their lo-fi beats.
Yeah, they have a lo-fi beats. I wanted to see if Powell has any videos from when he was going to Grateful Dead concerts, 20 years ago, or Fish concerts, whatever he was going to.
He just went to a Dead and Company this year.
Yeah. There's probably some Easter eggs in that channel somewhere. I gotta go find those.
I was there.
You there with him?
No. I didn't see any Easter eggs, but I found a few.
Would you go up and shake his hand and be like, "I'm a big fan of your work, Mr. Powell"?
No. I don't think he went in Chicago. I think he went somewhere out on the East Coast, somewhere near Washington, wherever that was. But
Oh, nice.
yeah,
nice.
he's a fellow Deadhead.
There is some analysts that are already starting to bark here prior to the press conference. One of the analysts that I do really trust here talking about that the risks are coming into, quote, better balance here, and that the path forward doesn't look good as far as cuts, because they're saying that it's too soon to cut at this moment. So a little bit of a pause there from the question from earlier, talking about the difference between December and now, kind of echoing what I had said earlier.
Interesting. And typically, the markets want to see lower interest rates, right?
Absolutely. I mean, lower interest rates,
yeah.
it's very simple, right? Lower interest means that more people are borrowing. Borrowing credit is the same as more cash in the economy. Credit is equal to cash. The more credit and cash in the economy, the stronger that economy is going to be, and the more commerce that economy will be producing. So yes, lower interest rates means more borrowing, more credit, more money in the economy, and wealthier folks.
I don't know how you do it, right, Rips? You're listening to like 4 other people in your ear and then you still hear us. How do you do that? I can't do that. I can't hear 2 things at once.
I don't know. And I have I can carry on different types. I can hear this stuff over here. I can hear you folks here. I can read chat over here. Somebody asked me earlier, they said, "Hey, Rips, what's your P&L on the day?" Rips on Adderall. No, actually, no Adderall for me. But no, somebody asked me, what's my P&L for the day? I hit max loss on my live account. That is the first losing day that I've had in 9 trading days. This is my 10th trading day. And this was my first losing day on day number 10. And I hit a $3,000 loss. So that brings the total for the last 10 sessions. I'm up about $17,000 in profits. So very happy.
That's good. We did talk about you on Shoulder Tap. Mick did
right
mention
on.
you in nine straight winning days. Yes, of course. Of course.
Yeah, we've been on a hot streak recently, and today that streak came to a close, which means we get to start an all new hot streak tomorrow. It's going to be great.
I love creation of a new hot streak.
That's the way I look at it. And plus, you get a little pressure when you're holding on a hot streak. I mean, you've obviously been there before, Hoag, when you have winning day after winning day after winning day, you start to wake up the next day, you say, geez, I mean, this is great, but when's this thing going to end? You start to get a little bit worried about it. So it's actually a little bit of relief off my shoulders. And that's the other thing that I just love about trading on TopStep is that, only losing 3,000, I was up $19,000, $20,000 over those 9 days. So to just lose $3,000 is just a little chip off the block there. And we're going to be back to battle over, whenever we have another trade opportunity that presents itself very well to us.
Yeah, I learned a while back, if I have a hot streak and I start getting nervous about it, like, all right, I got to keep this hot streak going. I'm better off taking a day off and breaking the hot streak that way than actually like blowing up an account one day. Because I did that. I've done that a few times. So you got to take that pressure off the hot streak once in a while.
Yeah, exactly. I mean, whatever you can do. So much of it is a mental game, you versus you. You have your own demons that you're always fighting as a trader, and trying to quiet those voices the best you can is always a difficult thing. But, like I said earlier, I'm actually a little bit relieved that the hot streak is finally over, so I can relieve a little bit of that pressure from myself. Did already journal too. I did some one-on-ones earlier with some folks that's talking about the trades that I took. But yeah, I mean, it was the trade that I took. I would have taken the exact same trade again. It was the biggest dump that we had in the NQ, but I was just a little bit early and sized up a little bit too much in it. I ended up posting it on my Twitter account. Coach Dakota in here says Sunday night he hit his daily loss limit too. Today he finished up 16,500. Way to go there, Coach Dakota. Amazing job.
Wow. That is impressive. Yeah, I saw that on the Twitter, Rips. There's nothing worse than right direction but wrong entry. That one stinks.
Yeah, I was I couldn't take, if I would have been able to take 3 more handles of heat, that would have been a $20,000 plus winner for me. And unfortunately, that's just the way it goes from time to time. I've been in that doghouse plenty of times where you just do not have enough to take that little piece of heat, or you have your stop in the wrong spot. And like I said, I would have taken the same trade exactly again. And that's what you want to do to evaluate yourself. You look at your losing trades and you try to be honest with yourself and you say, would I do the exact same trade? If not, what could I do to adjust it? You journal that all out. You journal your emotional state in the trade, and you really get honest with yourself, evaluating what would you do differently? How could you perform differently? And, that's how we grow as traders.
Yeah, I mean, it's good to hear that you wouldn't change a thing. It's nothing worse than being like, I would have done this, and this differently. But to me, that's the sign of a trader who knows what they're doing.
You want consistent information. You got to do things consistently.
Yeah, for me specifically on that trade, given that the reward was potentially $20,000 in that trade, the risk being only $3,000, well over a 6-to-1 risk to reward, I thought it was a really nice setup and a really nice trade.
That's awesome. I tried working a short in CL earlier. We did not get filled over 76, so we're just going to let this one play out. And then maybe we'll do some pulled pork later for NASDAQ and Power Hour.
Yeah, Power Hour depends on the press conference, but we've usually seen these things really go all the way to the bottom of the hour into Power Hour. And then basically the final 30 minutes is when they cut the mics off, and that's it for Mr. Powell. So we'll have to see how long this press conference runs as well. It should be pretty interesting to see.
Yeah, and that's coming up in 8 minutes here. So in 8 minutes, we're getting a Q&A with Powell about FOMC. Volatility should be coming back to the market just a little bit. Looks like crude is currently rolling over from 76 even. It's headed down about 30 cents already. trading about 75.70 and headed lower with some support at around 75.60. So a little bit of room to the downside to go before we start making new daily lows. And actually, let's talk about the tilt a little bit. Relatively even across the board. 57 long for ES, 56 short for NASDAQ, 50-50 in CL, but gold, the outlier, 77% short in GC currently.
Yeah, we did also see the S&Ps finally crack that 4,900, but it's not a strong crack. It's kind of struggling down here. So it does beg the question whether or not this is a liquidity grab before the Q&A and before the press conference here. You see this often where you have sort of this double bottom forming out, and then the press conference starts, they take all of this liquidity down here. And even if that's not the big idea, even if the day is going to end down right now, NQs are down a 1.5. S&P's down just over 1% here. So we will have to see whether or not this is just a simple liquidity grab. We'll shake and bake to the top side, grab more liquidity for the shorts, and then send it much lower. But this is kind of shaking up to be what could be just barreling to the south side for the entire conference here. This might be something where if Jerome Powell comes out hawkish and remains hawkish throughout even the Q&A, this market may not be able to save, and those shorts may finally get their day today.
Any levels that Hoag you're looking at to the downside for NQ? Do you have any weekly kickoffs down there or anything?
Yeah, 48.82 is weekly kickoff, and it was just a big congestion area from back third week of January. There's a naked point of control down there, and below that, I think 48.30 is the next level. That's where we really started to kind of drive higher off of the last FOMC meeting. Was at 48.30. Let's see here. Yeah, that was a Friday. That was unemployment or PCE number, the 19th of January.
Yeah, I think I got that on my. Yeah, I see what you're talking about. You're talking about that stretch of tightly bound days between the 11th of January and the 17th. Is that kind of where you're looking at?
No, that was after the kind of breakout above that area of balance. We broke out on the 19th of January. I can put it on the daily chart if we want to get a closer look at this here.
I have the daily up in the NASDAQ, and there's not a whole lot to the downside. I don't see anything probably until 100 evens, or maybe things start getting interesting again. Rips, what do you think about downside stuff for the NASDAQ if we do decide to go lower?
So I got the chart up here if you want to
nice.
Look at the S&Ps. So, we got this trend line right here off the previous all-time highs. We're testing that now below that 882, which is the kind of a point of control in this 2-day balance here. Below that, there's a lot of space down to really the breakout point, which was again here on Friday the 19th. This was a month-long breakout, and this breakout kind of put us into this next upside move. I don't see this market really changing market state unless we can really start to show some acceptance below this 48.30 area level ish. But there's plenty of there's some visuals and plenty of space below those visuals if we do start to drive to the downside. I find it difficult to believe that that's actually going to happen after all the most recent market activity, but that's usually when it's the best.
In the NAS, I'm looking down here at this 294.5 level, and that is kind of where we bounced earlier today. We've had this level for some time now. If we do clear out below that level, we do have levels below that, 236.75, 190 flat, 143.5, and all the way down at 108.25. Now, you might say that's a tall order, but seeing that the market could flush 200 points on the FOMC Q&A is not that tall of an order. It's something that could absolutely happen. Enough volatility starts shaking to the downside. Shorts get hungry eyes. The big buyers that have been holding their positions long might get flushed out and look for a lower entry. We could definitely see the market rolling over here hot and heavy, but it does start with me whether or not we're breaking below that 294.5 level. To the upside, however, I do want to see clearance above 387.75. If we do get above that, we have 433.5 to entertain. We have some overhead supply above that that's rested about 480 or so. If we're clearing out above 480, we do have a chance to get above into the 500s. Two levels I'm watching the 500s, 523 flat and 537.5.
Nice. Chad, I hope you got that. And chat, if you have questions for Rips or Hoag or myself, feel free to drop those in chat, and I will scoop them right up and ask them to the necessary people to get you the best answer possible. We are 3 minutes out from the Q&A with Powell. Head over to the Federal Reserve YouTube page where they post the videos. Did not know they had one.
Yeah, there's actually 20,000 people that are currently watching that stream right now, just to show you how many futures traders or just traders in general we have out there.
And Dolby, why would we send them there when you could just stay here?
Well,
wow,
I mean,
look
if
at
you
that.
Want, well, you know.
That is production quality right there, I must say.
Oh, look at this. Oh, look at this. We get to watch and comment, Mystery Science Theater 3000 style now.
Oh, I'm here for this. This is going to be amazing. If we can actually pipe in the audio as well, that would be epic.
Oh, that would be
We
awesome.
absolutely can. I will be turning it on and off once it gets started. Here is it on. Let's see what it sounds like.
Oh, that is my jam. My goodness.
That's America, baby.
You're tuning in now to Topstep Radio 99.8.
Oh, that was
All
cool,
right,
Rips.
so back to you,
Let's
gentlemen.
like that on.
WTST.
Dude, I feel like a little loser right now. I'm on with like the two best sounding guys on YouTube right now. Oh, Hogan Rips. He just put me to sleep one night. Just give me a bedtime story.
Yeah, that's the idea, is to put everybody to sleep.
Oh, so calming. So calming. Even True had a nice calming voice when he was on earlier today. Everyone is just smooth as silk.
That was an amazing, amazing guest, by the way. That was
he was great.
Amazing. Yeah, really, really good stuff. I'm always, the quality of guests, save for maybe yesterday, have always just been tremendously great.
Oh,
yeah, we agree, Lacey. We agree. Chad, I have to wonder, whose music do you prefer more, our music or the Fed music? There's a pretty big difference between the two. Oh yeah.
She's still barking.
So yeah, we're right at the bottom of the hour here, and it hasn't started yet. So Jerome Powell might be a little bit late to the conference here. Oh, we see the podium here.
Does he typically show up fashionably late?
No, he tries to be on time. He really is pretty good with keeping in time here. So, it does look like I'm looking for Nicky here. Do I see Nick?
They locked him out.
There he is. Yeah. Yeah, they locked him out. They closed the door on him.
Yeah, well, let's keep that door in frame, Federal Reserve. I want to see if anyone tries busting through.
There we go. He's coming out.
Well, here we go.
And the audio's on.
Good afternoon. My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. The economy has made good progress toward our dual mandate objectives. Inflation has eased from its highs without a significant increase in unemployment. That's very good news.
The path forward is uncertain.
But inflation is still too high. Ongoing progress in bringing it down is not assured, and the path forward is uncertain. I want to assure the American people that we are fully committed to returning inflation to our 2% goal. Restoring price stability is essential to achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Over the past 2 years, we have significantly tightened the stance of monetary policy. Our strong actions have moved our policy rate well
Policy rate is into restrictive territory.
And we've been seeing the effects on economic activity and inflation. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals are moving into better balance. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a solid pace. GDP growth in the fourth quarter of last year came in at 3.3%. For 2023 as a whole, GDP expanded at 3.1%. bolstered by strong consumer demand as well as improving supply conditions. Activity in the housing sector was subdued over the past year, largely reflecting high mortgage rates. High interest rates also appear to have been weighing on business fixed investment. The labor market remains tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 165,000 jobs per month, a pace that is well below that seen a year ago, but still strong. The unemployment rate remains low at 3.7%. Strong job creation has been accompanied by an increase in the supply of workers. The labor force participation rate has moved up on balance over the past year, particularly for individuals aged 25 to 54 years, and immigration has returned to pre-pandemic levels. Nominal wage growth has been easing and job vacancies have declined. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. Inflation has eased notably over the past year, but remains above our longer run goal of 2%. Total PCE prices rose 2.6% over the 12 months ending in December. Excluding the volatile food and energy categories, core PCE prices rose 2.9%. The lower inflation readings over the second half of last year are welcome, but we will need to see continuing evidence to build confidence that inflation is moving down sustainably toward our goal. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We're highly attentive to the risks that high inflation poses to both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective. Over the past 2 years, we have raised our policy rate by 5.25 percentage points, and we've decreased look is uncertain, and we remain highly attentive to inflation risks. We are prepared to maintain the current target range for the federal funds rate for longer, if appropriate. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals are moving into better balance. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we've seen on inflation and ultimately require even tighter policy to get inflation back to 2%. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess the incoming data, the evolving outlook, and the balance of risks. The committee does not expect that it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably toward 2%. We will continue to make our decisions meeting by meeting.
We're going to make decisions meeting by meeting.
Back down to
very
our
much
2%
Powell-esque.
goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our questions.
Question time.
Yeah, thanks.
This is where all the fun is.
Thank you. Tried to pop over VWAP, got about 10 points and said nope, and rolled right back over again. Let's get to the good stuff. Who has the best questions?
Do we still have that audio?
Make those decisions. How
I
are you
think so.
weighing
Seems we did.
strong growth and consumer spending data against the sort of solid inflation progress you've been seeing?
Sorry, say that last part again.
How are you weighing the growth data and consumption data, which have been surprisingly strong, against inflation data?
Okay. So what are we looking for to get greater confidence? Let me say that we have confidence. We're looking for greater confidence that inflation is moving sustainably down to 2%. Implicitly, we do have confidence and has been increasing, but we want to get greater confidence. What do we want to see? We want to see more good data. It's not that we're looking for better data. We're looking at continuation of the good data that we've been seeing. And a good example is inflation. So we have 6 months of good inflation data. The question really is, that 6 months of good inflation data, is it sending us a true signal that we are in fact on a path, a sustainable path down to 2% inflation? That's the question. And the answer will come from some more data that's also good data. It's not that the 6 month data isn't low enough. It is. It's just a question of, can we take that with confidence that we're moving sustainably down to 2%? That's really what we're thinking about. In terms of growth, we've had strong growth. I mean, if you take a step back, we've had strong growth, very strong growth last year, going right into the fourth quarter. And yet we've had a very strong labor market.
Getting stopped out max profit there.
So I think, whereas a year ago we were thinking that we needed to see some softening in economic activity, that hasn't been the case. So I think we look at stronger growth. We don't look at it as a problem. I think at this point we want to see strong growth. We want to see a strong labor market. We're not looking for a weaker labor market. We're looking for inflation to continue to come down as it has been coming down for the last 6 months.
And I'm sorry if I could just follow up very quickly. When you say that you want to make sure that it's a true signal, is there anything that you're seeing in the data that makes you doubt that it's a true signal at this stage?
No, I think I would say it seems to be the likely case that we will achieve that confidence, but we have to achieve it, and we haven't yet. And so, I mean, it's a good story. We have 6 months of good inflation, but you can, and you know this, you can look behind those numbers and you can see that a lot of it's been coming from goods inflation, for example, and goods inflation running significantly negative. It's a reasonable assumption that over time, goods inflation will flatten out, probably approximate zero. That would mean the services sectors would have to contribute more. So, in other words, what we care about is the aggregate number, not so much the composition, but we just need to see more. That's where we are as a committee. We need to see more evidence that sort of confirms what we think we're seeing, and that tells us that we are on, gives us confidence that we're on a path to a sustainable path down to 2% inflation.
Nick.
Nick Timros of the Wall Street Journal.
There he is, Nicky Tims.
Raised rates rapidly over the last 2 years for two reasons. One was the risk of a wage price spiral. Two, there were risks of inflation expectations becoming unanchored. This morning's ECI report for the fourth quarter shows private sector payroll growth running at a sub 4% pace. Inflation expectations are very close to where they were before the inflation emergency of the last 3 years. And given that you appear to have substantially cut off these two tail risks, and that you've judged here today current policy is well into restrictive territory, what good reason is there to keep policy rates above 5%? Are you really going to learn more waiting 6 weeks versus 3 months from now that you have avoided those two risks?
So, as you know, almost every participant on the committee does believe that it will be appropriate to reduce rates. And for partly for the reasons that you say, you know, we feel like inflation is coming down. Growth has been strong. The labor market is strong. What we're trying to do is identify a place where we're really confident about inflation getting back down to 2%, so that we can then begin the process of dialing back the restrictive level. So overall, I think people do believe, and as you know, the median participant wrote down 3 rate cuts this year. But I think to get to that place where we feel comfortable starting the process, we need some confirmation that inflation is in fact coming down sustainably to 2%.
If I could ask differently, if you hold rates high as inflation moderates, as it has been, target rates will exceed the prescriptions of the Taylor rule or its variants. What would be the reasoning for holding rates higher than the levels recommended by those rules in the current instance?
Well, look, I think, as you know, we consult a range of Taylor rules and non-Taylor kind of rules. We consult them regularly. They're in our teal book, and they're in all the materials that we look at. But, you know, I don't think we've ever been at a place where we were setting policy by them. And they're, depending on the rule, it will tell you different things. There are many different formulations. Another way to think about it is implicitly is so. In theory, of course, real rates go up if holding all else equal as inflation comes down. But that doesn't mean we can mechanically adjust policy as real rates, as inflation comes down. It doesn't mean that at all because, for one thing, we don't know. We look at more than just the Fed funds rate. We look at broadly financial conditions. But in addition, we don't know with great confidence where the neutral rate of interest is at any given time. But that also doesn't mean that we wait around for to see the economy turn down, because that would be too late. So we're really in a risk management mode of managing the risk, as I mentioned in my opening remarks, managing the risk that we move too soon and move too late. And I think to move, which is where almost everyone on the committee is in favor of moving rates down this year. But the timing of that is going to be linked to our gaining confidence that inflation is on a sustainable path down to 2%.
NASDAQ just made new daily highs.
Thanks, Chair Bell.
Yeah,
I'd like
if you want to flip over to my screen, we got another one here. About to close this out.
The statement that inflation still remains elevated. You've pledged to cut rates before inflation reached 2%.
Some covers there.
So that implies that there's some sort of intermediate step here on inflation, and that a cut would be consequent with a change in the
And covering
statement
that there.
language that inflation remains elevated. What's the step down from there?
Yeah, I don't know that we've worked out the particular statement language and that kind of thing. I would just say, if you look at where 12-month inflation is, and it's still well above core is 2.9%, for example, 12 months, which is way down from where it was. Very, very positive development, very fast decline, and the case is likely that it will continue to come down. So that's where it is. But we're wanting to see more data.
So if I could follow up on that, the statement allows that you want greater confidence on inflation falling before you cut, but it doesn't mention the other side of the mandate, a slide in employment. Would a slide in employment also bring you to the point of cutting rates?
Yes. So let me say that we're not looking for that. It's not something we're looking for. But yes, if you think about, in the base case, the economy is performing well, the labor market remains strong. If we saw an unexpected weakening certainly in the labor market, that would certainly weigh on cutting sooner. Absolutely. And if we saw inflation being stickier or higher or those sorts of things would argue for moving later. In the base case, though, where the economy is healthy and we have ongoing growth, solid growth, we have a strong labor market, we have inflation coming down. That's what people are writing their SEP around. And in that case, what we're saying is, based on that, we think we can and should take advantage of that and be careful as we approach that question of when to begin to dial back restriction.
Claire Jones, Financial Times. Just to circle back to the greater confidence aspect of the statement, there's been a lot of unanimity in recent meetings. I'm just wondering, going forward, when it comes to all needing greater confidence, is the unanimity, or at least consensus among FOMC members, about what the threshold for that greater confidence is? And if not, could you maybe tell us a little bit about the discussion today on, what the variations between FOMC members was on what constitutes enough confidence to cut rates, and also if there was any variation on how quickly that greater confidence threshold could be reached. Thank you.
We're not really at that stage. There was no proposal to cut rates. Some people did talk about their view of the rate path. I would point you to the SEP as good evidence of where people are, although it is one cycle later. So, we're not at a place of really working out those kinds of details because we weren't actively considering moving the federal funds rate down. I will say there is a wide disparity, a healthy disparity of views, and you see that in public statements, in the minutes and the transcripts when they're released every 5 years. So we do have a healthy set of differences, and I think that's actually essential for making good policy. We're also able to reach agreement generally because we listen to each other, we compromise, and even though not everybody loves what we do, they're able to, for the most part, able to join in. To me, that's a well-functioning public institution.
Rachel.
Hi, Chair Powell, Rachel Siegel from the Washington Post. Thanks for taking our questions. So over the past few years, there have been all these real-time indicators that helped us gain a sharper understanding of where the economy was, like open table data or office attendance. You've talked about vacancies in the past. And I'm wondering at the start of this year, what might be on that dashboard for you that's giving you the clearest picture of the economy, including on rents, if you could touch on that.
Including?
Rent costs.
Yeah. Well, so we're not, it's not the pandemic, so we can actually rely on more traditional forms. People are working, they're getting wages, and the economy is largely reopened and is broadly normalizing, as you see. So I wouldn't say we're looking at that sort of more innovative data as much. You point to rent, so of course we follow the components of inflation very carefully, which would be goods inflation. I talked about that a little bit. You mentioned housing inflation, so the question is, when will these lower market rents find their way into measured rents as measured in PCE inflation? And we think that's coming, and we know it's coming. It's just a question of when and how big it'll be. So, but that's in everyone's forecast, I would say. So that will help. But at the same time, we think goods inflation will probably, it's been giving a lot of disinflation to the effort, and probably that declines over time. But it may well have some more time to run. The supply chains are not perfectly back to where they were. In addition, it takes time for the healing process to get into prices. So there may be still a tailwind. We'll find out with that. So we look at the things that relate to our mandate very carefully, and as you would imagine.
I guess just as a quick follow-up, do you feel comfortable at this point saying the economy has reached a soft landing, or is that part of looking for more confidence?
No, I wouldn't say we've achieved that, and I think we have a ways to go. Inflation is still, core inflation is still well above target on a 12-month basis. 12 months is our target. Certainly, I'm encouraged, and we're encouraged by the progress, but we're not declaring victory at all at this point. We think we have a ways to go.
Steve.
Thank you, Mr. Chairman. You've said that you would know the neutral rate by its works. So I'm wondering what you could tell me. How do you believe the neutral rate is working? We're telling you right now that growth is stronger. In other words, how much is the economy really being restrained right now by the current funds rate? And how much restraint does it really need additionally if inflation is still coming down?
So I think you do see in the interest-sensitive parts of the economy, you do see, for example, housing, you see the effects, you do. Your second question, though, really, I think is important, and that is a lot of this has come through, a lot of the disinflationary process has come through the healing of supply chains and also of the labor market. So you've seen that other set of factors is really different from other cycles and has brought that working with tighter policy, which has enabled the supply side to recover, I think is that mixture has been behind what has enabled this. So no, we really do think that we're having an effect broadly across the economy. I would point to the interest-sensitive parts of the economy as well as spending generally. But it's a joint story. It's a complicated story.
But how much restraint are you actually imparting to the economy, would you say, relative to the neutral rate?
So I think it's of course, you know that it's not something you can identify with any precision. But a standard approach would be to take the nominal rate, 5.3%, let's say, and subtract sort of a forward measure of inflation. If you do that, and there are many, many ways to calculate that neutral rate, but that's one I like to do. And you're going to get to something that is materially above mainstream estimates of neutrality, of the neutral rate. You will. But at the same time, you look at the economy and you say, this is an economy that grew 3.1% last year. And you say, what does that tell you about the neutral rate? What's happening, though, is the supply side has been recovering in the middle of this. So that won't go on forever. So a lot of the growth we're seeing it isn't just a tug of war between interest rates and demand. You're getting, more activity because of labor market healing and supply chains healing. So I think the question is, when that peters out, I think the restriction will show up probably more sharply.
Thank you. Sorry. Thanks for taking the question, Mr. Chairman. You mentioned earlier we're not seeking a weaker labor market. I think that you said. Can you talk a little bit more about that? Do you think the labor market now is back to quote unquote normal, and that we can achieve the inflation target without wage gains coming back down to what they were pre-pandemic? Even with today's ECI levels, they were still above those pre-pandemic levels.
I think the labor market by many measures is at or nearing normal, but not totally back to normal. And you pointed to one or more of them. So I think, job openings are not quite back to where they were. Wage increases rather are not quite back to where they would need to be in the longer run. I would look at it this way though. The economy is broadly normalizing, and so is the labor market. And that process will probably take some time. So wage setting is something that happens, it's probably will take a couple of years to get all the way back. And that's okay. That's okay. But we do see, you saw today's ECI reading, the evidence is that that wage increases are still at a healthy level, very healthy level, but they're gradually moving back to levels that would be more associated, given assumptions about productivity, are more typically associated with 2% inflation. It's an ongoing process, a healthy one, and I think we're moving in the right direction.
So that process can continue without a weakening of the labor market, basically, you're saying?
Well, I think the labor market is, I don't know if it's rebalancing. Clearly, there was a fairly severe imbalance between demand for workers and supply at the beginning of the pandemic. So we lost several million workers at the beginning of the pandemic from people dropping out of the labor force. And then when the economy reopened, you remember 2021, you had a severe labor shortage, and it was everywhere. Panic on the part of businesses, couldn't find people. So what's happened is we expected the labor market to come back quickly, and it didn't. And 2022 was a disappointing year. And, we were kind of thinking, well, maybe we won't get it back. And then 2023, we did, as you know. So labor force participation came back strongly in 23, and so did immigration. Immigration came to a halt during the pandemic. So those two forces have significantly lowered the temperature in the labor market to will is still a very strong labor market. It's still a good labor market for wages and for finding a job, but it's getting back into balance. And that's what we want to see. And one great way to look at that is what's happening with wage increases. And you see it now across the major things that we track. It isn't every quarter, but overall there's a clear trend, still at high levels, but back down to what would be consistent with where we were before the pandemic and with 2% inflation.
Chris.
Hi, Chris Rugaber at Associated Press. Thank you. I wanted to follow up on Rich's question.
How long's the Q&A, Rips? Half an
It
hour?
sounded like you suggested.
It's usually going to run until probably the bottom of the next hour here.
Oh, wow. It's a long Q&A.
Yeah, usually is.
Accelerate from here, and it sounds like you're saying you're not worried that.
What are we taking from this?
From here on out poses any risk.
Right now, the market is kind of just waffling around between the levels we were talking about earlier before the call started. And it's not great. I don't think that the markets are going to really like what's being said. There's nothing that's really saving this. We did have a perk up on a couple keywords, but nothing right now seems to be saving things. So I think that when the conference has concluded, I think we might see a rollover in the equities here.
Yeah, we got a pretty good trap on that push to the upside there.
Absolutely.
No, we have to see what happens, huh?
Certainly about to be a very exciting power hour.
Yeah.
When trading the NASDAQ. We could probably pump back in Powell audio.
Okay. I'm going to pop out. Gentlemen, pleasure. Rips.
Always a pleasure.
We'll see you again when here? We'll see you
Friday for Fast Markets. And I think tomorrow we're doing Back to the Futures together.
Yeah, tomorrow back to okay, awesome. All right, cool. Well, I'll see you then. Keep the powder dry, ladies and gentlemen. Still got a lot coming out here from Chairman Powell. I'll see you guys later. Have a good day.
Take care, Hoag.
See you, Hoag. And then there were two.
Do we think we can get the audio back in from Jerome?
Yeah, probably.
The term soft landing.
There we go.
Would you say at least that from your point of view now, the other scenario of a hard landing caused by the Fed is off the table, or the risks have diminished very much? And you mentioned below 2% inflation on a 3-month basis. Core PCE has been running at 1.5%. And there are those on Wall Street who think that if you maintain the level of restriction you have right now, you could end up with inflation running below your target. How do you see that?
So your first question, how to describe where we are. So I guess I would just say this. Executive summary would be that growth is solid to strong over the course of last year. The labor market, 3.7% unemployment, indicates that the labor market is strong. We've had just about 2 years now of unemployment under 4%. That hasn't happened in 50 years, so it's a good labor market. And we've seen inflation come down. We've talked about that. So we've got 6 months of good inflation data and an expectation that there's more to come. So this is a good situation. Let's be honest. This is a good economy. But what's the outlook? That's looking in the review. The outlook, we do expect growth to moderate. Of course, we have expected it for some time, and it hasn't happened. But we do expect that it will moderate as supply chain and labor market normalization runs its course. The labor market is rebalancing, as I mentioned. Job creation has slowed. The base of job growth has narrowed. And of course, 12-month inflation is above target and getting down closer to target. It's not guaranteed, but we do seem to be getting on track for that. So those are the risks and questions we have to answer. But overall, this is a pretty good picture. It is a good picture. Your second question was, sorry.
Could you get inflation that is below target, end up with inflation below target, and you have to do something about that?
So the thing is, we're not looking for inflation to tap the 2% base once. We're looking for it to settle out over time at 2%. And the same thing is true. If we have a month or two of lower, and we have that now, of inflation that's annualized at a lower level, that wouldn't be good. We're not looking to have inflation anchor below 2%. We're looking to have it anchor at 2%. So if we do face those circumstances, then we'll have to deal with that. I think as of now, the question, which we want to take advantage of this situation and finish the job on inflation while keeping the labor market strong.
Edward.
Edward Lawrence from Fox Business. Thank you, Mr. Chairman, for taking this. So as I've heard from some district Fed presidents, is it, in your view, a little premature to think that rate cuts are right around the corner? And then when we do see that first rate cut, should we interpret that as the beginning of a rate cut cycle, or is it a one-off?
So I'll point to that language on your first question. We included that language in the statement to signal clearly that with strong growth, strong labor market, inflation coming down, the committee intends to move carefully as we consider when to begin to dial back the restrictive stance that we have in place. So if you take that to the current context, we're going to be data dependent. We're going to be looking at this meeting by meeting.
Yeah, it's causing rhythmic to lag here.
I would tell you that
I'm up about 10K in this short here.
It's likely that the committee will reach a level of confidence.
Average is 387.
Identify March as the time to do that.
Oh, someone at the door. Who's coming?
That's to be seen.
Oh, what up?
Who is at the door?
What is up?
What's up, Andre? How you doing?
I'm okay. I know we're in the middle of a press conference. Isaac, what's up, man? Thanks for joining us. We're in the middle of a Jerome Powell press conference right here. So yeah, let's keep our attention focused. We're breaking pretty hard here. I know you guys are in some trades. We always go back to the press conference if you want. Isaac, what's happening?
What's up, boss? How you doing?
I'm okay. We're in the middle of a pretty volatile time right now. So let's go back to the markets. I know these guys are short, or Rips is short, so I don't want to distract from here. Renegade Chair, yes, I am here again, dude. Your favorite TopStep TV human ever, dude. So just trade. Don't worry about me. Just trade these markets, my man. You'll be good.
So Rips, is that the algos picking up on speech patterns that's moving?
Yeah, I mean,
stuff down like
it's
that?
not
I mean,
only
that's
speech
insane
patterns, but the
move.
content of what he's saying is just no good for the markets right now.
Yeah, can you, hey Rips, can you catch us up to speed on what the tone of this press conference has been?
Yeah, so just the notes that I have here, fully committed to returning inflation back to 2%, which is completely normal. Policy rate right now is well into restrictive territory. I'm actually going to peel off a little bit as we are hitting that 294 level here, covering 4 there into the bid and leaving 4 more as a runner. Nice trade there. Supply and demand is in a better balance. Nominal wage growth has been easing. Vacancies have declined in housing through inflation. Though inflation has eased notably, the inflation rate now is still well above the goal. Policy rate is likely at its peak right now, but they will be likely to appropriate to begin reducing rates sometime this year. Sometime this year was not as nice as it could have been. Saying that we're sufficiently restrictive at this time is really what the markets are looking for. And unfortunately, we just didn't hear that out of Powell here. So unfortunately, not getting what the markets wanted to look for. And as I said about 20 minutes ago, it's pretty likely that we'll see the markets rolling over on the conclusion of the press conference, which it's still rocking and rolling here, by the way, if we still want to have that feed up. But yeah, it is still going in progress here. But yeah, just really, really hawkish tone. I think a lot of folks were hoping that they could really lean into any of the dovish things that he was saying, and he just wasn't coming back and saying anything dovish there.
Yeah, if you guys want, I think we should go back to the presser right now. It's probably the most important thing. If we can do that.
Is there a case, will it be the case that we come out of this more productive, more on a sustained basis? And I don't know. What would it take? It would take, people talk about AI, but my guess is that we may shake out and be back where we were, because I'm not sure I see work from home doesn't seem like it's a big productivity increaser. AI, artificial intelligence, generative may be, but probably not in the short run. Probably maybe in the longer run.
You got any trades there, Isaac?
I'm not seeing why it would, but right now I would say the productivity.
Muted. I think you're muted. You're muted, my man.
The broader forces that are driving.
So sorry. I took a quick scalp under that low of day for NQ. I was listening to what Rip was saying as well. Rip, I don't think we've ever met. My name is Isaac, by the way. Nice to meet you, boss.
Nice to meet you, Isaac. I always love when you're on the program here. Great to meet you finally.
I appreciate it, man. But yeah, I'll take a quick scalp down here. I usually primarily don't trade a lot of news, but I'm here, right? So
right on.
I'm wondering, how closely are you watching rent and housing prices as you evaluate whether and when to cut rates? And it seems like housing prices are not coming down as quickly as you expected.
So when we think about, our statutory goals are maximum employment and price stability, and that's what we're targeting. We're not targeting housing price inflation, the cost of housing, or any of those things. Those are very important things for people's lives, but they're not, those are not the things we're targeting. We're also well aware that when we cut rates at the beginning of the pandemic, for example, the housing industry was helped more than any other industry. And when we raise rates, the housing industry can be hurt because it's a very interest-sensitive sector. On top of that, we have longer run problems with the availability of housing. We have a built-up set of cities, and people are moving further and further out. So there hasn't been enough housing built, and these are not things that we have any tools to address. But where it comes into play very specifically in our work is inflation, which is a combination. It's really rental inflation. You're taking owner's equivalent rent and then actual rent paid by tenants, and you're running that through the CPI calculation or the PCE calculation, the one we look at. And what that's telling you is that market rents are increasing at a much lower rate or even being flat, and that will show up in inflation over time. It has to, as long as that remains the case. So.
And just real quick, what is your response to the letter that was sent to you by some members of Congress asking the Fed to lower interest rates to make housing more affordable?
My response is what I started with, which is that our job, the job Congress has given us, is price stability and maximum employment. Price stability is absolutely essential for people's lives, most importantly, mostly for people at the lower end of the income spectrum who are living at the edges, at the margins. And so for someone like that, high inflation in the necessities of life, right away you're in trouble. Whereas even middle class people have some scope to absorb higher costs. So we have to it's our job. It's what society has asked us to do, is to get inflation down. And the tools that we use to do it are interest rates. So that's how we think about that.
Courtney Brown from Axios. Can you give us some insight into whether the committee discussed the possibility of slowing balance sheet runoff in the months ahead?
Yes. So I would start by saying that balance sheet runoff so far has gone very well. And as the process has continued, we're getting to that time where questions are beginning to come into greater focus about the pace of runoff and all that. So at this meeting, we did have some discussion of the balance sheet, and we're planning to begin in-depth discussions of balance sheet issues at our next meeting in March. So those questions are all coming into scope now, and we're focusing on them. But we're at the beginning of that process, I would say.
Quick follow-up. Is it the case that the Fed would decide to lower rates and make adjustments to the balance sheet runoff in tandem?
Yes, we do. We see those as independent tools, and so they don't. For example, if you're normalizing policy, you might be reducing rates but continuing to run off the balance sheet. In both cases, that's normalization. But from a strict monetary policy standpoint, you could say we're loosening and one with tightening. So that could happen. It's not something we're planning or thinking about, but right now we're thinking about getting to a place where we're going to see the balance sheet runoff to continue. We're watching it carefully, and as I said, we'll be looking into that as a committee starting in March.
Thanks.
Simon Urbanovich with The Economist. Thank you, Chair Powell. You've mentioned 6 good months of inflation data, but that not being enough to build up confidence. Based on your previous response that your base case is you probably wouldn't start easing yet in March, the implication is that 8 good months might not be enough either. Roughly how many months do you think you might need of good inflation data to be confident?
Yeah, I'm not in a position to put a number on it. I'm just going to say, it's not that we don't have any confidence. We have growing confidence, but not to the point where we feel like it's a highly consequential decision to start the process of dialing back on restriction, and we want to get that right. And we feel like the strong economy, strong labor market, inflation coming down, it gives us the ability to do that. We think that's the best way we can serve the public, because ultimately we've made a lot of progress on inflation. We just want to make sure that we do get the job done in a sustainable way. That's how we're thinking about it. In terms of when that'll be, that'll all come out of our communications, and we won't keep that a secret.
Hi, Chair Powell. Evan Reiser with M&I Market News. Can you explain a little bit more on what you're considering when tapering QT? Do you need to see the overnight reverse repo facility all the way down to 0, or is it something that you can start with a couple $100 billion there?
Not a decision that we've made, but I wouldn't think we wouldn't be taking a position that it's got to go to 0. I mean, if it were to stabilize at a different level, but that's not a decision that we've made. That's what we'll be talking about at the March meeting. A whole range of issues will be briefed up in the committee. We'll get into all of the issues that will be arising over the course of the next, let's say, year or so.
Greg.
Thanks, Greg Robb from MarketWatch. Chair Powell, I want to change gears a little bit. In the presidential primary campaign that's been going on for the last 9 months or so, your name has come up often, and many Republican candidates had said that they probably wouldn't want to give you a 3rd term. So I wanted to give you a chance to talk about that. Do you want another term? You've had on the Fed. What's your stance on that?
Who's this guy?
I don't have a stance on that. It's not something I'm focused on. I'm focused on doing our
Didn't see
job.
this question coming.
This year is going to be a highly consequential year for the Fed and for monetary policy, and we're all of us very buckled down, focused on doing our jobs.
Jennifer.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. As you mentioned, core PCE has been running at 1.9% over the past 6 months, and you guys are actually expecting core inflation higher this year at 2.4% compared to that 6-month measure. Given that forecast and that the median is for 3 rate cuts this year, what happens if inflation stays where it's been over the last 6 months for the next 6 months?
So we'll update our inflation forecasts at the next meeting. You referred to the December meeting. That's 3 months old, so it might be lower now given the data we've gotten. So look, as I mentioned, we're going to be reacting to the data. If we get very strong inflation data and it kicks back up, then we'll go slower or later or both. If we got really good inflation data soon, that would matter for both that would tell us that we could go sooner and perhaps go faster. So we're just going to be, but of course we'll weigh that with all the other factors. We're setting policy based on the totality of the data.
But just to follow, if inflation stays where it is currently, that would probably mean that the real interest rate becomes more restrictive. Would that mean you'd have to trim more, perhaps, than you already have factored in?
Well, I think if we came to the view that that the 6-month inflation numbers, which are very close to 2, were in PCE world, if we thought that is really where we're going to be, then yes, our policy would be in a different place. It would. But that's the whole point, is we're trying to get comfortable and gain confidence that inflation is on a sustainable path down to 2% or toward 2%.
Daniel. Hi, Chair Powell. Daniel Davis, Agence France Presse. I just wondered if I could get your comment on the recent consumer confidence data. It seems to suggest that consumers are sort of moving towards a much more optimistic view of the economy. I just wonder, is it fair to say that they're moving towards where the Fed appears to have been in recent months? And do you think that inflation and falling inflation perhaps has played a role in that? And what challenges do you see going forward? Thank you.
Yeah, so it's been interesting that confidence surveys have been weak at a time when unemployment has been low, very low, historically low for a couple of years. But nonetheless, that's been the case, and we've asked ourselves why that is. And one obvious answer, we don't pretend to have perfect wisdom on this, but one obvious answer is that the price level is high. So prices went up much more than 2% per year for a couple of years, and people are going to the store and they're paying much more for the basics of life than they were 2 years ago, 3 years ago, and they're not happy about it. And it's fine that inflation's coming down, but the prices they're paying are still high. So that is what that has to be some part of why people are unhappy, and they're right to be unhappy. This is why we need to keep price stability. It's why we need to do our jobs, is so that people don't have to deal with things like this. In terms of you're right. In recent surveys, you've seen a couple of significant increases in consumer confidence or happiness with the economy. I guess that's a good thing. That can support spending, can support economic activity. There's some evidence of that. But you're right. It is a fact that we have seen a meaningful increase. I think levels of confidence are still maybe not as high as they've been at various times, but they certainly have come up.
Thank you for taking our questions. Brian Mena, CNN Business. Committee members have said they'd like to meet with business leaders and stakeholders in person to learn more about the economy in real time, given that some data are subject to large revisions, the issue of seasonal adjustments being thrown off balance, and many readings of the economy being quarterly. So did any members say they've learned anything not yet reflected in the data, or have you yourself learned anything through anecdotal evidence that hasn't been captured in the data yet?
Well, yes. I'm a big believer that yes. So we do meet with outside groups who come from all different parts of the economy, and I always feel like I spent most of my life in the private sector looking at companies, individual management teams, and then building out from that. And so starting with GDP data and working into what's actually affecting people's lives is challenging. It's very hard. So I really like anecdotal data. In addition, as you know, the 12 reserve banks have really the best network of anyone, that in all their districts they're talking to, not just the business community, but the educational, medical, all nonprofit community. They have arms into all of that. And so when they come back, that's what goes into the beige book. But that they come back, and what each reserve bank president does is, during the Outlook go around, they'll say, in my district, and they'll talk about 100 conversations. They won't talk up. They will give you input based on 100 conversations that they've had with people of all different walks. And I personally find it very helpful in understanding what's going on. And also, I think you hear things before they show up in the data sometimes.
Did any of them notice slowing economy based on what they've heard from like their district?
Yes, I mean, if you look back at the last, not this beige book, but the one before, it was more. There was a lot of slower activity. I think that what you're hearing now is things are picking up a bit. You're hearing not in every district, and not every person that we talk to, but you're overall, it feels like you're hearing things picking up at the margin. So that's what comes through.
Go to Jeff Cox for the last question.
Thank you, sir. Jeff Cox from CNBC.com. Just kind of looking to put it all together. You talked about basically the economy looking strong with 3.3% annualized growth in the fourth quarter. Does the strength of the economy speak more loudly to you now than any inflation threat might? That you're in a position, in other words, to keep rates elevated as long as the economy stays strong, and you're more tilted towards that. And then also, perhaps, are you worried at all that the economy is maybe a little too strong right now and that inflation could come back at some point?
I'm not so worried about that. It's again, we've had inflation come down without a slow economy and without important increases in unemployment, and there's no reason why we should want to get in the way of that process if it's going to continue. So I think declining inflation, continued declines in inflation, are really the main thing we're looking at. Of course, we want the labor market to remain strong too. We don't have a growth mandate. We've got a maximum employment mandate and a price stability mandate, and those are the two things we look at. Growth only matters to the extent it influences our achievement of those two mandates. Thank you very much.
All right, guys, that just concludes Jerome Powell's. Yeah, that concludes.
Topstep
So,
TV's very first FOMC meeting live.
That was good stuff. Isaac, welcome to the show. Welcome to Power Hour. Rips, thanks for putting in a little overtime with us. Just let's get your take. You guys got had some good trades there, Rips. If you don't mind replaying that trade, we've been quiet watching the Powell, but take us through that trade and what your thoughts are on the overall press conference and where we're going.
Yeah, I mean, it's not good for the markets right now, but we might have a little bit of a pump throughout that. I ended up trading some combines on that and got two of them over the maximum profit limit. One well over. It was a $15,000 trade on that one. Unfortunately, not in XFAs or in my live. I'm locked out of my live because I ended up hitting my maximum daily loss on that today. So unfortunately did not trade my live on that and got, like I said, two combines over the profit limit there of what we're looking for on the day. But yeah, the short was really, really nice, getting that break below that 387.75 level, ended up adding into that and basically holding that all the way down into that low 300s there. And it was really, really nice trade. And just the market's fading on that. His commentary could not hold things up. We came right up to the overhead supply area that we had from earlier today on our charts. We crested above that and we just could not get and hold above 480 in the NQ. So unfortunately, the market had to roll and we caught that to the short side there.
Good stuff. Good stuff. Isaac, were you able to make any trades? I think you said you were able to make a couple of trades, but then we had to kind of go back to Powell. So if you want to give us a recap on how you played the Jerome Powell press conference and FOMC. What's up, Isaac?
Yeah, so for me in general, I'm not a huge news guy, just because it's just never been me. I kind of stayed away from news, earnings, all that kind of stuff. But I did have an opportunity here. I love, my usual strategy. I usually play like opening range breakouts, around market open volatility, low of day breakouts, higher day breakouts, things like that. I'm a breakout momentum trader. So I did come down here. Our low of day at this point was around, 17,290. Had a lot of consolidation right here before we reversed for, the second half of the day. And I saw us test this level and then kind of break down below. So I was able to catch this whole entire candle down to this 249 level, which was pretty nice.
Beautiful. Dolby, how you doing, my man? I haven't seen you in a minute. Last time I saw you, you were Power Players yesterday, and that was amazing.
Yeah, that was a good time, as always. I'm doing pretty good. I'm currently long 301 3/4 in the In the NASI-Q, I'm going to see if we can get up to VWAP, which I have as 347.57. My stop's at break even, so we'll go risk-free on this one. The volatility for NASDAQ, I am not used to be honest, especially with FOMC.
Yep.
So I'm just trying to dip my toe in the water just to see what it feels like for the future. But I have to say, if I were to do this again, I would not be placing trades like Rips was saying. I mean, they got algos that are studying sentence patterns, speech behaviors, and one word can just send this market into a tizzy. It is a nightmare to trade. So congrats to anybody who made money, but this is not my cup of tea. This is absolutely insane.
It's tricky. It's tricky for sure. Rips, moving forward. What do you feel? If we got about 27 minutes left on the day, or take a scratch at 37 minutes left on the trade. We're looking to close this gap, or back to the upside, or what do you think? Pulled pork is right.
There's a very good chance that we could do that, given that this wasn't a very violent sell-off. I mean, it was definitely violent to the downside, but we had these levels kind of marked out at 294.5 down at the bottom. We didn't even auction below that. We had 236 3/4 below that. And the fact is that the auction kind of held this range-bound kind of trend that we've had sort of seeking out all day here. We kind of tucked lower, we came back, we pumped on the FOMC originally, we ran into this overhead supply, and then we flushed down. But we didn't continue this flush. We kind of based out here, and we've been basing out for what looks like to be about the last 15, 20 minutes. So I don't know if we'll have any more continued downside. And I think that the best trade is really going to set up tomorrow, the afterglow of the FOMC. I think that's going to give us a lot better opportunities.
You touch on that. Why do you think? Why tomorrow?
Well, basically, you're going to have the large institutions that have the question answered for them now, basically what the path forward is. We're going to have money markets pricing in the futures Fed fund rates, and we're going to be able to see a lot more positioning trades going into tomorrow. Thursdays tomorrow, we have some more data that's going to be coming out in the pre-market. We're going to have the jobs data. We also have, let me see here, we have a couple different things that are coming out. Tomorrow we have the not the GDP, but the non-farm productivity, unit labor costs, initial jobless claims, the PMI that's going to be out, ISM services prices paid. There's going to be a lot of data that's coming out tomorrow, and that again is also going to help shift the narrative for where the market participants are leading this thing over the next couple months. The next FOMC is not until March now, so we have a little bit of a pause. And given the length between now and that meeting, it gives market participants a lot of time to place those large positional bets for those hedges.
Good stuff. Good stuff. Isaac, so you said you typically don't like to trade big numbers like that. You kind of wait for it to digest and quiet down. Assuming because, it's lack of, the volatility is too much. Like Nobi was saying, one word can send the algos going crazy. Isaac, like I said, welcome to Power Hour, man. Tell us a little bit about yourself for those that are just meeting you for the first time.
Yeah, so like Andre said, my name is Isaac. I am a full-time futures trader. I did grow up on options, but transitioned to futures once I found out more about them. I'm a price action trader, so futures just made more sense for me. I am not somebody who likes to trade all day long. I'm a morning guy. I like to take advantage of the opening markets. I love jobs reports in the morning. Usually has that early morning volatility, which I can usually take advantage of around that market open or whenever the opportunity presents itself. And yeah, that's me. I'm a former D1 athlete turned what Michael always tells me, a different kind of athlete, just an athlete of the market. So that's me.
Awesome. Well, like I said, welcome to Power Hour. You've been on TopstepTV with us before. You're a big hit with the crowd. Everyone loves you. Let's just see if we can make some money here in Power Hour. We're not going to force any trades.
I did have a question, if that's okay.
By all means.
Rip, really quick. So I noticed you talking about all the other factors of the market that are at play when, something like FOMC, Jerome Powell speaking, the algos, all that. Sounds like a lot. How do you, for someone who looks like you trade FOMC in these big news events, how does your risk change? Like, does your risk management strategy a little bit different with everything at play?
Yeah, I mean, it takes a lot of time to adjust to being an event-driven trader. I had a lot of practice when I was trading equities. I would trade a lot of earnings with equities, and it teaches you a lot of how to read momentum. But it's very, very difficult. I recommend if you're looking to get into it, definitely have some type of squawk service or be watching the news and look at how things react. The best thing that I did to train myself for these types of volatility events was I would record the event alongside recording the tape or recording the charts. And then I'd go back and watch that with the gift of hindsight, knowing that when this was said, this is how the market reacted, and then looking for clues when that happened again in the future. And then you graduate from, watching just replays only to using a practice account, to using a sim account. And then you graduate to using, a TopStep Combine. Then hopefully you're graduating to using an XFA or a live account. But yeah, it's just with time and experience and understanding how certain questions or certain words will kind of move the markets around. There's certain buzzwords that you look for during FOMC that are only exclusive to FOMC. If Jerome Powell says something like sufficiently restrictive, the market might perk on that, and that can offer two different opportunities. You're looking for maybe a momentous continuation trade, or he's saying we haven't reached sufficiently restrictive territory. And so the algorithms will pick up on the two words sufficiently restrictive, but it's wrong. So a spike could be negated. So you're looking to short that. It's just time and experience and looking for very specific sort of clues to tie into the momentum and the price action, the order flow that's happening.
Great question.
It sounds
Great
like
question.
a lot, man. That's. I mean, I didn't even look. I chose a long time ago CPI, FOMC. I'll just stay on the sidelines just because everything you just said, I was completely just not aware of in terms of, I didn't even know. I think Andre said something about algorithms can listen to certain words and then make a decision based off the words that were said. I mean, that I honestly had no idea it goes that deep, because I strictly choose to stay on the price action side, right? No news, just setups that I practiced for years, and that's what I look for. But how long would you say it took you to start to find certain patterns with something as, I mean, in our eyes kind of random, and we don't really know what's going to be said?
Yeah, and you're kind of anticipating. So on a lot of these questions, you're looking for a lead into a certain response, and you will see that we actually have a delay. If you go back and watch the TopStep stream, Jerome Powell's answers will be delayed and the price action will be first. That's why I'm subscribed to as many squawks as I am. And you can see I was leading into a lot of those questions. So I'm getting that answer from people who are doing the squawk services, are either have somebody on the floor or they have a zero latency data feed to that room. And that's the kind of stuff that I'm looking for, keywords to questions, so I can hear the question coming in and I'm looking for that response. And again, if we have a snap reaction where something is looking for follow through, maybe I'm taking that to the long side. If we have a snap reaction to the upside and I know that that's not going to follow through based on, past experience or just looking at FOMC stuff, maybe I'll take that to the short side. But to answer your question about how long it takes, it's different for everyone. It took me years and years to try to develop that strategy. And it was just a lot of going back and reviewing the game film. I use Bookmap a lot, and it records the entire session. So you can go back and watch it at 0.25x speed. And if you sync it up with certain times of questions and answers, you can see how the market reacted on that and maybe look at how the order book was changing around that time. So anything you can do with the gift of hindsight, going back and watching recordings, is always going to be helpful. But there's a lot of value in news-driven trades as long as there's follow-through and continuation, because us as humans clicking the buttons are never going to be as fast as these algorithms. In fact, in the latest Market Wizards books, there was somebody who actually programmed an algorithm specifically looking for event-driven trading types of trades. And they are doing the thing where they're looking for specific words that are said for, during unemployment, the certain percentage, or during FOMC, looking for certain keywords that they're saying. A lot of this stuff is always going to be faster than us humans, but there's a way for us to still have an edge if there's a continuation trade and a follow through. Like when Jerome Powell was saying certain words today, he just couldn't keep up any kind of dovishness. So the market started rolling more and more. We get enough pressure to the downside, and we got that tremendous roll through 380s in the NQ there.
Wow. Very, very strong stuff, guys, there. Great question, Isaac. Rips bringing the heat, as always. Starting to see the sellers come back in here on the S&Ps, trading 48.83. Tilt 50-50 across, NASDAQ and crude as well. So nothing happening there. Good stuff. You're talking about that algorithm, Rips. So the algorithm was programmed to do what again?
It depends on which one we're talking about. So there's algorithms that are, so the one we're talking about in Market Wizards, he's looking for very specific keywords. And it's in the latest Market Wizards book. You can see this trader that talks about this, but they're looking for very specific keywords that are said during events, right? So when we have data releases, they're looking for a specific number, and they'll pre-code this in the algorithm that the moment that hits the wire, they're looking for very specific numbers. And if there is an advantage trade there, they're first to hit the books with their orders. And this is happening at the nanosecond level. We can't beat these algorithms, but you can look for patterns where For instance, today's displacement to the top side, I ended up taking that long on my stream and I was completely off base, but you can use that to your advantage and look at that in a recording at a later time and say, well, when it pumps up that much and there's no follow through and it starts to hit a brick wall, there's probably a good short there. And just watching over those patterns, building up that implicit memory will help you be discretionary in taking these news trades or event driven trades that'll be to your favor. We'll never be able to beat the algorithms, but we can train ourselves to look for certain follow through and patterns.
Great stuff, man. Super solid. Real quick, early market on close imbalance, 1 billion sell side, 1 billion sell side. It's bigger than we've seen before. We'll keep track of that as we get closer to 2:50 Central Time when that liquidity injection does hit the markets. Dolby, how we looking? I think you might be in a trade. Are you looking to get in a trade?
No, I'm flat right now. I'm basically getting back to scratch, $30 at a time. I'm
well done.
Looking for longer moves in the NASDAQ, and they're not really following through. Really, really whippy. This is my first FOMC with NASDAQ. Like I said, not my favorite trade ever. This is pretty insane. Like Rips was saying, they got algos that are listening to words and stuff. Obviously, those have kind of turned off now, but the moves are just insane in the NASDAQ. Totally not tradable. Not recommended.
It's definitely a tricky trade. Isaac was asking like how long you got to get years and years of reps. Like you're a D1 athlete. You went back and watched film after practice, after games, and you just see where you went wrong, see where things went well, and you try to minimize that. It's basically the same thing with athletes, or I'm sorry, trading. Like Rip's saying, he watches the film, overlays it on what the market's doing, and the benefit of hindsight obviously is 2020. You don't have hindsight when we're entering these markets and making trades. But pattern recognition is the name of the game. Rips, how long have you been, how long has it taken you to kind of, recognize patterns, time and time again?
You get better every single time you do it. You get better every single time that you're reviewing the game tape. Like today on my live stream on my YouTube, I missed every single trade that I took. And that's on me. That's not because some market makers are watching my stream. That's entirely on me. So you can't have fumbles on that. You can have missteps, but it's just through time and repetition, like any other muscle you're trying to build. If you want to golf like Tiger Woods, you don't just walk up to the tee box and start swinging. It takes time and repetition to get there. And I'm always learning in this stuff. But to get proficient at it, I would say minimum you're talking about 2-3 years of studying this stuff and recognizing multiple hundreds and hundreds of patterns of going through this. And again, you're not always going to be right, but you're going to get to the point where you start to have an edge, 60%, 70% plus, where you're calling these things appropriately. And they offer such an advantage trade, meaning that we're looking for maybe 10, 15 handles, but you're going to have extensions where you're right on the trade and we go past those 10, 15 handles. We start to get 20, 40, 50, even 100 handles on a newsprint. And that's where it starts to really be strong, right? That's where it starts to really make sense to focus on these strategies. I will always be an event-driven trader because not only is it very good for P&L, but it's also extremely exciting and it's a lot of fun to follow along with the macro environment.
Hell yes. We got new lows here in the S&Ps, new lows in gold, sellers coming in NASDAQ as well. I haven't taken a peek at crude yet. I don't know how much crude's going to move. Our crude's essentially closed. Yes, new lows in ES, new low coming up on new lows in NQ and new lows in gold. Everything's starting to sell off again. Markets move faster to the downside than do the upside. That was an interesting FOMC. So we're pushing rate cuts out to when, Rips? What did you gather from the presser?
Well, let's see if they've updated the Fed Fund futures here. Let's have a look. So we were, the March meeting was, I think, 50% chance of the cuts. It's looking like now a 38% chance of a cut, 60% chance of a pause. The May meeting is now factoring in what looks like to be a 57% chance of a cut. So it looks like we've backstepped things by about 20%, about one more month. If we're looking at June now, we priced in about a 50% chance of 2 rate cuts by then. That is now tapered down to about a 36% chance. So things have softened up a little bit, and that's why I think the market is in for a little bit of downside. Tomorrow is really going to be where big participants are digesting this news. Big institutions are going to be placing their bets and their hedges. It's best to look for potentially some trades in the large options names, SPX, looking at the S&P E-mini options chain. Looking for that stuff should start to show where a lot of these institutions are placing their bets. But it will all be drawn to the liquidity tomorrow. We'll see that tomorrow very much on the tape in both the NQ and the S&P E-mini. And we'll definitely see where a lot of this liquidity is going.
Love it. Good stuff. Isaac, you said you're go ahead, please.
Sorry.
Go ahead, Isaac.
No, I was saying, Rip. So you look forward to like FOMC and CPI. Like these are your bread and butter days.
Yeah, we were talking about that last week. This is like what I look forward to as akin to the Super Bowl. This stuff is very exciting for me because it generates a lot of volatility. And And like I said, if you get continuation on a move, we had that move to the upside in one of our combines. We caught it to the downside in one of our combines. So having that continuation is what I'm playing for. And then once you have that move in motion, it's pretty hard to stop that freight train. So you can generally add into a winner quite easily with something like that. I won't say easily, but you can really get some momentum moving in your favor. And that it allows you to add into winners a lot more than if you're just trading a regular New York session on a Wednesday, so to speak. So it is definitely something I look forward to. And like I said, if you train for it and you learn for it, you start trading on a practice account, you watch the game film, it's really something great to add to your repertoire if you haven't been doing it yet.
We're about 5 points away from daily lows in the NASDAQ here. Catching a little bit of a bid. We'll see if that ends up holding up here.
Yes, we're starting to see S&P sell now trading 48.74. I thought 5,000 was in play for this week. Apparently the markets did not like Powell coming in. Sometimes I think Powell comes in and talks like hawkish just to kind of get interest rates up. So the market will do the job for him instead of trying, obviously not going to raise rates again, but kind of get the market doing some a little bit more heavy lifting for him. I've always thought that was an effective tool of Jerome Powell's. What do you think about that, Rips? That essentially they know that they say the right words. You can get yields to go a little higher than 10-year, kind of, continue to slow down inflation. They don't like where inflation is right now, but I think they like where it's going, is what I gathered.
Yeah, and the problem with that is that's essentially what they already said in December, and market participants were hampering for a new type of discussion. They wanted some new verbiage brought to the table, and this is more of that stop and go type of phasing where we're not getting any new information. We're getting the same old Powell. It was somewhat, it didn't really ever lean onto the dovish side of things. It was so hawkish that even though the market started to rip up to the top side on a couple different questions, he just couldn't hold the ball in place, and that's why we just started to roll. So we're not seeing any new information. The Fed heads are out of the blackout period after this, so we will see a lot of these usual suspects speaking again. Mary Daly, Austin Goolsbee, Thomas Barkin. We're going to see everybody speaking again about things, and that's going to start to add color. That's where we're going to see more volatility coming in. And of course, the data that the Fed is depending on for judging where the rate should be, that is all going to be very important. So the show goes on.
Love it. What's the key data that the Fed's looking at? They're looking at what? PCE, CPI, PPI. Where's the Fed looking? Where do they have their attention? Where are they focused on the numbers? He said it was data driven throughout. What data exactly are they looking at?
All the stuff you just mentioned, in addition to employment numbers, there was a lot of stress put on employment numbers in the last meeting for December. So I do think that we're going to see a continuation of looking to the job numbers. ADP employment came out today and it was a little bit softer than expected. So I think that we're going to want to look for improvement on that. And in fact, there's a lot of questions about the labor market and how that is. And I think that we're going to start leaning more into what the housing market is doing this year in tandem to the labor market. So healthy labor market would mean a healthy economy. But again, we're looking for a Goldilocks scenario where things are not too hot, they're not too cool, and we're just getting just right down into that 2% target. Soft landing is still on the table. I don't think we took that off the table just yet, but very stern, very hawkish commentary out of Powell today.
Good stuff. Uh-oh.
Oh, what is
Uh-oh.
that?
Sorry, back here, my TopstepTV phone call is ringing. My phone's ringing. I'm going to pipe it in for you. Dolby, they said they wanted to talk to you? I don't know.
Yeah, I got my phone right here. What's going on?
You cut off before the part where I did 78 push-ups. 42 is pretty good for a guy that claims to appreciate a lean build. But let's be serious. You only say that because you can't get jacked up like Daddy Powell. You couldn't lift my money gun, let alone fire it. So have a nice power hour, but remember who the man beast is here. You're welcome for the 401k. Powell out.
That's amazing. Whoever did that.
I did not know.
Oh my goodness.
That was incredible. I did not know we had JT on line one there. That was
we
incredible.
watch his little show. He watches our show.
Yeah. James Harden, how did we land Powell like that so fast after his press conference? That's
I'm pretty sure he's a regular viewer of Topstep TV.
He is. That's true.
It was only here at Topstep TV. Only in the power hour can we get Jerome Powell. Just give him shout outs to Dolby Time, man. We're also gonna get that besides Topstep TV and the power hour. That was incredible, guys.
And I'm being told that tomorrow we'll have another special guest with us. Yellen is coming on tomorrow. So if you want to hear
really?
Yellen speak to Topstep exclusive, tune in live.
Who's booking these guests back there? Man, we're really pulling some heavy hitters here at Power Hour at Topstep TV. But yes, no,
Full steam ahead, baby.
Yes, we are. We are seeing the sellers come in. That got me. That was funny. Seeing the sellers come in here in the S&P still, some downside pressure. What are we thinking about trades here in the next 18 minutes? Isaac, got anything on your mind?
Unless we were to break through this low of day, possibly with some volume to come in, I probably would just sit on the sidelines, just because the day is almost over, and and I've taken my trades today, but not too much for me right now.
Fair enough. Yeah, not so much pulled pork today, Dolby. Yeah, how much pulled pork did we have today? Okay,
I was trading one lines all day, and it was an absolute nightmare.
We do have an early MOC read, by the way. We are at 1 billion to the sell side.
1 billion sell side. That's a little bit
That's
bigger
the
than
early MOC. That can change in a jiffy, keep in mind.
Awesome. Yeah, so Dolby, not so much pulled pork today, more just using the fork and knife, kind of just picking at some
we're talking like chicken nuggets at best. maybe microwave chicken nuggets is more of my style today.
Incredible. All right, we got 17 minutes left before the closing bell. A real quick update for what we got coming at you tomorrow, Thursday. Obviously, we got the opening call with Eddie and Hoag. Then we got Fast Markets with MP, Hoag, and Marie, everyone's favorite, myself as well. Shoulder tap with Hoag and Mick. Followed up with a segment. What's that one called? It's called Power Players with Andre. That's me, Robert, and Coach Jay. Top quiz, Jack and Vanessa. Group coaching, Hoag, JD. Oh, then we got Andre, Hoag, Rips. And then we got everyone's favorite power hour, Andre, Dolby, Rips. What up, man? Rips, thanks for hanging out, putting in a little extra time with us. Really appreciate it. All right, so we got 2 more days. We call this the Super Bowl week of trading. What do we got earnings-wise? Yeah, we got some big earnings coming out, don't we?
Today, after the bell, we only have Qualcomm. But Qualcomm is big in the interplay of the AI chip stuff. They do produce a lot of chips for a lot of different reasons, phones, AI, headsets. So that's after the bell today. Tomorrow, the Super Bowl of earnings continues with Apple, Amazon, Meta, and U.S. Steel. U.S. Steel had some negative headline come out during FOMC, and it kind of hit the floor. Not sure if that rebounded yet. Let's see here. Yeah, U.S. Steel hit the floor. It traded all the way down to 46 and change here.
Would you mind hitting us with a Mag 7 update real quick? Let's go around the world and do the Magnificent 7. I know that's a big piece of your trading information you use as a tool in your shed. Can we do a Mag 7 update real quick?
Absolutely. And to be honest, with how much the NQ has not broken down to the downside, we are seeing things sort of range bound here. S&P is, of course, lower, but what we're seeing in the Mag 7, Apple is kind of holding the lows that it had from this morning after its dump. Tesla is actually higher than the opening price. Meta is tooling down just a bit, kind of getting in that opening range area again. NVIDIA is holding the line, sort of chopping sideways from where it closed yesterday. Microsoft on the way down here, but holding, and Amazon bleeding a little bit alongside Google here. So that's kind of the update on Mag 7. But I do, like I said, I do want to be looking to Thursday after the bell. I think we'll see a lot of injection of volatility. I think a lot of folks are looking to Apple to have some dynamite earnings, even though I'm not of that camp. I do believe that Apple will be a little bit soft on their forward-looking guidance. Amazon is going to be a huge one as well because they're big in the cloud computing space. And I think that if Amazon does report big cloud computing numbers, Microsoft and Google can see a downside effect to that. So that's what we'll be watching on that as well. Meta, of course, also kind of having some interplay with the AI stuff. So we'll have to see whether or not Meta can show up on Thursday as well.
Awesome stuff. Isaac, I assume you'll be trading for, you'll be trading, you trade 5 days a week, Isaac? You said you're a full-time trader, correct?
Yes, sir. I do trade 5 days a week. If the market conditions are good. Today was actually the first time I took a trade all week. So
really,
over time, I've grown to respect trading a lot more. I used to.
What does that mean?
Used to be one of those guys. Well, when I first started trading, I felt like, hey, if the market's open, I need to be trading. And if it's open from 9 to 4, I need to be trading from 9 to 4. Now it's more of a respect where, hey, I'm going to only trade my good setups. I'm not going to force it. And I think the old mindset was when I wasn't as skillful and I felt like I had to almost like pray for wins. But as I developed over the years, it became more of, hey, I'm good enough to take one trade a week and if I want to and be more than okay. But As I become more skillful, I don't feel like I have to trade all the time because, you know, the money's here. I don't know if Rip, you can relate to that over the years where you just kind of know like, hey, I don't need to trade. You know, I don't need to like take those gambles or force a trade when there's not any great opportunities because my skill set has kind of gotten to a point where if there's an opportunity, I know I'm skillful enough just to take it and, you know, run with it.
Yeah, one of the biggest things for newer traders to overcome is desperation in trading. And you're in a place now, Isaac, where you probably haven't experienced that for years and years and years in your trading, where you get to a point where you trust in yourself so much and you trust in your own abilities that you don't feel desperate to say, well, if I miss this trade, this is it for me. It doesn't really matter because you're so keen with your abilities at that point that you can look at a market where you can wait for a really, really nice setup, trade only on those days and not have to worry about the FOMO of missing out on a day or, oh, I'm going to miss this event or this news trade or this earnings or whatever the case. And it takes some time to get to that point in your trading, but it's one of the biggest enemies, like I said, for newer traders out there. You get into this desperate mindset where you feel that you have to be trading all the time. You get up from your terminal and you start to think, well, if I get up now and I'm not seated here all day, I'm going to miss the best setup of the day. You get to a point where you're trading where you try to quiet down that desperation, you quiet down that voice, and you start to really believe in your own acumen as a trader. You have the proof to prove it. You have consistent profitability. And by the time you get to that point, you really can pick and choose your battles. And I know some really amazing traders. We're talking about 8-figure traders, people who pull down 8 figures in a year. They may be taking 5 to 10 trades in an entire quarter. You don't have to be seated at your desk every single day. You can wait for confluence that perfectly lines up with your exact trade plan and only trade on those sessions. So yeah, not surprised to hear that from you, Isaac, that you're very selective in your trading and you're not feeling the desperation that newer traders out there are feeling because you know, you're a solid, rock solid trader out there. And yeah, you really don't have to be, oh man, I have to hit these trades. I got to be in front of my terminal. I got to be doing this. And it's something that takes years and years to get to.
Yeah. And being like that, it's super stressful too, man. Like when I felt like as if, you know, I have to be glued to my computer, man, it affected my trading a lot because my head was not clear at all. Like when you're doing that, you're kind of get to like you're on constant tilt if you're kind of in that mind, if you have that mindset. I remember like the not the day, but the time of my trading career where I remember trading and then I turned my computer off and I just went about my day and it felt amazing. Like it felt amazing not to like feel like I have to be in front of the computer. And I used to see other great traders who's be like, oh yeah, I haven't traded this month. I'll probably get back at it in February. It's like, no way. Like, imagine how much money they've missed out on. But those guys, they've been around the block, right? So if you haven't yet, guys, like if you can just force yourself to, hey, I have a few setups. If you don't see your setup, I mean, imagine just try it. Just turn the computer off and walk away, and you'll even the next day, man, you'll feel so much more refreshed and honestly more focused and relaxed.
Yeah, just to add to your point, we have a very finite amount of mental capital that we can commit to the market every single day. You know, it's entirely different from the capital that you're trading with. Mental capital is very quickly expended depending on how focused you are in the markets, and you can really wear yourself out. A lot of newer traders don't really understand that you have a finite amount of mental capital, and they get to spending it and they're exhausted their mental capital midday. They're still looking for trades, and that's where your worst trades come in, and that's where you can get into the most trouble. It's really difficult to pull money out of the market. It's really easy to lose money into the markets. So the less exposure that you have into the markets as a newer trader, the better. Waiting for setups, just like Isaac just said here, very, very important. Do not heed that advice. It's very important advice. You should all be taking notes here. It's very important what he's saying.
Hey, Rips, we got, give us an update on MOC imbalance real quick.
I did hear something coming across the wire. I think that I will get the report in about... Oh,
see the number?
No. Good timing. 7 billion to the sell side. 7 billion.
Hello.
Oh my goodness gracious.
Look out below. I can't say I don't recall seeing a number that big in a minute. When are those trades executed, Rips?
Where are they executed?
When are they executed?
Oh, the MOC. I mean, they're doing order matching right now, but in the final 10 minutes is usually when we see a large influx of that order matching. Final 5 minutes, final 2 minutes, and then the final minute is where, you know, you have to remember all of these market makers are jockeying to fill at their price, right? The client gives them a price, but they want to get their price plus the spread to make that money. and they're trying to guarantee their clients the best fills. So they're all jockeying for position, and it's kind of like the last one in. The person doesn't want to be the last one in. So if they're looking for a lower price, they're going to be waiting and waiting and waiting until they get into the markets. And sometimes they wait until the last and final minute where they can't wait anymore, and they're just going to eat it on these certain trades.
Nice. Dolby, how we looking, man? How's that NASCAR?
I'm trying along. Okay. At the bottom here. See how it goes.
Dolby, are you going pulled pork on this one? I think the people want to know.
F no, bro. F no. What the hell are you guys talking about? I don't have the room to even do
Dude,
it in my
somebody
account.
please tell me what pulled pork is.
Great question, Isaac. Great question, Isaac.
I have no idea
It's an
what
amazing
that is.
way you can prepare pork. You can smoke it. You can, bask it in a pit for a while. It's amazing.
Yeah, so here's what was it yesterday or 2 power hours ago? We were talking about full port. I didn't know what full port was, and so then we got a conversation about what is full port. I just got filled on that. So all right, back to plus $31. Fantastic. So recover some of the losses from today. We'll take it. Nice little 1-to-1 right there. So anyways, full port is when you go full portfolio on a position. Probably comes from like Wall Street Bets or something. There, someone in chat had a funny, and it's like, oh, you're going pulled pork as a play on words from full port. So now it is the de facto meme for going 15 lots in a Topstep trading combine. You're going pulled pork.
Every time I get on
thorough
here,
explanation.
Rip, I don't know if you've seen it, but every time I get on here with Dolby and Andre, there's at least 10 people in the chat begging Dolby to go 15 lots. Every single time.
Full port.
Yeah.
Full port.
Don't ever succumb to chat. They'll ruin your account in a jiffy. Never ever. Chat, I love you, but the 15 lots is just never a good idea.
Yes, they will. Yes, they will. They want the action. They'll tap.
Andre.
Yes, sir.
You know what else they're begging for?
Hit me.
Those top quiz winners. And here they
Boom.
are.
Yeah.
James Harden on point. Production on point today. You guys have been crushing it today. Hit us, James Harden. What do we got?
All right, we got some names. I've been staring at them for a while. I can't find anything too bad. Darth Vader is my favorite.
Jack's Cornhole.
Ooh, Darth Vader's
Jack's
nice.
Cornhole is an old but classic. All right, Jack's Cornhole has been here for a while.
Gotcha. Shout out to Jack, man. We got mixed ticks. I like that one. Darth Vader. I've heard that one before. Yep. Nah. Yes. That's what they say. Yes, Queen. That's
What about I told you? I feel like that's 90% of the people in chat when you're trading. I told you. I told you it was going to do that.
Right.
Oh, it's an OG, right? Respect to Jack's Cornhole. Jack, yeah, good stuff.
Good stuff, everyone. So
awesome.
keep
Yeah,
your eyes
you
out
guys
for a
will,
reset code.
Hell yeah. Well done. I'm glad everyone's enjoying that.
Wow,
So yeah, Isaac,
stop
that's what
running NASDAQ.
that's pulled pork for you, Isaac. Essentially, they're YOLO trades. This industry, all the terminology seems like it changes every 3 months. So yeah, we gotta.
Dolby, are you long? Tell me you caught this to the long side here.
Hell yeah, Dolby.
Oh no! I was in pretty early on this, so I ended up getting out at like plus like $200 or something, and so now I'm back above. I'm positive for the day now, plus $31.50, also known as about 2 Chipotles in my world.
Nice work, everybody. Very
Rips,
nice.
what do we call that? Rips, what do we call that?
I mean, you know what we call it.
That's what we call a stacked lunch.
That's right.
Secure the bag, baby. Love it. We got 5 minutes left in the session here. You guys are awesome. Rips, thanks for hanging out. Isaac, thanks for joining us, man. This has been fun. Yeah, we're going to probably see a move here. Is this going to be discount prices to get long? Because the institutions love getting long. Anytime there's a pullback, I don't think Powell really changed the game that much, so to speak, but you never know. Isaac, hit us with some closing words. We've got 4 minutes left. Again, thanks for joining us, dude.
I always enjoy being on here with you guys. I'm here and I'm starting to see a bit of a reputation with Dolby. I mean, everybody,
yeah.
I saw hashtag DGen Dolby. I guess he's joining the Wall Street Bets. Wall Street Bets crowd. Pulled pork. I learned something new today. Everybody's begging Dolby to go 15 lots. And Dolby at the same time is trying to get used to NQ, which I don't think is fair from chat, but you gotta appease the people sometimes.
Yeah.
Now, I appreciate you guys having me on. Rip, I mean, you're awesome, dude. I literally learned so much from you just in this last like 30 minutes when we were actually talking a little bit. That's super interesting, man. Everything you said. I'm actually going to take a look into that because I used to literally I never trade news, and I'm like, I don't know how people trade that, but then you gave like a detailed explanation, which made complete sense. So super awesome, bro.
It would be great to share the stage with you again here, and maybe we could trade some news events together. It'd be a lot of fun to do that, Isaac. Would love to share the stage with you.
For sure, man. Sounds good.
Definitely arrange that.
Yeah, look at the bromance happening on Power Hour, man. This is awesome. Yes, Rips, hit us. We got 3 minutes left. Hit us with some words of wisdom. What are we looking forward to Thursday and Friday? We will see you again for Power Hour tomorrow. Everyone's favorite trio, Dolby, Rips, and myself. It's always a good time. I guess it kind of was. We got Isaac, dude. Yeah, now we got to force him. Let's go play golf sometimes.
Yeah. Oh,
yeah, let's go play some golf. We got 3 minutes left. Rips, hit us with some words of wisdom.
Yeah, just take it easy out there. Tomorrow's an all-new day. We're going to be playing the afterglow of the FOMC, so stay tuned for that. It's going to be a lot of fun. Can't wait to join you folks for Power Hour. And here, we're going to be doing the pulled pork special with your favorite Andre over here, of course, Dolby, and myself, Ribs. So it's going to be a lot of fun. We have Thursday after the bell. We have Apple, Amazon, Meta, and U.S. Steel all reporting. So I think tomorrow, out of all of the days this week, if you're ready to bring some firepower to the table, tomorrow's going to be your day. Afterglow of FOMC, going to be a lot of fun. So hang tight, and hopefully we'll have some fun tomorrow for Power Hour.
Dolby time, dude. Like I said, last time I saw you on TV was yesterday's Power Hour. Or I'm sorry, Power Players, which was incredible. Hit us with some words of wisdom as we close this amazing day out.
I mean, absolutely love Power Hour. It's been an incredible time to have so many just diverse backgrounds in trading come on and trade with us. All sorts of different strategies. And Chad, I don't know if you know this, but both Rips and Isaac have put on winning trades live on Power Hour. So we're really in some high power trading action going on here at Power. We do bring on the best guests that we can, but we always try to have a good time, manage our risk, some jokes here and there. Got to throw them in there, but do it for chat. We do it for trading because it's what we love to do at Topstep. We love to educate and have a good time. So as always, it's always been good. But I'm kicking it back to Andre now. Tell us what's going on tomorrow. What do we got as far as the schedule goes?
Schedule, just touched on it real quick. We got the full schedule. Fast markets. MP with his glorious return today. He will be back again tomorrow. Myself, MP, Hoag, Anne Marie, Shoulder Tap, the usual suspects, Hoag, Mick. Power players. Ooh, I guess I'm a power player tomorrow. Andre, Robert, Coach Jay, Jack Vanessa, Top Quiz, Group Coaching, Hoag, JD, Back to the Futures, Andre, Hoag, Rips, what up? And then Power Hour, Andre, Dolby, Rips, what up? And yeah, that's Thursday. Closing bell coming up. Eddie, where are you at? Talk to me, man. Thank you, everybody, especially the bell-to-bellers.
Yep. Thank you, Andre. We are coming up to our closing bell. Just a reminder here, tomorrow we do have some meat on the bone. We've got the 7:30 numbers, continuing jobs claims. We also do have initial, and there is the closing bell. Scrolling down, we got we've got some S&P Global U.S. manufacturing coming out at 9 o'clock, manufacturing PMI, manufacturing prices, and that's probably going to be it as far as the juicy meat. But otherwise, thank you very much for tuning into Topstep TV. I'm Eddie Horn, and be back here tomorrow, as Andre said, 8:30 for opening call. Gentlemen, thank you very much for a wonderful session. You all have a great evening, and take care. We'll see you tomorrow.
Bye.